lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
What about the long term?
Look, I mean, long horizontally as a technology, it's tough to predict all effects of it long term. Just the fact that today, 60% of the jobs today didn't exist in 1940, right? At least by MIT study by an economist called David Autor, right? So it is so tough to sit at any given time. I was just looking at YouTube in India. There are 100 million channels in India alone. There are 15,000 channels with 1 million subscribers. Just imagine describing this world to someone in India 15 years ago.
Right.
It would make no sense. So, I don't want to, I think it's a bit pointless to think that far ahead. But I think we underestimate how expansionary this moment is.
So this isn't too far ahead, so I hope you'll humor me, but Anthropic CEO says AI could eliminate 50% of white-collar jobs in the next 5 years, unemployment rising to 10 to 20%. Do you agree?
Look, I think we should take those concerns super seriously, right? With this technology, to my earlier point about new jobs getting created, you're going to create new opportunities. I look at something like VO3 with video. It's clear to me you're going to allow pretty much everyone in the world to be a sophisticated creator. I can't sit and linearly, imagine what the impact of that will be, right? So you're creating all these new opportunities. You have tremendous positive externalities. We will tackle tough, vexing problems, make progress on areas like cancer, right? All that. Educate a lot more people. As part of that, there could be job displacement. I mean, those are serious concerns. So as a society, you have to think about how do you reskill people? What are new social safety nets that you would need? Those are super important conversations for society to have. But I think being too specific and saying that many jobs will be, I just don't see we have made predictions like that for the last 20 years about technology and automation. It hasn't quite played out that way.
Yep.
But I respect that, I think it's important to voice those concerns and debate them. And I think that those are important conversations to have.
In 2 trials now, judges have said that Google is a monopoly in search and partly a monopoly in ads. How do you address the concern that your AI is built on an existing domination of search and ads, and that this is just reinforcing original monopolies?
First of all, we disagree with the rulings, and we are in the process of appealing these things. Look, if anything, this moment has shown, I don't think there's anyone here who is using anything they don't want to use. You look at the success of ChatGPT or any other product, and people literally have more choice than ever before. The reason people use Google is because they want to use it, right? And so I think we continue to innovate. I think choice is good for users, competition is good for the world. So that's how I see it.
You said the remedies proposed are too extreme. Would you ever voluntarily break yourself up, control your own destiny?
Look, they seem, compared to what the initial scope of the ruling was, some of the proposed solutions are far overreaching. We'll see how it plays out. I look at the amount of, we spent over $50 billion in R&D last year. Right? We are one of the top R&D investors in the world. We take such a long, we didn't build things like Chrome, and we've invested a couple of decades into these. Waymo, we've been building it over a decade. We've been doing that with quantum computing for over a decade. This amount of R&D, this amount of innovation, I think makes sense to do, and we take a long-term view. So that's how I think about it.
I've heard you say a few times that you think of AI as an expansionary moment, but so far it does seem to be favoring tech giants and well-funded startups with access to GPUs and data centers and enormous amounts of capital. Like, isn't this really concentrating power in fewer hands? And is AI just another winner-take-all game?
Look, I think there are, well, I'm confident there is a company that's going to be created with AI, just like when the internet happened. Many years after the internet happened, Google didn't exist. So, there's no doubt to me that 3 years from now, there'll be a company which will be dominant in this AI age, which we don't even know the name of today.
Yeah.
That's the only way things work in the future, right? So,
you have all this information about us, and I mean, you have our deepest, darkest secrets. It's already hard to
not me, you
not me personally. Well, yeah, actually you do. Not you personally, but your company does. It's already hard to trust big tech, and now you're going to be using more of this information to integrate AI into more personalized experiences. Why should we trust you now more than ever before?
Well, I mean, we earned that trust by, we've been storing people's emails now for many, many years. But we've handled that content responsibly, right?
I hope.
We protect it from bad actors. We fight against unwarranted requests. So I think more than any other company, I think we've taken, this is a responsibility. People trust us in those moments. And we are only evolving the products in the way people are telling us, with their feedback. Look, the biggest thing people ask with Gemini and Gmail is, why can't it write more like me? Right? It's an ask which we are responding to.
Google's rolling out Gemini to kids. I mean, I've got enough on my plate parenting with more screen time and social media. Are our kids' best friends going to be chatbots?
Look, there's always going to be a sense of discomfort with new technology. I don't know, like when online dating first came, people would ask questions like, are you really going to meet someone online? Right? So people adapt to these things. Will people comfortably, naturally interact with AI in their lives in the future? Yes. We are seeing it empirically in terms of how people are using them. Like I see people coming to Gemini asking questions like, at an aggregate, we see questions like how should I prepare for this interview? They're talking as if it's a companion. So we do see evidence of that.
But what about kids? Like Gemini for kids?
With kids, just like today when we design YouTube for kids, we design it with a different set of guardrails. And so for kids, I think you would scope it down to those appropriate experiences, obviously.
You just unveiled Veo 3, which you were talking. I mean, it is mind-blowing seeing these super, super lifelike videos, but it is also really scary. Is this the end of truth as we know it?
No, I think this is part of the role when you ask. I think this is part of the value proposition. This is why people will come to places like Google, because they're trying to ascertain what's reality, right, and versus not. And I do think we are going to evolve new norms around, for example, with Veo, we are watermarking videos. They are built with SynthID, so people can detect that they were generated with Veo. You can upload any video to Google and ask about this, any image to Google, ask about this image, and it will tell you if it was generated by Veo 3. We built a SynthID detector for researchers and journalists. So, all these things are going to evolve in parallel. Down the line, we will need regulations, maybe, to say something which is a true deep fake. Just like your financial fraud, you would need new norms around things like that. So we have to evolve as new technology comes along.
I just wonder, are we going to have a shared sense of reality again? It's just, this is made with AI. It's insane.
I think so. I think humans, as humanity, we would value that shared sense of reality. And so you would value human experiences even more in the future, right? That's how I think about it.
YouTube is arguably the most influential media platform in the world now. I mean, it is a political force. It's a cultural force. Our kids are learning there. All kids think they want to be creators. 75% of teenagers, I believe, say they're watching it every single day. I'm a mom, you're a dad. Like, I know you're in charge of the thing, but does it ever terrify you to have that much power?
Look, I mean, I think that sense of power is an illusion. I think like when you're working in the tech industry, you know, you've simultaneously started with the conversation with like, are you about to go extinct? And then you're ending the conversation with, aren't you the most powerful thing in like? So
Fair enough.
So you got to choose in this continuum.
Only one of that can be the truth. Yeah.
Fair enough. I'm curious about your approach to the Trump administration. You were front and center at the inauguration. Google has rolled back some of its DEI policies. Did you compromise on something that you believe in?
Look, first of all, you know, we are one of the leading American companies, global companies. In this particular moment, with the point of inflection around AI, I do think the next few years are critical from many aspects. So we are committed to engaging. We did that with the first Trump administration. We are committed to doing that. Look, around the world, you know, we comply with laws and regulations in all the countries we operate in. Doesn't mean we agree with every aspect of everything, right? But as a company, we do have our set of values, and so we are committed to them as well. So I think, for example, as a company, I think we are committed to making sure we develop AI in a way that protects the planet. Like, that's an important value for us, and you've seen us prioritize efforts around renewable energy. So we'll continue doing those things, but I think it's important that as a company we engage. You know, there are many people in the administration, particularly around critical energy needs, critical infrastructure. These are all important areas we want to work together on.
When you were on the circuit last year, we spoke about the criticisms, you know, that Google and you personally have been too late to the AI game, too late to get AI to market, and I wonder, how has your own leadership style evolved over the last couple of years specifically? Like, have you changed at all to meet this moment of radical disruption?
Look, I feel like this is the main thing I did as a CEO setting up the company is to really be at the forefront of AI. When I look at the depth and breadth of what we are doing as a company, across everything we are doing on multiple fronts, I think we are incredibly well positioned. But definitely, you know, through this moment, you know, it's a moment in which we realize it's a moment to accelerate at scale what we are doing, and that involves, you know, stepping back and thinking about how you can make the company work faster, setting up Google DeepMind, bringing our best teams into one team, scaling up our AI infrastructure. You know, our capex is $75 billion. That was $20 billion a few years ago. So we are dramatically scaling up our infrastructure. So you're undertaking these big bets. Waymo, people are talking about it now, but 3 years ago, people were very pessimistic on it. I increased our investment in Waymo at that time. So look, you know, so you are making decisions not based on what people are currently saying at any given moment, but with the long-term view in mind.
Are you still getting involved in nitty-gritty product decisions, or is that leaving that to Sergey?
You know, look, I mean, I'm fortunate to have Sergey. He's deeply working on the Gemini models, but I'm very involved in various aspects of our product decisions. I think you have to do that in the tech space.
You've been CEO for 10 years now. However many years out it is, what kind of person do you think Google's future CEO should be?
Look, I think it's important to understand, like, the products we build, you know, tremendously impact society. And, you know, the journey of technology is doing the hard work to make sure you're harnessing it in a way that it benefits people. Mm-hmm. And that takes a lot of work, and, you know, and I think that'll be an important quality to have.
You're driving this massive technological change that's also bound to create, like, major societal disruption. How do you personally wrestle with that? Like, is there some philosopher or religion or deeper code that you turn to help you answer some of these questions?
Okay. First of all, there are many of us doing this. I think ultimately it comes down to you don't need much more than having empathy for for your fellow people on this journey. And I think I am doing what I'm doing, and so are many others in the industry, because you get a chance to positively impact people with the work you do, and that's the true North Star at the end of the day.
What should kids be studying these days? Like, should they still be learning how to code? Should we still be getting computer science degrees? Like, I've got 4 of them, so I really need some advice.
They're probably going to be talking to AI asking this question, so my answer doesn't matter, maybe. Look, I think one of the things that's great about this moment is I think AI over time will allow us all to pursue our passions more, right? And I think that's the truly liberating aspect of a lot of this. You're giving pretty much everyone a powerful tool to express themselves in the way they want to. And so I wouldn't change anything of what you're studying. I think I would still encourage people to follow their passions and find something that's of interest to them. I think pretty much all disciplines which are valuable today, there'll be a version of that valuable in the future.
What are the limits of AI? Like, is it possible we don't reach AGI?
It's entirely possible. I mean, like, we could be dealing with, look, everything we can see. I feel very positive. There's a lot of forward progress ahead with the paths we are on. Not only the set of ideas we are working on today, some of the newer ideas we are experimenting with. So I'm very optimistic on seeing a lot of progress. But you've always had these technology curves where you may hit a temporary plateau. So are we currently on an absolute path to AGI? I don't think anyone can say for sure. The pace of progress is staggering. And looking ahead, I sense you will have that pace of progress. But there could be limitations in the technology. The technology currently feels like you're seeing dramatic progress, but then there are areas where this thing can't do this obvious thing, right? Like Waymo is doing very, very well, but remember, you can teach a kid to drive in about 20 hours, right? And so both the technology is amazing, but we are quite far from a generalized technology as well.
We talked a little bit about your vibe coding backstage. Would you like to share how often are you vibe coding and what are you working on?
I wish I could do more, but I've just been messing around, be it either with Cursor or I vibe coded with Replit, trying to build a custom web page with all the sources of information I wanted in one place, so I could type a location and get it all. Partially complete, so but it's exciting to see how casually you can do it now, right? And compared to the early days of coding, things have come a long way. It feels so delightful to be a coder in this moment in time.
Even after that, you still need all those software engineers, are you sure?
Look, I think so, yes.
Last question. We've got a new episode of The Circuit out this week, actually, about Microsoft's 50th anniversary. Google's 27 years old. What is Google at 50?
What's Google at 50? Look, I hope we are nimble and innovating, and in the technology industry, you have to earn your success every year. And so for me, it's more about building a culture that's really innovative at its core, takes a long-term view, and does deep technology work and translates that into products that impact billions of people.
All right.
So,
is a human going to be running Google or an AI?
Well, I do think whoever is running it will have an extraordinary AI companion to help. Yeah.
All right. Sundar Pichai, everyone. Thank you.
Thank you.
And good morning and welcome to the China Show. We're just hearing from the Alphabet CEO Sundar Pichai at the Bloomberg Tech Summit, speaking to our very own Emily Chang there on the ground. Lots of talk about AI, regulations, and the like here. Really, we talked about who could be leading Alphabet one day. Made me even think about your humanoid robots package too from yesterday as well in some ways.
Exactly. I mean, at least he was saying at the end there, it doesn't matter who is leading it in the future. They're going to definitely be having an AI companion with them.
Assistance there.
Yeah. But really very far-ranging conversation, because I think it went all the way from the risk that the Google's facing extinction because you've got AI that cannibalizes its search business, all the way down to what's going to constitute a deep fake, these questions around the lawsuit that's ongoing, and concerns as well that maybe Sundar Pichai has just too much control over YouTube. I think Emily Chang was referencing her kids, but kids out there that are really continually turning to YouTube, and how does he feel as a father? So yeah, really covered a lot of ground.
Yeah, and certainly that's the one thing. And in terms of the regulation side, he says, the antitrust resolutions are far overreaching what's been proposed so far. So that's their take on how these regulations are going to go. But in the meantime, let's bring it back to markets here, because we're still focusing on those comments that we got from Trump late in the night, I guess you could say, in D.C.
Late night, early morning, however you want to cut it. I think it was around 2 a.m.
for us. Yeah.
Exactly. So we started to really pass over those yesterday. But I think if you really take anything away from it, it's that impasse between the US and China is deepening, and they just don't know really how to come to the table together to try and work out an accord. And so you've certainly seen him sort of firing off all sorts of directives. Even this morning, we were just talking there about how he's instituted a travel ban, for instance, on a range of different countries, and sort of harking back to Trump 1.0. Today in the market session, though, it's also really referencing what we saw on Wall Street overnight, and this is more of a Fed story, and these expectations we're going to see further easing.
Well, we saw that data out of the U.S., right, whether it was the ADP report, also when it comes to that ISM number, which was a big disappointment there, where you're actually seeing services slip into contraction the first time in a year or so. So that certainly led to, Treasuries caught a bid, you saw the dollar softening as well, and now more bets that the Fed might have to cut. And now I think we're a little bit more price cuts into September, but 2 definitely by the end of this year.
Yeah, and I think just last thing to note on this board is if you track sort of one market move or one aspect of the market today in Asia, it's also going to be that laser focus on the Japanese debt auction that we've got coming up later today, because we have seen weak demand for it, concerns around fiscal deficit, the health of that. But let's also take a look at the Golden Dragon Index, how that fared overnight, because again, it's really that question of the relationship between US and China and when exactly we're going to see them coming to negotiate together. But Golden Dragon Index had a pretty solid session, really 2% up overnight, but also take a look at what's happening in pre-market in Hong Kong, because we're looking to sort of catch that tune a little bit, pointing to some modest gains here.
Yeah, I'm looking at the pre-market right now. Hang Seng Tech is actually opening about 1% higher here today. Hang Seng also is higher. So looks like things are looking pretty good so far here in the Hong Kong session. Certainly that dollar weakness and what we're hearing from the Fed, that maybe they're going to have to cut rates sooner than later, that certainly is lifting boats here this morning as well. In terms of the agenda, we talked about that stock rally in China, offshore renminbi also as well, as we hit that 717 level here this morning. We are expecting some Caixin PMI services numbers as well. EVs in terms of the focus there, we're watching very closely. We got that Tesla China shipments number fell for 8 straight months, so certainly that's one thing to watch here as well. And also there's this XPeng Huawei partnership to look out for as well.
Yeah, certainly a lot on the agenda, but let's also just take a look at this tweet that we got from President Trump, and he's saying, or what he said overnight essentially, but President Xi, he's saying someone he's always liked, but he's also very tough and very hard to make a deal with. So let's get more on these details now with Avril Hong joining us this morning. So Avril, I mean, what does this tell us about the chance of de-escalation from here?
Yeah, I think it tells us that these odds of de-escalation are dwindling, that they can't get a phone call. And of course, this is after U.S. officials this week pretty much talked up the chance that we see one between the Chinese and the U.S. presidents. And, you were just discussing earlier about how this was a really late night post by the U.S. president, adding to the sense that, maybe this is keeping him up at night. And this really public voicing of the frustration with the Chinese side, it feels like his pleas are just going unanswered. And you think about as well, when it comes to the Chinese side, I think they're letting Trump know that the call would come at a price. It's not entirely clear at this point what China wants to see before a call can be secured, but we know how they've been asking for access to high-end chips and along with more Chinese investment opportunities into the U.S.
She seems reluctant to jump on this call, it seems, Avril. But it looks like Beijing is extending goodwill gestures to other economies, though. What's happening there?
Yeah, I mean, maybe the cold shoulder is still between the US and China, but it's been extending this olive branch, right, to Japan. We've seen in the past week how they're pretty much lifting this blanket ban on seafood imports from Japan, which went in place about 2 years ago. And then closer ties expected between the South Korea and the US or the Chinese side because of this new president coming into power in South Korea. And even with the EU leaders, we saw the Chinese Commerce Minister Wang Wentao on the sidelines of a WTO meeting speaking to some of these top EU trade officials. So really adding to the sense of warming ties with everyone else but the US.
All right, Avril, thank you. Avril Hong there, joining us on the latest on all things trade. Your pre-market is up in Hong Kong here right now. We talked about that. It's a great taking stock, right, about the pile of household savings out there, and that could be the next catalyst here when it comes to this Hong Kong stock rally. We got the open coming up next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back. You're watching the China Show. We're counting down the open of markets, and it seems like things are risk on here this morning. Take a look at how futures are pointing to, and Hang Seng is already up about 0.75% in the pre-market. It is what we saw in the U.S., right? When we have softer data that's amplifying those bets for more rate cuts, that certainly is lifting a lot of risk assets here today. The dollar also is softening. That's how you're seeing a stronger renminbi here at 717 levels as well. But yes, the stocks, the global stocks reached a record overnight, so stocks are still doing pretty well. That JGB sale, though, I think in the 30-year, that's going to be quite telling for the bond market today.
Yeah, it's going to really give investors that sense of the concerns that you see around the health of the fiscal deficit, and that's certainly something we've seen also directed to the Treasury market as well. But taking a look here at what you've got for the market session today, opening mainland here, you can see coming online just a little bit in the green, but as you said, it was a pretty solid session on the Golden Dragon Index.
Yeah, we saw some pretty outsized moves there in terms of the tech space, so certainly that is helping at least how Hong Kong tech is
is looking here today. So you're not quite seeing a whole lot of, I guess, conviction, but the CSI 300 is up about 0.1%, pretty flat in Shanghai and Shenzhen this morning. We do have some Taixi numbers to deal with in the next few minutes or so, but then again, not much really direction. But yeah, iron ore is recovering still. Steel's doing okay. Copper is flat this morning. And yeah, CATL, we're seeing a slight pressure on the stock. But yeah, crude, that's down some 1%. Keep in mind, we did see oil drop as well with Brent and WTI on news that the Saudis perhaps want to continue extending those supply output hikes, maybe possibly till September. So that did lead to oil prices heading lower. Take a look when it comes to the Hong Kong Open as well. We talked about how, there's a lot of talk about the EV sector here today. We have also some changes in Pop Mart and the like to tell you about in just a bit. But yes, we are seeing Hang Seng Property do quite well. We'll see how New World is doing because that certainly has led to a lot of volatility the last few sessions as well. Tencent, Baidu, Meituan, all catching a big bid here this morning. We're seeing Meituan shares up 1.5% as well. So HS Tech seems to be leading this rally. You take a look at how Tesla shipments, though, in China did extend that slump, right? So this is really bucking what we're seeing, which is actually pretty good numbers from some of the local car manufacturers as well. But in terms of the Tesla suppliers, they're not doing too bad this morning. We're also watching airlines, right, on the back of what we heard from China, weighing these orders of hundreds of Airbus jets in this major deal and really focusing back on tariff and trade.
Yeah, and really how much that's sort of catching investors' attention. And we can get more on that now, bringing Christina Woon. She's portfolio manager at Eastspring Investments, joining us this morning from Singapore. So, Christina, even though you've got President Trump, who's on Twitter again, or X, in the middle of the night, talking about how he can't reach any sort of agreement with Xi and how he's such a tough negotiator, investors sort of seem to be shrugging it off a little bit, at least. So, do you think that the concerns around this rift and the risk that we don't see any sort of resolution anytime soon, is that sort of fading a little bit into the background?
Well, yeah, I mean, it's a good question. I think from our perspective, our stance is that we do think that even with some good news that comes through or people expecting perhaps a phone call at the end of the week, we do think that uncertainty will prevail or uncertainty will remain high at the moment. But having said that as well, what we've observed is perhaps the swings in the market on the back of the slew of news flow has become perhaps a bit less violent since Liberation Day. And I would attribute this to perhaps two things. The first being a bit of Trump fatigue, if you will, and the second being the fact that, we're just through the earnings season, or a good part of the earnings season, and that's given investors a bit of fundamentals to hang their hats on, and that's always helpful in uncertain times.
Yeah, Trump fatigue, I like that. What do the fundamentals tell you then in terms of this earnings season?
Sure. I suppose it's also a function of the expectations that went into this. People were concerned that with all the news flow around tariffs, you might see downgrades to guidance, and fair enough, we did see a bit of that. But on a whole, it's been a bit better than expected. When we look at the outlook for the rest of the year, most companies are talking about different levers that they can pull to manage margins or pressures from tariffs or cost pass-throughs. That's always encouraging when you hear it from an investor's perspective, because it shows that if you pick the right companies, there are those that can manage the coming pressure if tariffs were to come through at whatever level.
Which sectors or types of companies rather are standing out to you?
Sure. It's actually quite interesting because, the tech sector has been front of mind for everyone. They're in the headlines everywhere. But despite all of these headlines, what we've actually seen in the commentary out of the tech companies so far is actually better than expected. Some of the bigger tech companies in Taiwan, for example, have maintained their growth guidances. They have mentioned that client behavior hasn't actually changed so far. So that's been encouraging from that standpoint. But I think looking forward, we do have to also bear in mind that as costs are being passed through, end prices might go up, and if smartphones get more expensive, for example, consumers consume less, that could have knock-on effects on the entire supply chain. So it's worth bearing in mind as well, the different variables you see.
And Christina, I was reading your notes and you mentioned that Asia is the place to be in the face of this U.S. or doubts of U.S. exceptionalism, and yet you also mentioned that there is a defensive play here, that you're still focusing on income. Can you square those two sort of dynamics?
Sure. So the reason why Asia has been actually quite an exciting time for us at the moment is because of how diverse it is. You can play within the stable names that are perhaps more resilient in these times, and you can also get access to growth names. You spoke about the EV sector in China earlier. That's had quite a strong run this year, and even though there have been concerns about price competition, the recent numbers have actually held up quite well. And then on the other hand, the income stocks that have been quite resilient.
That's actually been a part of our playbook that has turned out quite well in the recent months, especially with the volatility. These are names where, with investors flying towards a bit more visibility, this is something that has held up well. But again, having said that, when certain stocks have outperformed the market, or if a certain sector or theme has been in favor, you always have to bear in mind that you have to marry fundamentals against that as well, because if you see misses in expectations, even if a stock is in favor, you could still see big corrections, as we've seen over the recent earnings season as well. So it's important to be quite selective at this time.
What are your views on Korea as well? Because we just had the election, of course, this week. We've seen equities there rising, I think, for a third straight session today. But it seems like investors are a little bit optimistic, really, after the new president's taken office. So do you share that level of optimism?
Yeah, I think you're exactly right. And, it's exciting times to be having elections. And I suspect investors will be, or investors are excited because it's been a bit more of a growth slant. Value up as a theme is coming back in focus. Can you unlock some value in some of the heavily discounted conglomerates there? There's also been talk of support for the AI supply chain, as well as domestic consumption. So that's what's been lifting sentiment since yesterday. But again, we do have to bear in mind that Korea is still an export-driven market, and tariffs haven't really gone away. So I think that it would be important not to get too ahead of ourselves and to continue to see how things play out.
All right, Christina, we're going to leave it there, but thank you, Christina Woon there, Eastspring Investments Portfolio Manager, joining us live from Singapore. We're going to bring it back to those live pictures out of San Francisco at the Bloomberg Tech Summit, and the Meta CTO, Andrew Bosworth, is speaking there. Let's take a listen.
Most companies fail because they didn't execute their own plan correctly. And so what I try to do with the team is really focus us not so much on the competitive landscape as on are we executing to our standards? And so we have a set of ambitious plans for the year. Right now we're on track, but admittedly a lot of these plans are kind of back-weighted, especially some of these research programs are yielding now. So what we'll know at the end of the year is whether we executed on our plan or not. What we'll know in 5 years' time is whether that was enough.
Right, we'll come back to some of your specific plans in just a second. I want to talk a little bit about the announcement that came down just last week with Anduril. You're going to jointly develop extended reality for the military. Last year, you said Meta would let U.S. government and contractors working on NatSec use your AI models for military purposes. Obviously, there's a shift at hand. What's driving? Is it political? Is it economic?
Well, no. So for quite a few of us, it's personal. I mean, so in my case, I have family members in the armed services. I want them to have the best equipment available, and I've always been a very patriotic American and believe in the importance of our role, not just inside the nation, but globally. So there's a much stronger patriotic underpinning than I think people give Silicon Valley credit for. But taking a step deeper, this is actually a return to grace for the Valley, potentially, not just from Meta, but from Google and other companies. The Valley was founded on a three-way investment between the military, academics, and private industry. That was the founding of it. There would be no technology if we weren't all tasked with the problem of computing naval ballistic trajectories during the first two world wars. Like, that is the heart and soul of the investment that led to what we are today. And that really got severed for a while there. And some of that's because of the procurement laws that changed in the 60s and 70s. Some of that's the Last Supper that happened in 1985. We ended up just kind of going our separate ways. And I think we're worse off for it. I think we're spending more money for worse technology in the public sector. And I think the private sector is not attacking some of the most valuable challenges for us to solve evolve. And I think it's a mismatch. So I'm pretty excited about the opportunity to bring these two things together. And it makes a ton of sense. If you think about the amount of private investment that Meta has put into developing novel technologies, things like silicon carbide for our Orion AR glasses. These have obviously positive applications for the military, and not just the military, but also for more broadly inside of government. There's a bunch of research that would benefit from this. And we would benefit from them being partners of ours. So you really can work together on these pieces. I'm pretty excited about that. I think there was a period for, let's say, the last decade where there was a silent majority of people who wanted to pursue this technology for public benefit and really felt like they couldn't do that for whatever reason. And I think the tide has turned enough where that majority is actually much more comfortable being vocal about their belief that this is good for not just us as a business, but for us as contributing to the whole of mankind.
How much bigger do you anticipate military will become as a segment for you?
It's way too early to say that. So far, it's like a 0. So let's start with 1 and go from there.
All right, we're going to leave that there, but it has been the Meta CTO, Andrew Bosworth, speaking at the Bloomberg Technology Summit with our executive editor for technology, Tom Giles. But if you do want to continue watching that conversation, you can also go to LiveGo. You'll also find all of the big diary entries that are coming up today and later this week, as well as some of the events that you may have missed earlier. But as I said, the Meta CTO there, Andrew Bosworth, speaking at our Bloomberg Technology Summit that's ongoing over in San Francisco. But let's bring it back closer to home and talk about the Chinese social media giant Xiaohongshu, because it's seen its valuation surge to $26 billion in recent market transactions. The platform that is known in English as RedNote has gained traction among investors. That's as Beijing unwinds a crackdown on its tech sector. Lulu Chen, who leads our Asia investing coverage, joins us for more. So Lulu, I think back in around March, the valuation was $20 billion. So going from 20 to 26 in a couple of months, it seems like a pretty big deal.
Yeah, it's a pretty fast ascent for Xiaohongshu, and with the valuation hitting 26 billion, you can see how the company is making headway against TikTok and also gaining more traction domestically. The valuation came to light because of a fund transaction holding the shares. So the fund behind it, GSR Ventures, they're backed by some of the biggest investors in the world, including endowments from UPenn and also Carnegie Mellon, Stepstone, and also Schroders. Now, this fund has also seen its valuation getting bolstered as well. The company itself, Xiaohongshu, they're now becoming a go-to platform for everything on travel advice and also lifestyle tips.
I go to it. Every time I go anywhere, I look at where's the best restaurants, where can I take my kid to a playroom.
Yeah, but you know what? Because you see the queues of people that you know have been on RedNote.
Yes, but I love it. Yes, so certainly that's a really good perk. What does it tell us about the sentiment around Chinese tech lately? It seems like things are pretty positive.
It seems like it's getting a second wind, and there's a rekindled interest, especially from U.S. investors, including we reported recently that Thrive Capital, Joshua Kushner's Thrive Capital, and also Capital Group, they visited China to study the AI scene. Now Thrive has said that it does not invest in China and doesn't plan to, but we're also seeing other funds, a lot of endowments also visiting China and studying the AI scene. That also is pretty much in line around the same time when Benchmark invested in Manus. So I think given how China recently vowed to support the tech sector, Xi Jinping saying that they would unwind the crackdowns and DeepSeek, those elements coming together is like giving us a boost to the sentiment.
All right. Lulu, thank you, Lulu Chen there. Joining us from Bloomberg on this whole Xiaohongshu story, and certainly a lot of talk about that valuation and what this means for maybe one day an IPO.
Yeah, that's right. It's certainly going to be a big one if it does come, and hopefully, of course, to Hong Kong. But that was Lulu Chen, and we'll have plenty more ahead. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise. The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
American exceptionalism continues.
This is not what we're going to experience in the upcoming months.
Is it going to be Biden data or Trump data?
The May Jobs Report, Friday on Bloomberg.
Right, just some data crossing the terminal in the last couple of minutes. We've had the private survey for PMI figures from China just dropping. So the services one has actually come in a little bit better than expected at 51.1. The survey had been for a flat 51, and a better number actually from the month prior, 50.7. But when you take a look in aggregate, because the composite reading is still in contraction under that 50 level at 49.6, and it really just does point to that weaker manufacturing number we got earlier this week as well.
Yeah, that was sort of the one that was a sore point, I guess, and service is still at least staying, relatively speaking, a little bit more resilient in the face of all these sort of headwinds like trade tariffs and the like. So certainly that's one to watch here. We're still watching that interview with the Meta CTO, Andrew Bosworth. He's speaking at the Bloomberg Tech Summit with our very own Tom Giles. Let's listen in a bit more.
Stories were a substantially similar product. You know, they had audio, it wasn't quite as good. They had a camera, it was a little lower resolution, and it just didn't sell that well, and none of us even liked it that much yet. It was kind of cool, but was it kind of gimmicky? And we took another rev at it, and we figured, look, we're going to do this one more rev. It probably won't do much, and then we'll put the category to bed, and we'll focus on the display glasses, the ones that have displays in them. And the team just did an unbelievable job. And you look at it, and it looks almost the same. It's just a little thinner, and it's got a little bit better sound, and it's got a little bit better camera. But everything about it is better, and it's night and day. Now it's a product that you love. So it really is a testament to the team, not to me, not to Mark, but to the team that built this, Lee Chen Miller, among others, who just had put all the polish in all the places, and then the entire package came together. There wasn't one change they made that unlocked the value. And yeah, then as soon as we launched it, it was just an immediate hit. And we had to start scrambling to build more, and now there's we have generations planned going from here forward.
Great, looking forward to that, and looking forward to us breaking news on some of those. What do you think of Apple's Vision Pro, and do you need to move up? Do you need a higher end? Vision of Quest?
Yeah, I mean, I don't necessarily start with like a market and work back. I will start with like, who are we not serving? What consumers are currently not well served? Apple Vision Pro, you've all probably tried it. Stunningly beautiful displays, really a sight to behold. They did some incredible work doing the eye tracking through the lens, which is why you need insert optics. You can't bring your own glasses because otherwise it wouldn't work, to get really accurate eye tracking. So, from an engineering standpoint, it's wonderful, and congratulations to that team. From a product standpoint, you can tell it's their first offering in the space. Listen, I just told you about how our Ray-Ban stories didn't do well, so I'm not trying to take anyone out behind the woodshed here. First generation products are hard. It's not until the second or third generation that you really figure out and hone the thing. And they made a lot of mistakes in that in terms of weight and where the weight was. This glass piece way out off the nose, that's a long lever arm, and that lever arm is physics. That's not a good thing when you're putting pressure on the face. So they made some mistakes that as soon as I saw it, I was like, it's a rookie mistake. It's like they'll bounce back from that, but they're gonna regret that one. So I think it was a beautiful device. I think they executed really well on a lot of the pieces of it. I think it failed what the market wanted for reasons that were predictable if you were in the space beforehand, I'm sure they'll bounce back with something spectacular. I don't know that we need to have a more expensive or a higher end device. I think the question is, what room is there? There's a bunch of things that become possible when you have that high-res display. Looking at small text, you want to be a productivity user, you want to have really crisp, clear text at a small pixel pitch. And it's much tougher than conventional displays, because conventional displays, when you turn your head, they stay aligned to the pixel grid. Whereas when you have a VR display and you turn your head, you're now misaligned. So all your true type stuff is worthless. You have to do a completely new font layer. And that people forget how hard that technology was to develop for Microsoft in the late 90s and Adobe before that. Tremendously tough technology problems. And so there's a set of jobs that you want to unlock that you need to have certain resolution displays, and those just cost a certain amount of money. So I think it's always driven from what are the use cases you want to unlock and work backwards from there.
Is that something that you are actively considering at this moment?
Yeah, for sure. I mean, I think, and we have been before. We've played with high resolution.
All right, you're watching a conversation there of that's Andrew Bosworth, the CTO of Meta, speaking with our executive editor for technology, Tom Giles, at our Bloomberg Technology Summit over in San Francisco, ongoing. And we aren't going to leave it here, but if you do want to continue watching this discussion, just go to LiveGo. You can find the big diary entries that are coming up today, later this week, and some of the events as well that you might have missed earlier. So we'll have plenty more ahead.
This is Bloomberg.
Pair financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world.
All right, checking movers here this morning, watching Dongfeng Motor saying that it was informed by its controlling shareholder that DDFM, I should say, not involved in its restructuring here today. So the stock is lower here quite a bit. So they're not part in any restructuring of these relevant assets or business operations at the moment. There you go. We're seeing that plunge of more than 12% right now. We'll take a look at what happens with PopMart as well. We've got to talk about Labubus in this show. Any opportunity for me?
This week, the PopMart is the story that keeps on giving, and it gives again today.
It's the only one that can withstand a trade war, it seems. There you go, $249 for the stock here right now. That stock plus SF Holdings is going to be joining that FTSE China 50 index starting in just a few weeks or so. So maybe more reasons to get your access to that stock as well. In terms of the benchmarks, what we're doing in terms of markets, we talked about how things are looking pretty good, at least in Hong Kong. We're at some session highs up about 1% now, flat on the CSI 300. But it is HS Tech that is catching that massive bid here this morning. We're up 1.5% there as well. And we are seeing a little bit more weakness, I guess, in the currency now, and maybe more dollar strength coming back in the Asia session. Crude is still heading lower here, and iron ore catching a slight bid. So yeah, not a whole lot to tell you really about. It's really maybe about what the whole Fed and what expectations are looking like there now from the central bank. But a big interview coming up. We'll be speaking with the former Australian Prime Minister, Malcolm Turnbull, later on. This is Bloomberg.
You deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry.
On the first term was military spending. We unfortunately had to increase non-military spending to get it through the House and Senate. But what really impacted us was COVID. And I think, as you know firsthand, we had to spend a lot of money in COVID or we would have had a worldwide depression, not recession. I think the problem was, the first $2 trillion was well spent. The next $2 trillion we never should have spent. And then the Biden administration kept on spending. So, we have debt to GDP of close to 125% today. That's a gigantic problem. Secretary Bessent has talked about getting the deficit down from 6% to 3% of GDP, and that's got to be a major focus.
The top names at the Fed are on Bloomberg.
So much of our economy is based on faith that we will deliver on the things that we say that we promised for the future. When you start to see the markets waver a little bit, people are asking the question, do we still have that same level of faith? The sign that rates have started to come back down and the markets are sort of returning back to a normal stasis suggests that they think there is that likelihood moving forward.
Nobody covers the Fed like Bloomberg.
Welcome back to The Circuit. This time, we're taking you to the frontier.
Where is do we have a camera or do we? We don't want to lose you, Emily, in all of this.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg.
In case you missed it on Bloomberg Insight.
This is most likely going to be a series of talks focused on very narrow wins, but certainly touted, at least by the U.S., as a big win.
Trump actually has backed down, so therefore, I believe China has really won this tariff war for the first round.
This postponement gives us a little bit of breathing room, but the simple fact is the world did change. We're not going to go back to where we were before.
Don't miss Bloomberg Insight live weekdays.
Fix. We're here in Miami. It's a huge weekend, F1 weekend. Our guest today is Susie Wolff. She's the managing director of F1 Academy. Their goal, to get a woman onto the main grid of Formula One.
The fact that she started racing at the age of 8, I'm really interested how that's impacted her leadership skills and her vision.
Yeah, I really want to get into how she combines all these different roles of being effectively the commissioner, a role model, a coach, a mentor, and someone who has massive ambition for this fast-growing sport.
This is going to be great.
All right, let's get to it. Susie Wolff, welcome to The Deal. We're so excited to have you.
Thank you for having me. Excited to be here.
Huge time here in Miami. We have so much to talk to you about, but I want to start with your core mission right now, which is getting a woman back onto the Formula One grid. It's been 50 years since it happened. You were one of the people who's probably been the closest in that intervening period. What's it going to take?
Well, it's a huge challenge, first and foremost, because the sport isn't segregated and there's only 20 spots on that Formula One grid. So regardless of gender, it's incredibly tough to make it. But one of our biggest problems is the fact that the sport is still seen as so male-dominated. So we don't have enough young girls competing for the best to rise to the top. So we need to change the perceptions, we need to create role models, and we need to get more young girls entering the sport in the hope that one is good enough to make it to the very pinnacle.
And enter F1 Academy, which is your job.
Well, F1 Academy, we exist, it's a junior level, so it's Formula 4, which is in the pyramid, Formula 4, Formula 3, Formula 2, then Formula 1. And we exist as a segregated championship. It's only for female drivers, and it's basically, we want to be the rocket fuel for progression. We've got some of the best junior teams in racing, and we want to find and nurture young female talent so that they have a better chance of making it to Formula 1 in the future.
So you come from a racing family. You started racing at the age of 8. Apologies, because my voice is terrible. We had a big game last night. But I always think about being an athlete all the time. You started racing at the age of 8. How has that shaped your leadership skills and the mission that Jason just described?
Massively. I think when I look back at the age of 8, I was that very competitive, ambitious little girl. I loved speed. But of course, you only do what you enjoy in the moment. You're not thinking of a career. And I wasn't the stereotypical girl racer. You know, I loved pink. I had my Barbies during sessions. But I just found this huge passion for racing and that competitive spirit. And I was taken to watch a Formula 3 race at the age of 13. And that's really when everything changed in my head. I suddenly realized, oh, I could be a racing driver. I could make it to Formula 1. And that's when it stopped being a hobby and I became quite dedicated. And I think that dedication came with a lot of sacrifice, and sometimes my parents felt maybe I was sacrificing a lot of those teenage years where you're supposed to, you know, party, meet boys. But I never felt that way. I always just loved what I was doing, and for sure the tenacity throughout my racing career has been a huge help now when I've moved into the business side of the sport.
Susie, as a father of 2 teenage daughters, thinking of you as an 8-year-old behind the wheel, I mean, is it ever scary? Because I get scared to go on the turnpike.
I guess watching it's scary, but when you're out there and you know what it's like when you're competing, you're not thinking about any fear or any worries of what could happen. And the sport is dangerous. I was always aware that there was risks involved, but it never stopped me pushing myself to the limit. But I do think now,
as a parent, I have a little son, it's harder watching than it is competing.
I want to go back to your parents for a second, because you know, you come by this, it seems, this competitive spirit and this drive pretty naturally. So what did you take from them that sort of, pun intended, sort of fueled you in your competitive pursuits?
Looking back now as you get older, they shaped so much of me, because you know, my mum met my dad when she went to buy her first motorbike from his shop. She raced, but she still had her own business, and it was a dress shop business. You know, she was very elegant, but in a second could switch into her race gear and be out on track with my dad. And that for sure gave me a very good inspiration of what it could be. You can be both. And also their relationship. My dad had so much respect for my mum. They both had their own businesses. He always said, whatever he can do, mum can do too.
And they were very equal, and they pushed each other and they supported each other. And growing up seeing that, it's definitely what I've managed to achieve in my own marriage, that I have a husband who also pushes me to be my best self and doesn't wrap me in cotton wool at all, but pushes me, and I have that support background. But for sure, so lucky to have the childhood that I had.
And for those who don't know, your husband is Toto Wolff, who's the CEO and team principal of Mercedes. The Mercedes team. Okay. He is all of those things. And so that notion, just, sticking with your childhood for a second, this was very natural business, or you felt at home in it.
Well, my dad always raced two wheels. He did the Isle of Man TT, which is probably the scariest, most dangerous motorbike race in the world. And he always said two wheels was too dangerous for his little girl. So he at least put me on 4 wheels. So
that's where he drew the line. Okay.
That's where he drew the line. And I got a little go-kart for my 8th birthday.
Wow. I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Most hiring algorithms would scream me out.
Some bosses couldn't see me as a leader.
I've run this place for 20 years, but I still need to prove that I'm more than what you see on paper. I've been writing code as long as I've been able to reach a keyboard.
This is what I do. It's second nature for me, coordinating 100 details at once.
The way my mind works, I have a very mechanical brain.
I sold them on my skills.
You gotta be so good they can't ignore you.
My magic is
analytics and empathy. That's how I gain clients. You have to have the confidence in yourself to show up and defy the odds.
I am
more than who I am on paper.
I never got a college degree. And today, I'm the CEO of my own company. People want to tell me I'm one in a million, when actually I'm one of millions. The stars are all around us. It's time for them to shine.
Strangers have answered the call of Survivor 48.
Survivor, all episodes now streaming on Paramount Plus and returning CBS Fall.
So take us, briefly through your racing career, because we want to talk a lot about you as a business person, but, as with Alex, so much of your approach is you were an athlete, you were on the grid, and we see this come through very clearly as you're advising and mentoring these young women who are in the academy. Walk us through your racing career.
Well, I started at 8 and wasn't a clear talent initially, but had a lot of tenacity. So I kept getting better and got to quite a high level in the national championships, then the British championships, qualified for the Europeans, and by the age of 18 was ranked 15th in the world. And I was often the only girl, but never saw myself as the only girl. In my sport, you wear helmets, you don't actually see your competitors. But when I was 18, I was given an award as top female. And I think that was the first indication that I was seen as different, because I remember being embarrassed to get the award because I couldn't remember even seeing any other girls out on track. But that gave me the springboard, that good result, to move into single-seaters. So I started in Formula Renault and had quite some success, was racing against Lewis Hamilton, had some podiums, got a lot of attention because I was the first ever female to make the Young Driver of the Year award, which is a very prestigious award in Europe. And didn't win it, got nominated twice, lost it twice, but got noticed by Mercedes-Benz. And I had tried to make it into Formula 3, that category I'd seen as a young girl. But one of the difficulties in my sport is the financial barrier. You need money to go racing. You need to raise sponsorship. And I mean, I'm giving my age away here, but I had a great sponsor, British Telecom, because they were launching something called broadband. But they were a great support of mine. But when I was just starting in Formula 3, I then broke my ankle. And that was one of the the toughest episodes of my career because everything really slipped away. I lost my seat, I lost my sponsor, but I got that one phone call from Mercedes-Benz, come and test for us. And as much as people say, well, there must have been so much riding on that test, I had nothing to lose. I had nothing. So I gave it all I had, and they offered me then a 1-year contract, and I ended up staying for 7 years and then managed to make my way into Formula One as a test driver and stayed there until I realised that I wasn't going to make it into a race seat. And I think, like as an athlete, your days will be up at some point. And I very much wanted to be in control of that decision and not wait for the phone to stop ringing or a contract to be produced. So I then decided in 2016 to call it a day.
Yeah, they often say that athletes die twice, real death and when you retire. And I found that to be true. But Susie, going back to your racing days, if I look at a baseball player or a young girl that's playing softball, I truly understand what makes that player good or great or not so good. I'm a novice, so excuse the simple question, what makes a good driver?
It's definitely a combination. I think the earlier you start, you build a synopsis of what it is to be fast out on a racetrack. But for sure, if you look at someone like Lewis, who's possibly the greatest of all time, incredible hand-eye coordination, incredible balance, very good peripheral vision, that you understand what's going on, you can read a race out on track. And then the ability, we say when a racing car is dancing, because in the end, you are trying to push the car to the absolute limit. And the limit is where you need to be to put the best lap time together. And it's the drivers that are able to find that very sweet spot of being on the absolute limit of what the car is capable of. And getting 2 or 3 tenths close to the front is pretty manageable. Getting to be the quickest and pole position at the very limit, that's what takes something extra special.
And so talk about that moment of transition. When you make the call to get into the business side, you make it proactively. How do you map that out? What's your playbook for saying, okay, I want to be this, or I want to pursue it in this way? Like, what's your thinking there?
Well, the decision was really easy. The aftermath was, even thinking back to it now, I fell into a black hole. I initially didn't think I wanted to move into the business side of the sport because by that time Toto was very successful, winning world championships with Mercedes and Lewis. I didn't want to work against him for the sake of our marriage, but decided I didn't want to work for him also for the sake of our marriage. So I was searching for the next challenge, and I'd been approached by a gentleman I'd met once before who'd wanted me to drive for him, Gildo Pastor. And when he called regarding Formula E, this new all-electric championship, I thought he was calling me to drive for his team again. He said, no, I want you to run the team. And I thought, run a team? No, I don't see myself doing that. But suddenly some jigsaw pieces fell into place. Dieselgate happened. The electrification of the automotive industry sped up, but then suddenly it's all everybody was talking about. And I obviously heard from Toto that Mercedes were very much looking towards electrification in the future, and Formula E then gained huge momentum, all electric racing cars, which none of us had anticipated in the industry, racing in city centres. And I went to visit Gildo at a race in Brooklyn. I could see the Statue of Liberty, electric racing cars, and I thought, okay, maybe this has something. His team was racing at the back, and he had a medical issue, which meant it had been mismanaged for a couple of years. And he said, listen, bring it back to its former glory. The team was losing a lot of money, so I decided to copy and paste my husband's deal and said, okay, don't pay me a salary, give me equity. Give me 30% of the team, I'll turn it around. And we were very bound. If he wanted to exit, I would go with him. If I wanted to, there was a lot of tag-along and drag-alongs. But he was a great partner, and I was the mother of a young baby. Said, listen, I can't move to Monaco where the team was based. And he said, I'm not going to judge you how you do it. You do it, and you call me if you ever need my backup. And I'll be honest, there were a few moments where I thought, what have I got myself into? Because the team was losing a lot of money, was not performing. But those were tough days, but my goodness, did I learn a lot.
So following up on what Jason said, it was losing money. You're going, did I make the right decision? I think we've all been there at some point.
My question for you is, what were some of the 2 or 3 things you did to start turning the business around from losing money to making money?
First and foremost, I spent a lot of time on LinkedIn trying to poach the best people from other teams. In motorsport, if you can bring someone in who's won a race, they bring so much knowledge and know-how. We then won our first race the following season, and it was a very slow turnaround, but suddenly the energy shifted. We had great people on board who knew what it was to win. They knew what it took to win, and they brought that culture. We definitely became more trustworthy of each other. I set realistic targets, not immediately expecting to be racing at the front. And slowly but surely, we built this energy. We won a race, and suddenly we thought, well, we can do this. And then we got a great new partner on board, a new title partner. Then more commercial partners followed, and within 3 years, we were fighting for the World Championship, and we were profitable.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
AI forces the supply chain to push harder from chips, from semiconductors, all the way down through applications. Every business is looking at AI because they want to drive revenue. Quantum can go a step further.
Underpinning this field is the ability to manufacture in a way that is cost effective. So whether it's materials for aircraft, understanding the human body, it's here and it's now, it's not 5 years away.
I want to fast forward a little bit because I want to get into F1 Academy and your decision to do that. It's a seismic moment, truly, in this rapid growth story that's happening around Formula One. So tell us about getting that call. I assume it's from Stefano Domenicali, the CEO of F1 Academy, who you obviously know well, has been in the business for a long time. What is that conversation like? How does it start?
Well, we had sold a Formula E team, Gilles and myself, and he's a visionary, and he was looking to move into the space industry. He wanted to build an electric rover to go on Mars. And I was really intrigued by the technology, really thought it would be great to get out of motorsport and push myself out of my comfort zone. So I was quite far along on that journey. And
you were literally headed to space.
I was headed to space. And I got a call from Stefano and Greg Maffei. They were at the Mexican Grand Prix.
Greg Maffei, who was then the CEO of Liberty Media.
Yeah. And they said, listen, we're thinking of starting an all-female racing series. I said, fantastic, it would be great, and anything I can help with in the background. And they said, no, you're going to run this for us. And there was a transition period because I definitely didn't see myself doing that. But after a lot of discussions at home, realized it was a once-in-a-lifetime opportunity. The sport that I knew so well, having been a driver, I knew all the challenges on being in a racing seat and how tough it could be. And I knew the business side of it. And very much felt, well, if I didn't take this opportunity and didn't hand the baton to the next generation and try to make it better, I would probably always regret it.
What were your reservations? What was your skepticism?
My skepticism was, did we need an all-female championship to help? You know, the sport isn't segregated. Is it right only to segregate at one level? And then the championship had already been set up to race on separate from F1. And racing on empty racetracks with no spectators was going to always be difficult to make it a commercial asset for Liberty and ultimately Formula One. So I knew there had to be a completely different business model, and there had been a series that had tried and failed before, which had contacted me several times, and I never understood their business model, but I knew it wasn't easy to make something like F1 Academy into a viable commercial model.
So those were the kind of challenges. What turned you?
What turned me was their enthusiasm. I went to New York, I met with some of the Liberty board and realised they were going to put their money where their mouth was. And I had spent so long in motorsport talking about diversity, panel after panel after panel. I kind of felt I'd said all there was to be said, but here was the owners of the pinnacle of the sport willing to put in a lot of investment to create a platform that would help female talent on and off track. And I realised this wasn't just a box-ticking exercise. It wasn't just we better do this because, we've got a huge female fan base now. They really meant it, and they've followed through it. They've given full support every step of the way, and I don't ever regret having made the decision.
So one quick follow-up. You talked about it was losing money at the beginning. Who funded F1 Academy? And have you raised, or will you raise capital?
We haven't raised capital. I don't think there's any plans to. It's been fully funded by Formula One. And now, of course, we managed to get the 10 Formula One teams on board who are stakeholders of the sport alongside Formula One. And now we are very close to creating a platform which is financially sustainable over the long term. And I do believe women's sport, it's attracting a lot of investment, but I do think it has to come to the stage where it's also a business model. And thankfully, because of the huge interest that we're seeing, we're close to being there.
Yeah. Talk to us about getting those 10 on board, because I would imagine that's got to be one of the trickiest things. You have a lot of knowledge about all of those teams. What was the process like of corralling, cajoling them into really supporting?
It was interesting because when I first arrived, I said to Stefano, I'm going to need a couple of months to go away and really figure out what I think is going to work and dive deeper into kind of research and data. So I spoke to a lot of governing bodies. I spoke to all my contacts from the world of karting. Why are we not seeing more young girls? What do we need to do to just get lots of different opinions and form my own opinion as to what was the right thing to do. And it was one discussion with Fred Vasseur, who's a team principal at Ferrari and a good friend. And he had a young female driver in his driving in his Ferrari Academy. And he said, listen, we can put her in F1 Academy and we could paint the car red. Suddenly I thought, yeah, you could. And so could all of the other teams.
Yeah.
He said, well, I don't know about that, but, I can try, I can speak. And I said, Fred, that's given me a really good idea. We're going to get every team to take a car. So
sorry to interrupt you, but that wasn't the original plan.
No, the series had been set up racing separate from Formula One, and the budgets of the drivers were covered by the driver, the team, and 1/3 by Liberty. So I got home that evening. I said to Toto, I'm going to get every team to take a livery. I said, impossible. We will never get all 10 teams, A, to agree, and B, to sign the same legal document.
Right.
I said, yeah, you're right, it might be a challenge, but actually the support that I had when I had all of the individual meetings, they all very much had the same reply. We've got one shot to get this right if we're going to do this. I mean, bearing in mind the first time in the history of the sport that the Formula One teams were giving their name and livery to something outside of the cars they built.
Yeah.
And for an all-female category, it was bold. But we managed to get the top 3 teams. So Zach was one of the first to come on board with McLaren. I had Ferrari. And then one by one, I managed to get to the number 6. Toto, of course, always said, you need to get more than 5, and then I can come on board. Then I got Mercedes, and I won't mention any names. Some were not that enthused, but I had more than half. And I said to them, well, we're going to launch and you're either with us or you're not. And I think the way the world is, they didn't want to be seen to not be supporting. But now I have to say, I have a great relationship with all 10 teams and they've been fully supportive.
Who had the most reservation? Who was the hardest to get?
It would be unfair to name names. Let's just say they took quite some convincing, but they're fully on board now.
Well, I mean, and I would imagine, Alex, you've seen this. I mean, it is and this does get to sort of the macro of women's sports right now, that when people see the proof, and the proof really is in the numbers. The proof is in the viewership. The proof is in the sponsorship dollars. I mean, what was for the unnamed who weren't, as enthusiastic, what convinced, other than peer pressure, was there something that you used, a number or an argument that convinced them?
I think a big part was peer pressure.
Yeah.
But when I went to meet with each and every team, I very much said, don't view me as a woman running a women's thing. This is for the greater good of our sport.
Right.
And this can be something hugely impactful and powerful in a really positive way. Because thanks to Netflix and Drive to Survive, 42% of the F1 fan base is female. The fastest growing fan demographic, the 18 to 24-year-old female. So there's a huge audience. And I think the teams realized that there was this massive shift and there was this younger female audience that was really getting into the sport. And it was about showing that the sport they loved wanted to create opportunity for women and wanted to show that the sport isn't any longer as male dominated as maybe it was once perceived to be. So I think that was part of the reason, but also I respected their reservations. It was bold. My vision was bold. It was going to take a lot to pull it off. It was a tough time to get it done, but we got it done. And then as soon as we announced it, it was time to try and get on the F1 calendar.
Right.
Stefano gave me huge support to meet with all the promoters. Again, not all of them were hugely enthusiastic, but some were. And I got half a calendar, and Stefano helped me to get a few more on to make a full calendar. And now that's not an issue anymore. So that initial maybe skepticism, I think, has completely shifted because we're up, we're running, and people can see that it's having impact.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning. Fantastic.
Mama, look.
It's just like our new house.
Warranty!
I hope you have an American Home Shield warranty.
Leaky toilet? Fixed. Clogged AC coils? Fixed.
Oven beyond repair? Ta-da! If AHS can't fix your comfort item, then replace it, no matter its age.
A warranty is smart.
Oh, a happy family. Is that us? Too much? American Home Shield. Sign up today at ahs.com.
Being involved with the WNBA and team ownership with the Lynx in Minnesota, over the last several years, we've seen this incredible amount of increase in interest, in dollars pouring into sponsorship and marketing. And on the back end, the ROI has been incredible because the viewerships have never been better. But in your position as a leader of the academy, how do you think you can capitalize on the influx of capital coming into women's sports?
Well, we're lucky in that I never needed to look for investment. I never needed to go out and prove the business case because I had all the support I needed from Formula One and Liberty. But I do think to be successful in the long term, first and foremost, we need to create great racing. We need to create something that people want to watch. because they shouldn't feel obliged to watch because it's the female category. We need to come to a race weekend and be a great addition. Promoters have to see the value of having F1 Academy. And then on the other side, if we get that extra viewership, if we get those extra eyeballs, commercially, we have a very strong proposition. And the two are so closely interlinked, and it's really that vicious circle. You can't really have one without the other. But suddenly we managed to get a lot of the F1 broadcasters also showing F1 Academy. Now we have our own Netflix docuseries. Suddenly we do have that reach. So for the commercial partners and for the teams, it's a real business case to go out to their partners and sponsors and say, okay, well, F1 Academy makes sense. Not only are we doing something that's good for the sport in supporting female drivers, but it's actually a return on investment for us. And I think the two had to go hand in hand. And it's been definitely lucky timing as well. The world changed, women's sport had this huge moment, and Formula One had this huge surge in popularity. And I do think all three came together that it gave us at F1 Academy a good shot at success, for sure.
So, Susie, when it comes to sponsorship, I mean, one of the ones that obviously jumps out when it comes to F1 Academy is Charlotte Tilbury. Not a natural name that we would associate with motorsports. Talk to us about how that deal comes about, because the car itself really jumps out, but even the association is notable. How does that happen?
Well, once I had the great idea of bringing in all the assets in-house and owning the liveries and commercializing them centrally, I woke up on the 1st of January last year and realized, okay, I've got 6 liveries I need to sell, and the first race is in kind of 8 weeks. But there had been a friend of mine throughout my racing career who had been in touch. She knew Charlotte Tilbury and said, listen, Charlotte would like to support a driver. So I immediately picked up the phone and said, listen, don't support a driver, become a partner of F1 Academy. And it was one of those phone calls, it was with their head of partnerships, where 10 minutes in, we just knew we were going to get a deal. Wow. We were so aligned. They wanted to move into women's sport. Their whole mantra is empowerment, see it, believe it, do it. And I very much wanted to bring in a female-founded, female-focused brand. I wanted to break down the stereotype that, well, to be taken seriously as a racing driver, you had to be like a tomboy. No, if you want to turn up at the track in a face full of makeup, you can, or with no makeup. That doesn't reflect on your ability as a driver. And we were just so aligned from the get-go. It was a challenging deal to piece together because Formula One was used to huge deals with oil companies, with logistics companies, and this had to be pieced together in a very different way. And when I called Stefano and said it's a brand called Charlotte Tilbury, he was like, who? I said, can you ask your wife? And I could hear him, Sylvia. And he's like, okay. He said, I trust you. If you think we've got to do this, then let's do it. And we got the deal done, and I said, okay, you have a livery to design. And they sent me through the livery with these hot lips plastered all over the race car with lipsticks hanging out. I thought, oh my God, this is going to create a lot of attention, maybe not all of it positive. But I knew it had a real impact when my stepdaughter, she's studying in LA, not really interested in motorsport. She called me and she said, you've just done a deal with Charlotte Tilbury. That is so cool.
Yeah.
And I thought, well, if we've reached a dorm over in LA, it means we've done something right. And it just blew up.
Yeah. And so what does a deal like that do in terms of not just drawing attention, but maybe changing the conversation with other sponsors? Or does it?
The amount of brands who I've spoken to have said, well, I want to do just what Charlotte Tilbury did. Let's copy and paste that deal. Because she came in and really disrupted. And we wanted someone to disrupt, to come at it differently. In our Paddock Club area, we have a makeup station. We wanted to challenge what had always been the status quo in racing. Let's do it differently. Let's not be ashamed of our femininity. We can still be here and be taken seriously as women and celebrating being women. So it was that partnership which really was the foundation for others coming on board. Tommy Hilfiger was one of the first to call and say, how can I support? And also took a livery. And then slowly but surely we got most of the cars sold, and now I'm in a great position where I don't have enough cars left anymore for the demand, but I keep my feet firmly on the ground. You know, we've had a huge success in a short space of time, but we need to keep making sure that we're making the right decisions for the longer term, that we're still making sure that we're evolving in the right way for these young girls up and coming to see the opportunity and to really grab the opportunity.
So, Susie, you brought up a really interesting point when you were talking about the Charlotte Tilbury deal and the makeup station in the paddock. And it's really cool, Alex, when you go and see a race weekend that has F1 Academy as part of it, because it is both a part of the larger event, obviously, and then its own sort of separate space. But I would imagine that that's a careful balance that you have to strike, right? You know, to appeal to the broader fan base, but also bring in, how do you do that? I mean, that must be something you're thinking about all the time.
It's definitely a balancing act because we are a junior championship. We're very lucky to race alongside F1, which is so established with a huge fan base. But we don't want to be a little sister in the room. We're there to take our space, to own it, to disrupt, to be bold, but in a way where it's respecting the bigger picture. Just because we're women, you know, someone said, oh, it's not fair that, you know, the F1 teams have the best paddock and you're off in the support paddock. I said, no, it absolutely is, because that's the pinnacle of the sport. And that's Formula One. And we're not here to disrupt what is a great, great sport. We're here to be an addition, and we're here to build up young talent that can hopefully progress. But it's definitely a balancing act of being taken seriously and of owning it, but then also understanding of where we fit in the bigger ecosystem.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something. We shouldn't feel defeated. We can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate, putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
Okay, so we are, if you don't mind, we're going to role play a little bit, okay? Jason, Mr. Kelly, is a CEO in a Fortune 100 company.
Okay.
He's very interested in giving you some dollars. Give me your 30-second pitch on what is the value proposition to Jason and his company partnering with you.
You are really putting me in the spot here, Alex. I will give it my best
I'm
shot.
his assistant.
Well, we would love you to come on the journey with us because F1 Academy is something that is young. It's only in its second season, but we've had huge impact in what is such a big global established sport. And we believe we can change the perceptions. We believe there's a great opportunity for your brand to appear on an F1 Grand Prix weekend and sit alongside huge names in the sport, but be seen as supporting something which is having huge positive impact in our sport to create change. We have great broadcasters. We have great audiences now watching F1 Academy, and we would love to have you on board with us.
Boom.
Is
All
that
right.
30 seconds?
That's
or
good. That's good. I have follow-ups. I'm getting there. I'm almost convinced. But tell me about your audience. Like, tell me how how your audience is similar to Formula One. Who are you bringing in? Who am I going to reach that I wouldn't otherwise reach?
We're definitely reaching a younger audience. I mean, obviously, with the demographic that Formula One is now hitting, it's younger than it's ever been. But we see that we have nearly 70% of a female audience, so less than, or let's say more females in Formula One. And we're definitely hitting an audience which isn't already in motorsport. It's an audience that's coming upon F1 Academy as something different, as something new, and it's not just your, let's say, average motorsport fan. And that's quite exciting, because if you're already in the sport and you have that viewership, but we are attracting something which is not already known to the sport.
So I think we want to sign a 5-year deal, but Joyce is the boss. 5-year, okay. So how does it look today versus where you see this in 5 years? Because we're in it for the long run with you.
Well, that's great to hear. But we are definitely got huge ambitions for it to be bigger and better in the future. But I've always said we can't run before we can walk. It's going to be a step by step. And I think one is the educational piece. We need more people to understand what F1 Academy is. I would love your daughters to say to you, oh, it's not F1 just this weekend, or F1 Academy is coming to Miami, that there is this education that we exist and that we are a great spectacle, a great sport to watch alongside Formula One. And we're not there yet. And we've still got a lot of work to do to build up that wider audience, to make sure that we are attracting the next generation audience, those young girls, the 8 to 12-year-olds. If they can see a female driver zipping up a Ferrari or a Red Bull or a Mercedes race suit, it will change her perceptions of what's possible. So we've definitely got to make sure that we continue to get that reach, and one of the big moments for us will be our Netflix docuseries, because I do think that's could be a game changer for us.
All right, we're done role playing. That was fun.
Ooh,
you got your deal. You got your deal with, A&J Incorporated, the Deal LLC. Netflix. I mean, you cannot talk to anyone about Formula One. You really can't talk to anyone about sports and media without talking about the Netflix effect and Drive to Survive and everything that it did for Formula One. So now, here comes F1 Academy, your own Netflix series. But with a twist, you're in business with Reese Witherspoon and Hello Sunshine. Tell us how all of this comes about, because it feels, in retrospect, obvious, but it's never that easy, I'm sure.
No, it's never that easy, but it was a partnership that I felt was meant to be. I think Hello Sunshine and what Reese created with Hello Sunshine, trying to tell the women's stories in a way that hadn't been done before, it fitted so well with F1 Academy and our story. And the timing was quite opportune for them to say, okay, it was still a risk, because when they came on board, we were racing on empty racetracks. There wasn't really the momentum that we have now. But they were very committed. They could see the potential, and they very much wanted to do more in women's sports. So I would say it was a leap of faith from their side. Obviously, the way the series progressed was very favourable, getting the teams on board, racing with F1. And then we had to find a streaming partner, and it was always clear for me I wanted it to be Netflix, because I wanted to be in the F1 paddock. I wanted to have the team principals as part of our story, because they were the people I dealt with every week. And I also wanted people to see how much support F1 was giving F1 Academy. And the negotiations started, and we had more than one that was interested, and that led to us getting a deal quite quickly with Netflix. And then it was, for me, really a voyage of discovery. I very much wanted this to appeal to people that weren't in the motorsport bubble. And I had to sometimes take a step back, because I don't think I'm the right person. I know too much about the sport.
You're not the target audience. Yeah.
I'm not the target audience. But it was a really interesting journey of trying to create something which we felt was compelling viewing, but also did justice to how credible and how important F1 Academy is in the bigger scale.
Yeah.
I think we have such a great opportunity with this series coming out. Obviously, we hope people will enjoy it. I say, even if we can have a fraction of the success that Drive to Survive did, it will be a game changer for us.
So tell us about it, sort of that compare and contrast, because, I mean, you had a front row seat. Your husband, Toto Wolff, was notably very skeptical about Drive to Survive from the beginning. Mercedes didn't participate in the first season. He's talked very openly about how he got that one wrong, and obviously has become a key character. You obviously have appeared on Drive to Survive a number of times in your various roles around the sport. what did you learn from being featured in that series that impacted or affected how you think about this series about F1 Academy?
It was quite a challenge because the Formula One teams and drivers and team principals are all very established. We have 15 unknown drivers who are at the very beginning of their journey. They're not established superstars yet.
They're literally teenagers in some cases.
They're literally young women who have been given this incredible opportunity. And for some of them, it was quite a big challenge to suddenly be with cameras everywhere on a Formula One race weekend. And we had to protect them in a way that we weren't being too intrusive. But we needed to see the drama. We needed to see the human stories. And because we're not in the F1 paddock, the cameras could go everywhere. And they managed to capture, for me, quite emotional to watch back to see how tough it was for some of the drivers, and definitely made me question a couple of things that we can do to improve it for the young drivers. Because it is tough. You're suddenly in the limelight, and as much as you need that exposure and that limelight to help you in your career, suddenly there was a 17-year-old signed to a Formula One team racing 2 hours before Formula One, and just 1 year previously she was karting. So it was a big step up, but I felt very sure that we needed to create that exposure, and we needed to create this disruption to get the eyeballs in the audience and to create that impact. So it was definitely a learning process. And then, of course, the balance between how much of the racing did people want to see. Was it more the drama off track? I didn't want it to look like a girly, reality TV show. These were serious young racing drivers that had to be taken seriously on screen. But I have to say, Hello Sunshine and Netflix it was really a privilege to work with both teams, because we always had the eye on the bigger picture and the balancing act of doing it credit in the right way, but trying to create something that people enjoy watching.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Slow down, honey.
Ah, a new driver. You'll need new insurance. Zebra compares over 100 insurance companies to find savings no one else can. Up to $400 a year.
Trevor!
Oh, look, it's my stop. The Zebra. We do the searching, you do the saving.
You watch this show, it's fascinating because there are a lot of people who, run leagues or run teams who, they're a little bit, removed from the action. Knowing this guy and knowing how passionate he is about the pursuit of excellence on court, on field, whatever, you have sat in these seats. And so you have this very intimate and emotional relationship with these drivers that may be, I dare say, different from maybe another executive. Is that fair?
Definitely. And there's moments where if I see a driver that's had a bad qualifying or a bad race, I can sympathize so much with how she's feeling. If a driver's under immense pressure because the results haven't come, I know what that feels like. But on the other side, I remember here last year, Abby Pulling, she stood on the podium at the Miami Grand Prix weekend, and I thought, to have that opportunity, I'd never had the chance to ever even close to Formula One when I was a young racing driver. So the idea that we've created that opportunity fills me with pride, but there's definitely, for me, a real emotional part. And I obviously have to try and stay a little bit detached from the drivers because I don't want to ever show favoritism, but I definitely passed the baton on, and I have a new head of talent development who I can see when a driver's struggling, or I can see when there's an issue, and I always say, okay, you got to go and speak to her and these issues, and I can pass on all the mistakes that I want them to avoid that I made, and all of the things which, looking back, I could have done better. I love that I can pass that knowledge on.
You must feel that.
I do. And I got to tell you, Jason and I were speaking before you walked in, and we were talking about how great that first episode was.
Thank you.
It was really, really good. And I can relate so much with you because as you kind of walked in as the boss, when I entered the New York Yankees in 2004, I had another boss, and his name was George Steinbrenner.
Literally the boss.
The boss. And it was like this reverence and like this ultimate respect. And I saw those young ladies, and of course I think of my daughters, the way they look at you. Have you ever thought and pinched yourself the impact you're making in these young ladies' life, whether they make it to F1 eventually or whether they go on to be an executive like you?
I don't stop to think about it. I can see that they take on board a lot of what my opinions are and when I give them advice. And I certainly feel sometimes I'm sitting in a room full of men and we're discussing F1 Academy and they all have opinions, and sometimes I have to hold myself back because I think, well, you're not a woman. You've never driven a racing car and you're trying to tell me that this is how it needs to be. But I respect the other opinions because I think sometimes it's different perspectives which can also open my eyes to new things. But I love what I do. I love the fact that I'm creating something which is giving these young drivers an opportunity that I could only ever have dreamed of, and that the sport that I love has made this possible.
You know, it's interesting when you say that, Susie, because I think I have some sense from your stories about what you're up against a lot of these times. And I do wonder in your mind, like, are there times when you just think, God, this is exhausting? Like, why are they just like banging on doors or beating your head against the wall, whatever, you know, metaphor you want to use? Like, does it sometimes just feel like this is ridiculous that I have to work this hard for something that's so obvious?
Absolutely. There's definitely been moments where I thought, oh, have I got this? Have I got it in me to keep going?
Yeah.
But I think it's from my racing career, that tenacity, that never giving up and being so close to achieving what I want to achieve. But there are days where it just exhausts me, the endless conversations and not being able to actually make things happen, just talking about. So yeah, that there are, but I think everyone has those tough days.
Sure. So it does feel like in these first 2 years, there have seemingly been moments, you know, I'm sort of flipping the question on its head when I said, are there frustrating moments? Have there been moments, a moment or two, where you've thought, what, like, we're doing something real here. This is happening.
It was the biggest moment for me was Jeddah last year, where I had few people with reservations that we should be racing in Jeddah because it was such a dangerous and fast racetrack. To which my answer was, well, if men can race it, women can race it, that shouldn't be a consideration. But it was the first time I'd seen the 10 Formula One teams with their own liveries. It was the first time I'd seen our partners with their own liveries. We put all 16 cars on the grid to take a picture. I had the Netflix crew following me with Hello Sunshine. And that was a moment where I suddenly got a bit emotional because all of that hard work, it had come to life. We were at the Saudi Arabian Grand Prix. There was those 16 cars all with their liveries, these young women with their race suits ready to go, and that was a very, very proud moment.
And so what's the next leap forward? I mean, what's the next big milestone for you and for the team? You're 2 years in at this point. You know, you're racing around the world. Does it expand to the grid? Is it about individual drivers? Is it all of the above? Like, what do you game plan out when you're doing those strategic conversations? What are you thinking about?
It's really important to me that our champion goes on to success in the sport, that the best female that we've identified can go back in and mix it at the front in a normal championship, because the sport isn't segregated, and our champion last year had our first race a couple of weeks ago and nearly finished on the podium. Such an important sign for us that we are at the level where these young women can compete and do have a chance of making it to the top. So the progression up the ladder is really important for our long-term success, as much as getting more young women racing, because we need to increase the talent pool. And when I go to kart tracks, and you know, my son had his first race a couple of weeks ago, and there was a girl fighting for the race win, and that's normal for him. He doesn't question a young girl being out on track with him and being really competitive, and that's changed. There's so many more young girls racing because now they have a clear target. Well, I want to get to F1 Academy, and we need both to function for F1 Academy to be successful long term.
All right, we're going to move to rapid fire. No pressure.
Here we go.
Ready.
Well, I just did a pitch in 30 seconds, so
Yeah,
I
I
feel
mean,
I'm
come on,
prepared.
you're good. You've got this. What's one word to describe your deal-making style?
Authentic.
What's more important to you, your gut or data?
Gut.
Who's your dream deal-making partner?
Toto.
Oh, good one.
What's the best piece of advice you ever received on deal making or business?
Always have another option. Don't fight to make the one deal work.
What's the worst advice you've been given?
The deal has to happen at any cost.
What's your hype song before a big meeting or negotiation?
Don't stop believing.
Good one.
As we've talked about, you have a new docuseries out on Netflix, F1 The Academy. What's your favorite sports documentary of all time, other than that?
I love the Michael Jordan basketball. What was it called?
The Last Dance.
The Last Dance was fantastic.
If you can only watch one sport for the rest of your life, which one is it?
Formula One.
What team do you want to see win a championship more than any?
Oh, the Scottish rugby team. They
Really?
need to
There you
win
go.
something, finally.
What's your advice for someone who wants to have a career just like yours?
Go for it. I think quite often it's taking that first step, which is the hardest. But I think you need to believe in yourself and simply go for it.
Boom.
Susie Wolf, this has been such a treat.
survived.
You did it. Listen, you were one of the first people I thought of when we started this show. I really have watched your career with a lot of admiration, as I said, and I'm really grateful to you for spending some time with us. Thank
Well,
you.
thank you both for having me.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Most hiring algorithms would scream me out.
Some bosses couldn't see me as a leader.
I've run this place for 20 years, but I still need to prove that I'm more than what you see on paper.
I've been writing code as long as I've been able to reach a keyboard.
This is what I do. It's second nature for me, coordinating 100 details at once.
The way my mind works, I have a very mechanical brain.
I sold them on my skills.
You gotta be so good they can't ignore you.
My magic is
Analytics and empathy. That's how I get clients.
You have to have the confidence in yourself to show up and defy the odds.
I'm more than who I am on paper.
I never got a college degree. And today, I'm the CEO of my own company. People want to tell me I'm one in a million, when actually I'm one of millions. Stars are all around us. It's time for them to shine.
When everything's on the line, real heroes rise to the occasion. I'll die trying.
Fire Country. All episodes now streaming on Paramount Plus.
Very simply, we cannot have open migration from any country where we cannot safely and reliably vet and screen those who seek to enter the United States. That is why today I am signing a new executive order placing travel restrictions on countries including Yemen, Somalia, Haiti, Libya, and numerous others.
Travel bans are back, with President Trump reinstating one of the most controversial and defining measures from his first term. Live from Singapore, this is Insight with Haslinda Amin, where we will dive deeper into that story with crucial context and sharp analysis. Markets are focused on a bond sale in Japan, with investors watching for demand at the 30-year auction. This comes as bids for the longer end of the curve sputter around the world. What's keeping Trump up at night? Well, it seems he's struggling with the art of the deal when it comes to President Xi Jinping. His social media laments highlighting a deepening impasse. Former Australian Prime Minister Malcolm Turnbull has been at the receiving end of his ire. He joins us in just a few minutes on how the tariffs and travel bans could impact America's global standing. Let's go! And it's not just Mario. Nintendo itself has a lot riding on the Switch 2. Its first new gaming system in 8 years. We'll discuss how crucial the launch is for the company and the industry. Nico Partners President and CEO Lisa Cosmas Hansen will be joining us, along with Nitish Mittersain, the CEO of India's biggest listed game developer. Welcome to Insight. Investors are focused on Japan today and the prices and demand for three very different things. First, the Nintendo Switch 2 rise also on the radar as prices soar. And finally, 30-year sovereign bonds. In broader Asia, stock traders are cautious ahead of that key auction in Japan for longer-dated bonds. We saw weak demand for the 20 and 40-year auctions, sending yields higher. And U.S. Treasury steady after rallying on weaker-than-expected services and labor data. 10-year yields, by the way, dropping 10 basis points. Traders boosting bets for at least 2 Fed cuts this year to prevent a recession. Now, global stocks have hit a record high in a rebound from tariff turmoil. The S&P and Nasdaq about 3% from their records in February. You got to wonder where they go from here. Now, the rebound in global stocks coming despite an impasse in tensions between the U.S. and China. President Trump is positioning a personal discussion with his Chinese counterpart as key to preventing both countries from spiraling deeper into their trade and technology fight. The White House said on Monday that a call could happen this week. But the lack of a Chinese response appears to be keeping the president awake at night. In a social media post after 2 a.m. Washington time, he said the Chinese president is very tough and proving hard to deal with. April Hong with us. That late night post says a lot about the prospects of de-escalation. And you know what? Increasingly, it is sounding like unrequited love.
Oh, it is a sad love story, I think. I mean, it really is, to your point, tells us about the state of affairs, right? That Trump really wanting a phone call, lack of a Chinese response, and how late the post came at night, 2:17 a.m. Washington time. It speaks to this sense of how his pleas have gone unanswered from the Chinese side. And maybe he was also trying to manage expectations because his officials had, for much of this week, been talking up the chances of a phone call. But it is very telling in this public voicing of frustration on the lack of a call from the Chinese side. For the Chinese, it's not quite clear what they are looking for in order to secure a call, but we know how they've been seeking access to high-end chips. They've also been wanting more investment opportunities from Chinese side into the US. And I think overall this just speaks to how China is trying to illustrate to Trump that if you want a call, it's going to come at a price. And it's also about managing this massive gulf, right, when it comes to their negotiation styles. We know how the Chinese side, they prefer to work up the chain of command. For Trump, Mick Mulvaney spoke to you earlier in the week talking about how he likes to talk straight to the principal. So I think at this point, they are far apart on many issues. when it comes to their trade truce, right, have they been violating the terms of their agreement? Then you think about tech restrictions, rare earths, student visas as well. At this point, it seems hard to see any de-escalation.
The art of deal making interpreted differently from both sides. In the meantime, though, we know that, President Xi Jinping is reaching out to the other partners. Europe is a case in point.
Yeah, it's very interesting how even though the Chinese president has been giving the cold shoulder to Trump, the Chinese sides, they've been making overtures to Europe, to Japan, South Korea even. With Japan, it's pretty much just lifting of a seafood import ban that was put in place about 2 years ago. Then there's expectations of warmer ties with South Korea with the new president. For the European side, we saw the European Trade Commissioner meeting with the Chinese Commerce Minister, Wang Wentao. And we're also hearing sources telling Bloomberg there could be a massive China-Airbus deal. And put things into context as well, keep in mind how these metal tariffs that have gone into effect also gives you a sense that maybe on the EU side, there's dwindling optimism of actually achieving a transatlantic deal with the US.
Let's talk about that Airbus deal. It's potentially huge. We're talking about potentially hundreds of jets.
Yeah, and in the context of, sources have been telling us that it's between 200 and 500 jets, right? So in the event that is 500, it would be one of the largest deals ever. Certainly it would be one of the largest for China. And to put things into context, you keep in mind that this is really a sort of shift in the market share that Airbus has been managing to wrest back from Boeing when it comes to the Chinese side. Even if you see 300 jets as part of the deal, that would also mean, it tips the balance past 50% for the Airbus share in China. And it's really, I think, at this point, a sense of China potentially sending a message to Trump because of how this would severely impact deal a blow to Boeing.
And it's also about rare earths, an area where China has domination in a way.
Yeah. We know how this is China's leverage, right, when it comes to the trade fight. And we've been hearing how the EU commissioner, he had this EU trade commissioner as a priority when he met with the Chinese commerce minister. They managed to raise the issue. But don't forget, this is also coming against the backdrop of back home in the EU. All these automakers, they're complaining about the lack of rare earths. So far, from the likes of BMW, from the likes of Mercedes, it looks like it hasn't quite affected their production at factories just yet, but they are still feeling some pain, some disruption in parts of their supply chains. And it also reminds you of the chip shortage for the auto industry in the wake of the pandemic. So, at this point, given how much leverage China has when it comes to rare earths, it's quite hard to see them relenting, even when it comes to the EU.
In a very strong position at this point in time, some say. Avril Hong, thank you so much for that. Let's stay on trade. EU Economy Commissioner Valdis Dombrovskis is seeing progress in trade talks with Washington as negotiators race to prevent higher U.S. levies from taking effect on July 9th. But he also told us the bloc will not hesitate to impose counter tariffs if the deal falls through.
We do see a negative economic impact from the tariffs already imposed on the EU by US and also on uncertainty which those tariffs are creating, as we know that we are also not yet at the end of the negotiations. So correspondingly, we saw it as one of the factors slowing down European Union economic growth this year, and correspondingly we expect only EU economy to grow by 1.1% this year. So from European Union side, we are willing to find a mutually acceptable solution with United States as regards the tariffs, also to put an end to this uncertainty and to avoid further also global economic fragmentation.
If you guys cannot reach an agreement by this, at least the deadline that the U.S. has put on you for next month, have you prepared a package of retaliatory tariffs against the U.S.?
Well, as you know already, when the steel and aluminium tariffs were introduced by the Trump administration against the EU, we already prepared the first set of countermeasures, counter tariffs, but we also suspended these counter tariffs to give negotiations a chance. But we had reiterated that if we are not able to find mutually acceptable solution, we are ready also to put those counter tariffs in place as regards the first package, which was our response to steel and aluminium tariffs, but also a broader package, which is a response to already further tariffs which had been imposed on the EU. But right now we are still negotiating. Actually, exactly today, our Trade Commissioner Maroš Šefčovič is in negotiations with U.S. Trade Representative Mr. Greer, and they are making progress.
Commissioner, at the same time, China has announced an agreement to buy Airbus planes, potentially 300 of them. And I wonder how much, while trade negotiations are going on with the U.S., the European Union is moving forward with some sort of discussion with China about tightening ties there.
As regards China, it's worth noting that China is second largest EU trading partner after the US. So obviously for us it's very important to have our transatlantic relations, and including trade and investment relations, on track, but obviously also relations with China are important.
And that was EU Economy Commissioner Valdis Dombrovskis speaking with Bloomberg's Romain Bostick and Lisa Abramovich. Now, still ahead this hour, former Australian Prime Minister Malcolm Turnbull will join us to discuss President Trump's efforts to reshape the global political and economic landscape. Stay with us for his insights. Keep it here with us. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it.
Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate.
Putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning. Fantastic.
Beverly Hills 90210 is back on its very own channel.
I love this place.
Here, the zip code isn't just a number, it's a lifestyle.
I'm so excited.
Relive your 90s dreams on the Beverly Hills 90210 channel on Pluto TV.
Rail, name something that's hard to do with your eyes open. Read. This boy in college. he leaned into the mic and said, "Read, Steve."
Watch the Family Feud channel on Pluto TV.
Saturday mornings were made for shopping. Get ready to meet up with your HSN besties for super savings and tons of fun. We've got you covered. Kick back and start your Saturday shopping with HSN.
The year I turned 26,
we were making more money than we knew what to do with. Was all this legal? Absolutely not.
stop. You don't want to get a bad reputation.
Welcome back to Insight. President Trump has signed a proclamation that bans individuals from a dozen countries from entering the U.S., reinstating one of the most controversial and defining measures from his first term. The move comes after an attack in Boulder, Colorado, that targeted a march in support of Israeli hostages. The second-term travel ban covers countries including Afghanistan, Myanmar, Iran, and Yemen. The measure also partially limits entry of people from Burundi, Cuba, Laos, Sierra Leone, Togo, Turkmenistan, as well as Venezuela. Our next guest had a famously testy phone call with President Trump in his first term and has since been a vocal critic of many of Trump's policies and his leadership style. That's earned him personal rebukes from the president as recently as this year. Joining us now is former Australian Prime Minister Malcolm Turnbull. Mr. Turnbull, good to have you with us. The Trump administration calls today's measures common sense measures in the name of national security. How are you defining that?
Well, I think it's you'd think you could have protect national security with a more discriminating approach. I mean, none of these countries have access to the ESTA system, so they're all subject to applying for visas. You would imagine the number of people coming into America from those countries is not that great. I would have thought that you could manage your security concerns there in a more discriminating way. And unfortunately, withdrawing from the world and pushing back against the world. And so, one of the points that a lot of Trump's team have made, and Pete Hegseth made this in Singapore last week, is to say that America first doesn't mean America alone. But, I think for much of the world, that's what it actually looks like.
So a more isolationist U.S., we've had reaction from Venezuela saying that it is not just a risk for Venezuelans in the U.S., it is a risk for the world. How do you see this more isolationist U.S. impacting the rest of the world, and how should the rest of the world be responding to this?
Well, firstly, if America is less open to the rest of the world, that's not good for America. It's not good for anyone. America has been an enormous beneficiary of free trade and open markets. Free trade and open markets in goods and services, but in people, in ideas. You look at the leaders of America's greatest companies. So many of them are immigrants or the children of immigrants. So many of them are people that came to America to study as foreign students. America would not have companies with the strength that it does today had it not been for all of those brilliant minds that have been attracted to the United States. There is a sort of global race for talent, and America's been the biggest magnet for that. And if it's seeking to push that talent away, at the earliest level, at the level of students, that will be to America's detriment. What should the rest of the world do? Well, look, we don't have a vote, so we, and Donald Trump's certainly not going to listen to anybody else. He doesn't listen to too many people at all, but certainly he's not going to listen to foreigners telling him how to run the United States. We shouldn't presume to do so. But I think what we have to do is work together. Like-minded countries who share the same values of free trade, open markets, rule of law, respect for the sovereignty of nations, all of those values that we used to share with American presidents, we don't currently, we've got to work together and collaborate outside of the United States. I mean, this is not, it's America that stepped out of the room. Okay, so we just have to keep on. And I mean, in this part of the world, in Asia, a great example is the CPTPP. The Trans-Pacific Partnership, which was an Obama-era initiative. You'd remember. Trump pulled out of it in 2017. We kept it going. I was able to persuade Shinzo Abe that Japan was the remaining largest economy, that we should keep going with it, and we did. It's up and running. The UK has now joined. The EU is looking to can't really join because it's not. Well, could, I suppose, if the parties agree, but it's more likely to have a close association. You've just got to build these alliances of like-minded countries together to work without the US, and that's hopefully the US will change its mind.
Mr. Turnbull, let's talk about the trade war. It's day 64. We're seeing the highest tariffs since World War II. We're seeing backflips on backflips on backflips when it comes to, Trump's policy agenda. For someone who's dealt personally with Trump, how are you reading his moves so far?
Well, it's hard to read them. I mean, his supporters would say he's playing four-dimensional chess, and it's all part of the art of the deal. I think Caroline Levitt, his spokeswoman, says that's what it is. It looks very chaotic. I think the uncertainty and the chaos and the erratic nature of all these pronouncements is having as negative an impact on investment and economic activity and capital formation as the tariffs themselves would, assuming they could stay fixed for a particular, for any sustained period of time. So, none of this is good. I think we'll I think you've only got to look at the OECD's latest economic forecasts. Right. They're forecasting a considerable downtick. I'm sure you covered it extensively here on Bloomberg, but a significant downturn in global economic growth because of this tariff war. So, the Trump supporters believe that he knows something that nobody else does, and that Trump somehow or other has got it all worked out. Well, we'll see. We'll see if he gets confronted with economic reality and whether that changes his course. But none of it is helpful, obviously.
He's known as the deal maker, but it's been so difficult for him to actually deal with Xi Jinping, his counterpart in China. And he's talked about your own ability to deal with China. In fact, he said you never understood what was going on with China, nor did you have the capacity to do so. How are you assessing his capacity to deal with China?
Well, it's funny. He posted that rather, abusive post shortly after I did an interview with Bloomberg. So this is a dangerous place for me to be on Bloomberg because he watches it. And that post went up just as I was walking out of your studio in Sydney. And, what I said in the post was honestly a penetrating glimpse of the obvious. Heidi, your colleague in Sydney, had asked me how China would react to all of this chaos and so forth. And I said, China will take advantage of it. They'll go on a charm offensive, which they have. They will seek to be consistent and constructive where Trump is erratic and, angry. And they're doing all of that. And this wasn't a great insight, but it riled the president up. Look, I think with China, well, at least, bullies normally pick on people who are smaller than them. At least he's picked on somebody his own size or America's own size, if not larger, and he's getting real pushback. And but it's as though he wants to humiliate people. I mean, just think about this. He imposes these unilateral tariffs on friend and foe alike. He imposes them on Australia, a country with which he has a huge trade surplus and, a free trade agreement. Canada, which he's threatened to annex. But he imposes them and then says in a speech in Washington, he says that proudly boasts, he said, everyone is wanting to come in here and do a deal. They're coming here desperate to a deal, saying, please, Mr. President, do a deal with me. And they're coming here to kiss my ass. Those were his words.
Mr. Turnbull, there have been reports suggesting that KKR distanced itself from you after you criticized the president. Any confirmation on that? I mean, is this the new world where
I can't
wheeling and dealing?
Look, it's true. The only thing I can confirm is that I'm no longer an advisor to KKR. So you can read into that what you like, but I'm aware of those reports. But I've had a very good relationship with KKR in the past, and I still have co-investments with them. But I am no longer a senior advisor to them. So there you go.
Mr. Turnbull, hang tight. Malcolm Turnbull, former Australian Prime Minister, is still with us. Coming up, more on today's launch of Nintendo Switch 2 as gamers start to determine whether it lives up to the hype. Keep it here with us. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us
to inspire, to educate, putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning. Fantastic.
I'm on a mission for what's left of the government, and I need your help. You're looking at the only human known to have survived being bitten by a zombie.
What are you waiting for? Kill it! Kill it!
We've lost contact.
I suggest we run for it.
This is gonna be the start of something huge.
Here's to us.
Sentiment has changed.
The whole tariff
events have impacted mostly, I would say, the growth in the U.S. Market forces, the so-called bond vigilantes, have woken up those to the concern about the growing deficit in the United States.
They are starting to pause or slow down at least their allocations to the U.S. Bomb that people are watching is tax policies and potentially a tax war.
Right now, the big focus is on rates and the deficit, obviously, as the current administration is focusing on their big, beautiful bill.
Some of our guests at this year's Super Return Conference in Berlin. Now let's get back to former Australian Prime Minister Malcolm Turnbull, who is still with us. Mr. Turnbull, we know that tariffs are forcing countries to reassess who they trade with. And increasingly, there is that perception that Asia perhaps will be turning more towards China as well as Europe. What are you seeing currently?
Well, I mean, the first thing is, it's very hard to find a substitute for the American market. So, you know, for most exporters into the United States, losing access to the US market is, if that's the result, is going to be very hard to remedy. Having said that, everyone should seek to have diversity in their markets. You shouldn't be overly dependent on any one market. And so you're seeing, people looking at opening up more free trade agreements. I mentioned earlier the European Union. President Macron flagged this last Friday in Singapore, seeking a closer association with the TPP, with the Trans-Pacific Partnership. Australia has had free trade negotiations with Europe. They started when I was PM. They basically came to an end a couple of years ago because the parties couldn't get to an agreement. They've been reopened. So the Europeans have now said, hey, maybe we should be talking about this. And the Australians want to do it too. So both sides are seeking to move together. So I think you're going to see coalitions. I mean, as Emmanuel Macron said very eloquently last week, he's going to see coalitions of countries that outside of the superpowers who do not wish to be enrolled or bullied. And when he says do not wish to be enrolled, what Macron was talking about was being enrolled by America in a trade war against China, or indeed China in a retaliation against America, and naturally do not want to be bullied. Well, nobody wants to be bullied. And, of course, giving in and sucking up to bullies will only get you more bullying.
Mr. Turnbull, how much pressure is Australia getting from the U.S.? I'm asking this question on the basis of the Port of Darwin. There seems to be great urgency to have the Port of Darwin under the ownership of Australia from China. How much is this has to do with the U.S.? Well,
look, I think the Americans have never been happy about that. The Port of Darwin sale was announced just as I became Prime Minister. In fact, the federal government's decision to not object to the sale, which was a sale by the local Northern Territory government, was made literally just before I became Prime Minister, the day before, I think, actually. Look, our assessment at the time was that this wasn't a security issue, wasn't a problem. It was assessed by our security people, head of defence, head of ASIO and so forth. Initially the Americans' concern was that they hadn't been warned about it, which wasn't true. I mean, it was a public process. But look, times have changed, truthfully, and I can well understand why there's a discomfort about there being a Chinese company owning, port facilities in Darwin. And so I imagine that there will be, through one process or another, hopefully a consensual one, where it will be acquired by an Australian company, Australian investors.
I guess the question is whether the Albanese government is right in imposing tough measures to take it back. Well, it's up. I guess it's entirely up to them. I mean, the Northern Territory government could do it too. It is. But equally, it could be done voluntarily, consensually.
it wouldn't seem to be an asset that China would want to make a gigantic issue over. Maybe they will, but it's something that the government will try to manage as delicately as they can. I mean, let's face it, an Australian company wouldn't be able to buy part of a port facility in China. So it's I think with the China has always had much greater ability to invest in Australia than Australia has, or any other country, frankly, has had to invest in China. So, maybe it's just a views are changing when there are a whole bunch of Chinese investments in Australia, including by state-owned enterprises that were approved in the past, including of vital infrastructure like energy companies and transmission assets that would not be allowed today. But rolling them back is obviously a very costly thing to do, and one, I guess, would hope that in the normal course of events, market forces would see these assets return to Australian ownership.
Could you have prevented it? It happened in 2015, as you suggested. It happened just a day before you became Prime Minister. Could you have prevented it? What was the thinking back then?
Well, the answer is yes. I think, the technical legal answer is probably not, but I think in political terms, yes. If I'd become Prime Minister and decided on day one this should not go ahead, I could have probably stopped it. I mean, there are some complexities in the Australian law in this matter because it was a territory government asset, not a private sector asset, let alone a federal asset. But yes, so I could have stopped it. But as I said, and I said this publicly at the time, the advice we had from ASIO, from the Department of Defence, was that the security issues, had been addressed, and it was not something that we should be unduly concerned about. So that was the advice we were given at the time.
Mr. Turnbull, just one final question before we let you go. What do you deem as the biggest risk for the world right now, given that we're seeing, several potential flashpoints around the globe?
Well, there are so many. I mean, you could, probably global warming, the unchecked advance of global warming, and the withdrawal yet again of the United States from, global efforts to combat it is probably the biggest single threat. But there are so many in terms of geopolitics. We have a hot war going on in Europe, in Ukraine, and we have in this part of the world the ongoing threat of conflict over Taiwan, and that's they've got very mixed signals from Mr. Trump. He has said, actually, in an interview with Bloomberg about 18 months ago, as I recall, he said Taiwan's a long way away and suggested it was basically impossible for the US to defend.
Right.
And then criticised Taiwan for stealing America's semiconductor business, which is hardly fair. But then last week in Singapore, Pete Hegseth, the Defence Secretary, said Trump wants to ensure that Taiwan will not be taken over by China on his watch. Well, we'll see. Ultimately,
Turnbull?
There's a... Yep.
Right. Mr. Turnbull, we have to leave it there. Malcolm Turnbull, former Australian Prime Minister. Thank you so much for your insights today. Now we have the results of that 30-year bond sale. Let's get to Avril for the very latest. It is weak, as we saw with the 20 and the 40s.
Yeah, I mean, there was always this concern about the longer end, even though on the 10-year auction earlier in the week, we saw pretty solid demand. So there was optimism of a bit of short-term relief. But ultimately, look at the demand for the 30-year based on one of the demand gauges, the bid-to-cover ratio. It is lower than the 12-month average. Not just that, it is the lowest level that we've seen it since late 2023. And this is coming in spite of some speculation that, there would be some support for the 30-year auction because yields had risen high enough that it was attractive to investors. There was also speculation that when it came to the finance ministry, they could be reducing issuance, that the BOJ potentially also would be slowing the pace of the reduction of its bond purchases. But all in, it still speaks to, based on these results, the concern still very much there for the long end of things. Let's take a look at how the secondary market is reacting. We're seeing it not really change in terms of the yield on the 30-year. These gains we already saw on the Japanese long end bonds, following on from some support from Treasury yields following their dip overnight. So it looks like that reaction not quite trickling through just yet. Fairly stable on the Japanese bonds, keeping an eye on dollar yen as well, hovering just below the 143 handle.
And of course, we have the likes of PIMCO still saying that JGBs look attractive, volatility notwithstanding. Avril Hong, thank you so much for that. Now, still to come, we plug into Nintendo Switch 2 as gamers start to determine whether it lives up to the hype. More with our panel of experts next. Keep it here with us. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it. Perpetual Planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate.
Putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
Saturdays on Dateline 24/7, stream our most suspenseful mysteries.
I had a chill going up my backbone.
In these stories, you might think you know who did it, but my advice, sit back and wait for the twist.
This tops the charts for most bizarre.
There's more than meets the eye here. You would think this was a Hollywood movie.
It was totally off the wall.
Saturdays of Suspense on Dateline 24/7, streaming on Pluto TV.
Clear skies, beautiful scenery on the grass.
Great venues all across the board.
The grass season underway. I love this part of the season. I love watching it. I love talking about it.
It's great to be back on grass.
The most difficult surface to learn to play on.
You have to have a lot of patience.
Moving on the grass is not easy.
You can get a little slick.
The pristine lawns, Pimm's cups, and fresh strawberries right around the corner.
After 8 years since the original Switch console, Nintendo's highly anticipated Switch 2 is hitting the shelves. With most of its revenue tied to the console's success, the pressure is on to ensure another blockbuster. Bloomberg Originals took a closer look.
It's hard to overstate how important the Switch is for Nintendo.
Almost all of its revenue comes from this one product, or the exclusive games the company develops for it. Its popularity since 2017 has driven Nintendo's share price to an all-time high. And everything's riding on the Switch 2, keeping that trend going.
The stakes were very high.
Nintendo is at the most successful point in its history.
And here's why. The Nintendo DS, 154 million sold. The follow-up 3DS, 76 million. The Wii, 102 million sold. The follow-up Wii U, oh dear. And the Nintendo Switch, almost the best-selling console of all time, 152 million sold. No pressure then.
Switch 1 created a very high hurdle for the future consoles to surpass.
So Nintendo's breaking new ground with some very subtle shovels.
It's the first console in Nintendo's history that is kind of the same thing, but just a little bit bigger and a little bit better.
That strategy belies decades of corporate lessons learned sometimes the hardest way. But this time, the stakes are just too high for history to repeat itself.
Let's go! And subscribers can see that documentary right now on the terminal as well as Bloomberg.com. It'll be up on the Bloomberg Originals YouTube channel on Friday from 4 p.m. Hong Kong time. Now, the global launch of the Switch 2 marks one of the biggest gadget debuts in years, recalling the first-day mania surrounding the iPhone of a decade ago. Retailers have asked Nintendo to ship as many units as possible to meet high demand. In Japan, websites are giving fans advice on the electronic stores most likely to have models in stock. So, with the console's arrival being seen as a watershed moment for the industry, joining us now is Nitish Mittersain, joint MD and CEO at Nazara Technologies, India's largest listed game developer, and also with us, Lisa Cosmas Hansen, President and CEO at Nico Partners. Lisa, let's start with you. What's your take? Is it going to be a big hit or not?
Yes, I think it will be a very big hit. It's very exciting. It's one of these like highly anticipated days where people are queued up everywhere that in front of the retailers that might be able to give them something if they were unable to get in on the pre-order. We expect at Nico Partners, we're anticipating that more than 14 million units will be sold in this year alone. And that's even slightly more aggressive than Nintendo's own forecast. But we think that over time, maybe 100 million units of Switch 2 will sell. Probably not quite 152 million like the original Switch, but we do think that this is a highly anticipated product, and it's got so many interesting features and functions that I think that the really die-hard users of Nintendo will be jumping and chomping at the bit for at least the first year or two.
Well, what do you think, Nitish? Lisa says it's going to be a big hit. Do you think so? Some say it is just an upgrade, not a revolution, and the price of $450 is just way too expensive.
Yes, no, I think the industry has been waiting to see new consoles come into the market to kind of give a fillip to the industry, and we are pretty excited about it. I also think from an India market perspective, while it's largely been a mobile gaming industry, I think there's an opportunity for family-style console gaming to become popular, and with the right pricing, we're hopeful that this will take off in India at some point as well.
So you're saying that the 450 price tag won't be a deterrent in terms of getting the product being popular in the country?
No, I think it is a bit steep. But I think, the Nintendo is more family-oriented, more casual-oriented type of console. And I still think there will be early adopters. And hopefully with India-style pricing at the right time, it can take off well in the country.
So Lisa, the price point is important, and some say that given the uncertainty in terms of Trump tariffs, we could see an escalation in price as well. What do you make of that?
Yes, I think we were surprised that the price is almost $450, $449.99, I suppose. And that is quite steep. I think it will be steep in a lot of the Asia markets. There will be, of course, the early adopters, the well-off people who can afford it. But even in the more developed countries, that's a high price point. And the games themselves are also higher in price, going from what had been a $60 title for a Nintendo first-party game, meaning like Nintendo's original title, to maybe $70 or $80 per title. And that's, I think, also going to be a little bit tricky. On the other hand, when we're talking about the tariffs, that's so up in the air, it's really hard to predict. But we are aware that Nintendo moved production for U.S. sales to Vietnam from China. And I think that was supposed to kind of mitigate some of the risk. But now there are these global tariffs, and we're not sure what's going to happen after some of the hiatus. So we'll see as time goes on if Nintendo will have to raise those prices or if somehow things will work out in their favor.
How are you assessing the risks? Because when you take a look at the previous follow-up products, like the Wii's, for instance, they didn't do well.
Right. Well, I think this is interesting because there's a lot of backwards compatibility, and the new features such as Game Chat or the improved Joy-Con or the larger screen and the really cool NVIDIA processor, I think it's going to be such an improvement, and you could still play all the games you had played. The console has been in people's hands for, up to 8 years now, and it might be time for people to upgrade and maybe share with family members or whatever the case may be. And I think that there will be a lot of popularity and demand for this, assuming that people can still buy it for $450 and the games are what they expect. If things go north from there, then it's anybody's guess.
Nitesh, is this tempting enough for Nazara to get into console games from being mainly mobile games?
It's very good timing for us. We've been purely in mobile gaming for the last 2 decades, but only recently, as of last month, we acquired Curve Games in the UK, which is an established publisher of PC and console games. So we're very much into this industry now on the PC and console side, and therefore very excited about this launch and to see how it positively impacts our business in the near future.
Are you looking to launch games for Switch?
I'm sure the team is very much on it, and we will surely be, bringing out versions for the Switch.
We know that the gaming market could potentially be worth $9 billion in about 4 years. Talk to us about your own ambitions. How much of that pie are you after?
Sure. Nazara is India's oldest as well as first and only listed gaming company today with a market cap north of $1 billion. But I think we're only getting started despite being around for 2 decades. India has 500 million plus mobile gaming users. But monetization has lagged in the recent years due to propensity of users to pay, but that is changing very fast with the younger generation. Over 65% of the Indian population is less than 35. And for them, mobile-first gaming is becoming, their go-to entertainment. So we think these targets could potentially be met or surpassed. And Nazara is very well positioned to take advantage of it. We're investing heavily in the ecosystem, investing in developers. We launched Nazara Publishing recently to work with local developers as well as global players wanting to, access the Indian market. So we're very excited with the prospects going forward for ourselves and for the Indian gaming industry.
You talked about how you're looking at perhaps launching games for the Switch. Give us a timeline. Realistically, when might that happen?
Like I mentioned, we recently acquired a console publisher, Curve Games, and they already have a roadmap, around the variety of consoles, including the Switch. So I think over the next few months, we should see some releases happen.
Lisa, talk to us about AI in gaming. Where are we with that?
I think AI for gaming is still at the beginning of its potentiality. And there are a lot of use cases for development and for improving efficiencies in the development cycle. Sometimes people say that the games these days are very long and arduous and expensive development cycle. So I'm sure that AI in that process will help facilitate kind of production of games and so forth. Perhaps it could even help with game discovery, which is often the problem. There are so many games that sometimes discovery is a challenge for gamers everywhere. So I think that there is a lot of hope, just like there is for all industry, to have AI benefit the games industry. But I do think we're pretty early days.
Early days, but as it stands now, which companies tend to benefit the most? Which ones showing the most potential when it comes to AI adoption and making it successful?
Well, I think in terms of game companies overall, there's probably a winner one day and the next day there'll be another horse passing it. I don't know if there's anybody who we can say is truly a beneficiary at this moment to the point where they have a competitive advantage of significance going ahead of the rest of the pack when it comes to game developers and publishers. Even as it is, we're looking at the large language models and some of the AI companies, even all the tools that are being developed across the world and in the United States, those two are having a multi-horse race at the moment. So it's hard to predict who's going to benefit the most from AI, especially in games. But I do think that, if we're looking at India and at Asia overall, and coming from China, or even where the Nintendo Switch 2 might go, there's a lot of promise for these markets with or without AI in development. And there's a lot of promise for the growth of Nintendo Switch 2 throughout Southeast Asia, potentially in parts of India or throughout some segments of India.
Nitish, just one final question. Are the days of console gaming numbered? We're seeing a lot of competition from outside the gaming industry, the likes of Apple, Netflix, on giving that competition in 20 seconds. What's your thought?
Look, I think I'll speak from the Indian market perspective. It's largely been a mobile gaming first, market. And consumers are graduating actually to PC and console. So I think at least from our market perspective, the days of consoles are definitely not numbered. There's going to definitely be increase going forward.
Nitish, thank you so much for that. Along with Lisa Cosmos Hansen, thank you for your insights today. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated.
We can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate.
Putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
Hey, did you find the manual?
Yes!
Summon Dale!
Who's Dale?
American Home Show now provides video chat with live repair experts for home fixes over the phone. Let's go fix that oven.
Okay, Dale.
Sign up today at ahs.com.
my arm falls off.
Party's here! Oh yeah! Guidos everywhere, hot girls, and house music.
It's like we beat up that beat. GTL, baby. Gym Tan Laundry.
That's how they like make the Guidos.
We are here to blow this place apart.
As one big blur.
I don't know how I'm alive.
Watch the Jersey Shore channel now on Pluto TV. Stream now, pay never.
This could get crazy.
All reality WeTV.
My family has drama food.
It's real voices.
Never know what's going to happen once you get us all together.
There is a skinnier person inside of me.
It's real emotions.
I do.
Robbing the bank is kind of a turn on.
Unbelievable. And it's all in one place.
I have 72 hours before the marshals come after me.
What?
I'm here for it, honey. All of it.
All reality WeTV.
Beverly Hills 90210 is back on its very own channel.
I love this place.
Here, the zip code isn't just a number, it's a lifestyle. Dive back into the glamour, the gossip, and the scandal.
It's outrageous.
I'm gonna get even.
Oh my God. Brenda, how could you? I'm so excited.
Relive your 90s dreams on the Beverly Hills 90210 channel on Pluto TV. It's 12 noon in Singapore, 8 a.m. in Dubai, and 5 a.m. in London. I'm Avril Hong. The top stories this hour. President Trump has signed a proclamation that bans individuals from a dozen countries from entering the U.S., reinstating one of the most controversial and defining measures from his first term. The move comes after an attack in Boulder, Colorado, that targeted a march in support of Israeli hostages. The second-term travel ban covers countries including Afghanistan, Myanmar, Iran, and Yemen. The measure also partially limits entry of people from Burundi, Cuba, Laos, Sierra Leone, Togo, Turkmenistan, and Venezuela. President Trump says Vladimir Putin has warned him that Moscow plans to retaliate against Ukraine following recent drone strikes deep inside Russian territory. Trump and Putin spoke for over an hour on Wednesday as U.S. efforts to broker a peace deal show signs of stalling. The two leaders also discussed Putin's potential role in ongoing U.S. nuclear negotiations with Iran. NATO is set to hold a summit on military spending later this month as leaders seek to win over President Trump with a pledge to boost defense budgets. Sources say leaders of the bloc are likely to agree to Trump's demand that member nations allocate 5% of economic output to defense. The summit will also address Ukraine's ties with NATO. And the U.S. Education Department at Columbia University no longer appeared to meet accreditation standards due to its violation of federal anti-discrimination laws. Secretary Linda McMahon claims the school acted with what she called deliberate indifference towards the harassment of Jewish students as pro-Palestinian protests roiled on campus. Columbia, for its part, says it's committed to combating anti-Semitism. Let's take a quick look at how markets are faring. On commodities first, taking a look at oil, the Saudi Arabians seem to be wanting more supersized OPEC plus hikes. We're seeing oil on the Brent crude futures holding below $65 a barrel. Taking a look at Asia stock benchmarks as well. The big thing we were watching in the past hour was the results of the JGB 30-year auctions. Demand was weak. We indeed saw some of those extension of declines on Japanese gauges. Investors in this part of the world are not putting on risks when it comes to long-term risk appetite, especially against the backdrop of these lingering concerns, especially given the lookout for the U.S. payrolls that are set for tomorrow. More news ahead. This is Bloomberg.
There's no doubt that 2023 was the year of Barbie.
Hi, Barbie!
Hi, Ken!
From the doll's big screen debut to 165 brand integrations, Barbie Pink was inescapable.
Here we go, Barbie Day One.
But years before cameras started rolling on the Barbie movie, Lisa McKnight had been working on transforming the iconic doll's image.
So we did a lot of soul searching, and we did a lot of work to go back to the original purpose of the brand. Why does Barbie matter?
As Chief Brand Officer of Mattel, Lisa has gone from reintroducing Barbie to the world to championing everything under Mattel's umbrella. So you're taking some of those successful initiatives and moving it across to your other properties as well.
Yes.
Turning the toy maker into a global brand powerhouse.
We believe Mattel has one of the strongest catalogs of IP in the broader industry.
But can Mattel replicate the Barbie movie's success? Or was she a one-hit wonder? I am Raja Rajamannar, Chief Marketing and Communications Officer of MasterCard and a best-selling author writing about our industry's future. Marketing as we practice today was founded on theories and principles from more than 6 decades ago, long before the advent of the internet, social media, or artificial intelligence. I have had a front row seat as new technologies, cultural shifts, and an explosion of data have disrupted the ways of traditional marketing. To connect with the savvy consumers of tomorrow, marketing as we know it must take a quantum leap forward. This is quantum marketing. Founded in 1945, Mattel is one of the largest toy companies globally. Boasting a portfolio of hundreds of products, Mattel is the owner of brands like Hot Wheels, Fisher-Price, American Girl, and of course, Barbie. Lisa McKnight has been at the company for over 25 years.
Great to see you.
She took over as Barbie's global head in 2016 and has played a leading role in the brand's transformation. I visited Lisa at her office in Mattel's headquarters to learn how she turned Barbie once again into a global phenomenon. You joined Barbie in 2016. And this is a brand which is more than 60 years old. Now you fast forward it to 2020 and 2021. It's the world's #1 toy property. That is one heck of a transformation. How did you do it?
Oh my goodness. Well, we had a bit of a situation almost 10 years ago where the brand was losing relevance. Barbie was still popular with kids, but parents that even grew up playing with Barbie no longer felt great about giving Barbie, for example, as a birthday present to a friend's party. They didn't see Barbie as a role model. They felt that she was out of touch in terms of reflecting the world that they were seeing around them, and they wanted something better for their daughters in particular. So we did a lot of soul searching, and we did a lot of work to go back to the original purpose of the brand. Why does Barbie matter? Why was she created? We looked and took a lot of inspiration from Ruth Handler, the co-founder of Mattel and creator of Barbie. And the reason why she created Barbie almost 65 years ago was to inspire her daughter that she could be anything when she grew up. She wanted Barbie to be a source of female empowerment. She didn't like what was in the marketplace at the time. There were only baby dolls available to girls.
When I grow up, I want to be a mommy.
You can play mommy right now with Ideal's Betsy Wetsy.
So that encouraged girls to role play nurturing, caregiving, being a mom, which is wonderful. But she wanted her daughter to have other opportunities too, like her son had. He was playing with toys that encouraged him to be a firefighter, to be a doctor, to be an astronaut. So Barbie was created as the very first fashion doll, and we took a lot of inspiration from that original purpose, and we used that purpose to guide the next 6+ years of transformation. In addition to, of course, shifting our marketing message to focus on limitless possibilities and Barbie as a point of inspiration, we also transformed the product line dramatically, and that takes more time. We were able to turn on the marketing message sooner than we could affect the physical product. With the physical product, we added massive diversity to the line. Today, Barbie is the most diverse doll line in the world.
Wow.
Different body types, different ethnicities, different abilities.
A reflection of true reality.
A reflection of true reality. And, that took time to iterate, and we're still adding more to the line. We are really, taking that calling seriously. And then many other things that we've done over the years to make Barbie a positive role model, to get us to where we were, as you said, in our peak year of 2021, where we were the #1 doll, but also the #1 toy in the world.
Which is extraordinary. After 60 years or 65 years.
Yes.
What an incredible accomplishment it is. And you have done something called the Barbie Dream Gap Project. Would you just elaborate it a little bit?
Yes, well, as part of the brand transformation, over these past 8+ years, we felt that it was important that Barbie, with the North Star being around female empowerment, that we backed that up with a social mission initiative. We did some research partnering with a researcher actually at NYU who observed, about 7 years ago that starting at the age of 5 or 6, girls in particular start losing confidence in their abilities and their capabilities and start seeing themselves as maybe less competent than boys. And so obviously that was upsetting to us. And we wanted to learn more and understand, well, how do you mitigate that? How do you close that gap? So we created an initiative to even the playing field for girls and to raise consciousness around this dream gap issue. And we work with a lot of partners around the world, different organizations that work directly with girls, whether it's Girls Who Code, whether it's helping girls learn about finance, all sorts of organizations that help girls believe in their own capabilities, leadership, etc. We've been a proud supporter of. And today, I think our latest number is we've impacted over 25 million girls with the Dream Gap Project.
Congratulations. That's profoundly meaningful, profoundly meaningful.
Thank you.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
I have been in many industries before, but not in toy industry. I love toys, and I love indulging my friends' daughters or granddaughters or grandsons, giving them toys and playing with them and so on. What is unique about marketing in the toy industry?
It's obviously a very fun, emotionally charged category to market because most of us grew up playing with toys. Some of us still play with toys or we collect toys, but we have an emotional connection to the toys and the brands that we played with. So that's very rewarding and satisfying, that emotional charge that you get when you pick up something physical and you have a memory of nostalgia and wonderful times playing as a kid. But what's unique about this business and what's actually more complex than meets the eye is that we have many constituents and audiences that we need to think about. We need to think about the core user, which in most instances is a child. Mm-hmm. We need to think about marketing, though, at the same time to the shopper, who's typically a parent or an adult in that child's life. And now we're seeing an exciting trend with adult collecting and people and fans making self-purchases. So that's a third audience that we have to think about.
So this is grown-up adults who are collecting these dolls just as a hobby.
Yes.
Fascinating.
Yes. So we have 3 audiences that we need to think about. You've got to then think about stretching that media budget accordingly and prioritizing. Right. But ultimately, what I would also say about toys, which people don't necessarily think about, is that it's a fashion trend business. This is a business that has low barriers of entry. Hot toys can come from anywhere and can take off. And so it's really important to be constantly innovating and reinventing even legacy brands like Barbie.
And innovate Barbie did. After spending years developing a feature film, Mattel and Warner Brothers released the Barbie movie in theaters on July 21, 2023 in the US. Now, a company like Disney starts typically producing a fantastic movie, and then that equity flows into the products, the toys. You have put that on its head. You flipped it completely. You had an existing property, and you took it to the film world. How did this work, and just give a little bit of insight into your thinking on this?
We see our toy brands as IP, and in fact, we believe Mattel has one of the strongest catalogs of IP in the broader industry, inclusive of the entertainment industry. And yes, our brands originate in physical toys, which is really interesting. So to your point, we think about how do we extend and expand the audience for those brands, and how do we create deeper connections and deeper engagement. And with the Barbie movie, for example, we have a history of storytelling with Barbie. We've created animated movies targeted to kids for decades. But we had never taken Barbie to the big screen and brought her to life in live action. And it was something that we had entertained, discussed, met with various folks for creative takes throughout the years. But it really wasn't until Anand Kreese joined our company as our CEO and comes from an entertainment background that he really helped accelerate conversations, in this instance with Warner Brothers. And from there, we got the right talent with Margot Robbie as a producing partner and certainly the star, but also Greta Gerwig as screenplay writer and director. And when we found that combination, as well as an incredible cast and many other amazing filmmakers attached to the project, we knew we had a story that we were finally ready to tell.
The film smashed box office records and became the highest grossing release of the year, earning $1.4 billion worldwide by year end. Barbie became Warner Brothers' highest earning global release ever, unseating 2011's Harry Potter and the Deathly Hallows Part 2. Greta Gerwig also made Hollywood history by becoming the first solo female director to have a movie hit $1 billion. Barbie broke all kinds of box office records, and some of the numbers behind, at least from what I have seen in the press, are pretty mind-boggling, absolutely. Yes. And not only that, beyond the numbers, there was also a lot of these cultural ripple effects. Can you talk about these?
Well, we worked on this film for almost 6 years, so this was a long time in the making. And certainly the pandemics happened in the middle of all that. We had lots of time to think about the marketing activation and the surround sound that we wanted to create. I mean, we wanted to paint the world pink, and obviously we wanted to have a giant sort of play date with the world, as well as have everyone recontextualize Barbie as we sort of look to the future. So we had time to think through all of that. But nonetheless, timing is everything. And we were very fortunate to, frankly, be coming out of the pandemic when the movie marketing started to hit. Fashion runways were leaning into the color pink. Interior design was leaning into the color pink. That trend got named Barbie Core.
Wow.
It could have been Pink Core.
Right.
But it was named Barbie Core because there was that obvious connection between our brand and the color pink. And so that was something that we immediately, jumped on and tried to amplify however we could in social and so forth. And then the first look pictures started to come out and leak from the movie, and the fandom started to build. And by the time we got to the summer of 2023, the world was ready to party. Everyone wanted a reason to convene and to celebrate and have conversation and build community. And that's exactly what happened with the movie.
Yeah, I think what's fascinating is it's not only a success as a movie, but the marketing behind that is also equally a huge success. And you don't have any previous experience marketing movies, did you?
No.
So how did you sort of cross that bridge and got into a completely new sphere of what does it take to market a new movie? And extending brand is one thing. That's terrific, actually, in itself. But if you're getting into different industries altogether, it's not just about brand extension, but it's also about new ways of marketing that would not dilute in any way of your core marketing, yet it extends the success in the new domains.
Yeah, it absolutely was a new muscle for me, for sure. I will share that, again, when Anand became the chairman of Mattel and CEO, he did establish a legitimate Mattel film division. And so we hired a colleague of mine, an amazing woman, Robbie Brenner, to run Mattel Films. So right out of the gate, Robbie and I had a great partnership where, she absolutely knows about movie making and how to surprise and delight audiences. We knew we wanted a bigger 4-quadrant film. This was not going to be a kid's movie. And I know the Barbie brand. And so we worked very complementary together as we provided notes and, did immersions and so forth for the filmmakers. When it came to marketing, of course, I worked very closely with the Warner Brothers studio marketing team, Josh Goldstein. I'll never forget having lunch with him on the Warner Brothers lot. And right out of the gate, he was basically sharing, you're going to start getting uncomfortable because there's some things that we want to do to be provocative, especially when we think about teasing the film. And so the film marketing strategy was absolutely more adult targeted, and it was intended to make sure that, we got a broad audience and that people that thought they knew what the movie was would be completely surprised. But to do that, there was some messaging that he and Greta, of course, put forth. And I'll never forget, in one of the first trailers, the line in the trailer was, if you love Barbie, this movie is for you. And if you hate Barbie, this movie is for you.
True.
Well, as a marketer, as a brand steward, why would I ever feel comfortable
saying if you hate
the brand?
Exactly.
Why would I ever put that out there? So we had a lot of discussion and debate, but of course I got there. And it was all about trusting these incredible creative partners, appreciating their expertise, and participating and collaborating, but also, recognizing that they helped us reach sort of new heights that we didn't know were possible.
But you also had 100+ partnerships, I understand, right? The key thing is when you're particularly looking at multiple industries targeting at once, and you're crossing over from your traditional domain, so to speak, these partnerships are vital. And you have got more than 100 partnerships in this whole space. Talk a little bit about that.
Well, that was also, as I mentioned, an important initiative of ours. Is we wanted Barbie to be omnipresent, and we wanted to show up in as many unexpected places as possible, as well as expected places. We wanted to fuel fandom beyond our core kid audience, and so we thought very differently about the partnership approach than maybe we've done in past years. We ended up working with over 165 partners around the world in almost every category you can imagine, from apparel to wall coverings to luggage to inline skates, beauty, and so forth. We were in over 500 million retail doors around the world. And we thought about brands that we either had a shared mission with, we worked with some female founder brands, or we looked at brands that just were leaders in their space. But we were choiceful. There were absolutely some brands that we didn't work with, even though it does feel like we had casted a wide net.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Shopping, working, and relaxing online can attract various digital threats. To improve your protection against them, just turn on NordVPN. This cybersecurity app will block web trackers and malware-infected sites. It will also encrypt your internet traffic without losing a smooth connection. Get the deal now. NordVPN, cybersecurity built for every day.
Barbie is, of course, a gigantic brand now, and it's one of the many, many properties that Mattel has. Do you have similar plans for the whole bunch of other assets that you have?
Yes, we do, and so many learnings from the Barbie movie. But we're really excited about the future when we think about the strength of our brands or our IP. Hot Wheels is a great example. Hot Wheels is all about inspiring that challenger spirit inside of every kid. What it's most known for is racing and the little die-cast vehicle that's very accessibly priced. So interestingly, Hot Wheels is very ubiquitous. It's around the world. We have even more, I would say, say, penetration of Hot Wheels units than Barbie doll units, around the world just because of the price point. But we are thinking about Hot Wheels, of course, as a franchise. And we've got a really successful tour that's been in the works now for about 6+ years called the Hot Wheels Legends Tour, where we invite fans of car culture to bring their actual cars that they view as hot wheels to events. And we have judges look at these tricked out cars, and ultimately they choose a winner of these events. And the winner's car gets immortalized into a die-cast toy, which is really fun. Of course, the irony is that our die-cast cars are also inspired by, all these other real-life cars. So we kind of, again, go back and forth. But Hot Wheels is doing really well also in digital gaming. Again, the racing play pattern naturally translates to digital games, console, mobile, etc. And, we do have a Hot Wheels theatrical in the works.
So you're taking some of those successful initiatives and moving it across to your other properties as well?
Yes.
Now, we have seen a bunch of announcements about other cinematic releases that are going to happen with your properties, other properties, right? Do you see any challenges now that you have set such a high bar for yourself, which is not easy to reach or cross? And how do you see about you'll bring the successful learnings from this to really take it to as high as where Barbie is today?
Well, I'm really excited about Masters of the Universe, which we've announced. That will be coming to theaters in June of 2026.
Okay.
But we're very excited to see what that does to the franchise. It's an opportunity to reinvigorate the franchise. It's an origin story. And again, taking a lot of learnings from Barbie. But what's exciting is that because of the Barbie movie, not only do we have a ton of incoming interest,
not surprisingly,
to partner with us and to tap into our catalog of IP, but also I think a lot of these creators are wanting to also challenge maybe their way in to some of these brands and stories. Everyone, I think, is being pushed to think even more broadly, think even, more unexpectedly. Robbie Brenner, who runs our film division, is about creating great stories that connect with audiences and build fandom for our brands. But not every film is going to be the size, the magnitude, or even have the budget of a Barbie, and that's okay. We're looking at all different types of collaborations and executions. But the primary goal is to put great storytelling out there, and if we, again, accelerate other product purchases and, create that deeper fan engagement, that's a big plus.
Has the company changed as a result of the success of Barbie?
I would say yes. We've had for about 5+ years an approach to brand management called the Mattel Playbook, which is driven by 4 pillars. Brand purpose, which we talked a little bit about. So all of our brands are focused on, why they matter, what's that intrinsic value that they bring to consumers. Cultural relevance is another really important driving force for us. How do we stay connected to culture? How do we ensure that many of our brands that are decades old are timeless, but also timely? I would say 2 shifts that we've made recently in that playbook approach has been we now operate with a franchise mindset. So we think about our toys and any one category as brands, but also ideas. We think about how do we translate these ideas to experiences, to other categories? How do we stretch our audience? And then relentless focus on the consumer. We've always been very consumer-oriented. We've always been a design-led organization, but we now are really honing in on consumer, audience, and fan in an even more surgical way than before.
So, Lisa, in all the marketing successes that I have seen in the recent past, your company certainly stands out beautifully. And Barbie is not just going to be a flash in the pan. Even if it was a gigantic splash in the pan, but I think you'll have immense success, and I wish you the very best of luck. And thank you so very much. Much appreciated.
Pleasure. Thanks for coming in.
Thank you.
right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is a trillion-dollar game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Shopping, working, and relaxing online can attract various digital threats. To improve your protection against them, just turn on NordVPN. This cybersecurity app will block web trackers and malware-infected sites. It will also encrypt your internet traffic without losing a smooth connection. Get the deal now. NordVPN, cybersecurity built for every day.
The future of trading is here on Robinhood. Purpose-built for how you trade. With new ways to execute your strategies and analyze, buy, and sell. Seamlessly trade stocks, options, crypto, and futures in one place.
It's 12:30 p.m. here in Singapore, 8:30 a.m. in Dubai, and 5:30 a.m. in London. I'm Avril Hong with your headlines. President Trump has signed a proclamation that bans individuals from a dozen countries from entering the U.S., reinstating one of the most controversial and defining measures from his first term. The move comes after an attack in Boulder, Colorado, that targeted a march in support of Israeli hostages. The second-term travel ban covers countries including Afghanistan, Myanmar, Iran, and Yemen. The measure also partially limits entry of people from Burundi, Cuba, Laos, Sierra Leone, Togo, Turkmenistan, and Venezuela. President Trump says Vladimir Putin has warned him that Moscow plans to retaliate against Ukraine following recent drone strikes deep inside Russian territory. Trump and Putin spoke for over an hour on Wednesday as U.S. efforts to broker a peace deal show signs of stalling. The two leaders also discussed Putin's potential role in ongoing U.S. nuclear negotiations with Iran. Now let's check in on how markets are faring across the Asia Pacific. The big thing we were watching today were the auctions of Japanese government bonds, the 30-year, the continued concerns of the long end filtering through into weak demand from JGBs. Based on the results of this particular auction, that's weighing not just on the bonds that are looking fairly resilient, all things considered, but also on the stocks as well as the Japanese currency. The other thing that we've been watching out of Japan, and indeed for a lot of these automakers globally, is their access to rare earths, and we're since hearing that the likes of Suzuki is halting its Swift production. That is the Swift model production. More news ahead. This is Bloomberg.
I must admit, I have not always been a Formula One fan. Cars just zipping past, and then you wait around for the action to come back. Where is the fun in that? But when I finally turned on the Netflix series Drive to Survive, I caught the bug.
It's the speed, it's the technology, it's the cars, it's the drivers, it's the race car.
It's the politics, definitely a soap opera.
The docuseries, along with the myriad of other marketing initiatives, saw Formula One's numbers improve in North America over the last few years. But while the sport might have a new legion of fans, many of its racing teams go back decades. McLaren Racing is one of these teams. From its first race in 1966 to today's star drivers and high-tech cars, McLaren Racing is a true innovator in motorsports marketing.
Our sport is a sport on the field and off the field, and then you have technology that's woven throughout it, and then embracing technology and understanding how it works to have this very intimate connection.
I am Raja Rajamannar, Chief Marketing and Communications Officer of MasterCard and a best-selling author writing about our industry's future. Marketing as we practice today was founded on theories and principles from more than 6 decades ago, long before the advent of the internet, social media, or artificial intelligence. I have had a front row seat as new technologies, cultural shifts, and an explosion of data have disrupted the ways of traditional marketing. To connect with the savvy consumers of tomorrow, marketing as we know it must take a quantum leap forward. This is Quantum Marketing. McLaren Racing was founded by Bruce McLaren in 1963. Today, the team competes in several races, including IndyCar, electric car races, Formula E and Extreme E, and esports. And of course, they're one of the top teams in Formula One. Zak Brown, the CEO of McLaren Racing, has a background in both racing and marketing. I was fascinated to learn more about what it is like to lead a world-class racing team.
You know, in fact, I must admit straight out of the door that I have not been in F1 till about maybe 9 months back. I started getting involved a little bit watching the Netflix series, binge watching literally, and reading about it and so on, and the bug had bitten me. Now I'm spending a lot of time following F1, the drivers, the teams, and actually getting passionate about it, which is pretty fascinating.
It's great to hear it. I can't tell you how many times I've heard, and I think we got to give a lot of credit to Netflix, people that didn't follow Formula One that have gone from, I never followed it, to avid fans. And it's been an amazing journey. I hear that often from North America, which Formula One wasn't that popular, and I hear it from a lot of women, a lot of youth. So it's brought in great new fans such as yourself all around the world, and it's been wonderful for our sport.
You know, this is one of the most iconic brands, and now what, you're 60 years old as a brand?
Yep.
Even after 60 years, it is still at the top of its game. Now, in a world where brands are they go up and down pretty quickly, the cycles are much shorter, 60 years is several lifetimes. Can you share something about the founder of the company, Bruce McLaren himself?
He was a racing driver, team owner. He was a designer, an engineer, very aspirational, and I think a bit of a marketeer. If we go back to how we became Papaya, that was Bruce McLaren's idea. He wanted in a black and white era for the car to be more noticeable. So he actually painted it Papaya because he wanted it to stand out in black and white television because it kind of reflected differently than other colors. So I think Bruce was very well-rounded, a Grand Prix winner, won Le Mans, so a proper racing driver. And so he founded the racing team in 1963, passed away at Goodwood in an accident in June in 1970. It's his legacy and his inspiration that drives us forward to this day, and I think very much what McLaren stands for today is what it stood for 60 years ago with Bruce McLaren pioneering, engineering, racers, marketeers, and just a real passion for motorsports.
McLaren's popularity and success hit a high point in the 1980s with the rise of Brazilian racing superstar Ayrton Senna.
Who was Ayrton Senna? If you know, you know. But if you don't, he was the Babe Ruth of our sport. A total legend, icon, three-time world champion, won all his 3 championships with McLaren, and he unfortunately was tragically killed in Imola, Italy, in 1994. May 1st, I remember it like it was yesterday. Very passionate Brazilian legend of our sport, and sorely missed by all of our fans. What we did this year was his 30-year anniversary of his passing, so we celebrated Ayrton Senna. This is his helmet here, very iconic colors. So we actually painted our racing car this year at Monaco Grand Prix, where we finished 2nd and 4th, both cars in Senna's livery. And it was the largest ever livery takeover campaign, so we changed the identity of our entire car, and the fans went nuts. And everyone in Brazil, which is a huge market for Formula One, was so appreciative.
Now, during the days of Senna, McLaren was riding extremely high. I think down the period of time after his passing away, there has been a little bit of a slowdown, so to speak. And you have joined at a time when I think the transition happened, that Liberty Media has bought F1, and you came into McLaren around the same time. And if I remember right, prior to that, you're running your own marketing agency, right?
Correct.
So you're a marketer, quintessentially at heart and in spirit, and you joined to take over a highly technical, technologically sophisticated, data-intensive organization.
So my background, obviously, I used to race professionally, and then when I stopped, I created a motorsports marketing company. I always had a big passion for kind of marketing, fan engagement. I've never really been super technical. I still am not, just don't tell that many people. And so what I was used to was racing, that I felt comfortable with. Running an organization of 1,300 people, I was comfortable with, because that was the size of my marketing organization. I was comfortable with the commercial side of the sport. So when I joined, we were 9th in the championship. It was the worst year in the history of McLaren. Our corporate partnerships were at a record low. Our morale was at a record low. Our fans were pretty upset with us. It was not a good environment, but I saw that all as opportunity, that it could kind of only go one way. So to come to marketing, the first thing I felt I could do to help the team was rebuild the commercial side of the sport of our racing team, because I knew if I could do that, I could bring in resources to let the technical team get a new wind tunnel, new CFD, new manufacturing facility, because we had fallen behind in technology. So I immediately went to where I was most comfortable, which was making a commercial difference. I knew that McLaren was this mega brand, mega team that made it easier to bring in partners and share with them the vision of where we were going. Started doing that, which then made the technical team happy, because I was starting to give them more toys to work with. It took some time, but I believe sport and the world is all about momentum, and I needed to reverse this downward momentum and get the kind of the snowball picking up pace going the other way. And you know, I've been here now 8 years. The first 2 years felt like 8 years, and this 8 years now feels like 2 years, because now it's fun, and we're winning races on a regular basis.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Now, taking a little bit of a different tack, you got 2 companies. You got the racing company and you got the car company. How do they both coexist and feed into each other, and to sort of, be symbiotic in terms of adding back to the brand and also deriving back from the brand?
Absolutely. So our automotive company, it was interesting, Ferrari built road cars to go racing way back when. We're a racing team that has now built road cars. And, we're all about technology. We're all about innovation. So when you buy a supercar, you buy them for different reasons. A McLaren, you're buying for the technology and the forward thinking. And there's a real passion between our automotive customer base who love our Formula One team, and then our Formula One team, not everyone can afford a McLaren, but it's very aspirational. So we work very closely together. We leverage our kind of dealer network to talk to our high-end customers. And so we're very much collaborating. You'll very rarely see a McLaren road car without a Formula One car next to it, and vice versa, because we do share a brand. We're two separate companies with common ownership, but the businesses are different. But I think we have a lot of commonality in how we bring our brand to market, how we engage with our fans, and our drivers love them.
McLaren's skill at building high-performance cars is critical to the racing team's success. Roaring around hairpin turns at 200 miles an hour requires precision engineering and technology, both inside and outside the vehicle.
Definitely the most technically sophisticated sport in the world. So from a racing point of view, we're running 50 million simulations over a race weekend. We're pulling down 1.5 terabytes of data, 300 sensors on the race car. There's nothing going on that race car at any time that we don't know exactly what's going on.
It came as such a big surprise to me when I started getting into this space. The engineering apparently is as sophisticated as rocket engineering.
Oh, yeah.
And I think the good thing or the great thing that particularly McLaren is doing seems to be how you are taking those into the field of marketing. Whether it is the data analytics and the sophistication, the impact is absolutely unimaginably huge. Yeah. And very excited, particularly, being the data nerd that I am, the possibilities of what you can do with this is fantastic.
I think with our fans, we can understand what part of our sport gets you most excited, and then that's where you can start using things like AI and start feeding to you what do you want to see when you're watching a Formula One race. Might be different than what I want to see when I'm watching a Formula One race. So we can now have fans that have all these different tablets up that they're watching the TV broadcast, but then they're on their tablet consuming some specific data, and they're on another tablet watching in-car cameras and data, and they're actually able to really kind of understand how the whole sport is working.
One of the recent innovations that I have come across in the context of Formula One and the racing is your digital advertising panels on the car as well as on the helmet of the driver. Can you talk about that? I found it pretty fascinating.
Yeah, so we were the first to do it. We've had a couple people copy it, which I think is always flattering. And so we have on a couple parts of our car where literally one brand one moment and another brand the next moment, or a message from that brand. And it captures your eye because you're watching the broadcast and it's an in-car camera, and all of a sudden you see this logo change, and so it draws your attention to it. It weighs a little bit more, so it's something that we run at some circuits and not others, because we're all about weight management in the racing car. But that was new and pioneering for Formula One, and something that we're glad that we were able to lead the charge in.
Do you see a future where the whole car will become a digital screen in future?
I don't think with how technology is going you can rule anything out.
While technology can open up new avenues for marketing, there is no substitute for gripping storytelling. Netflix Drive to Survive has taken a sport once seen as insular and exclusive and opened up its inner workings to a mass audience. US-based Liberty Media, which acquired Formula One for $4.4 billion in 2017, developed the show in hopes of attracting new fans with high-speed action and behind-the-scenes drama.
I think what Liberty saw when they acquired the sport was, here's the world's largest annual sport. Only the Olympics and the World Cup, which aren't annual, have the same size and scale. And a sport that hadn't really focused on the fan or showed kind of what goes on kind of behind the curtain. What's the Wizard of Oz really look like? We were behind times on digital marketing, so they felt like here's this huge opportunity that if we bring some marketing and modern day capabilities to it, should take off. The first year, 2 teams didn't participate because they were stuck in the kind of older mindset of the sport. And I don't mean that from an age standpoint, I mean that from how the sport worked, which is, you're not paying us enough. We want a disproportionate amount of the money versus everyone else. It's, intrusive. I was like, no, this is about the fan. And by the way, now everyone's in and they participate as much as anyone else. Our sport is so vibrant and fast and loud and violent, crashes and things of that nature. And then the whole political side, which Netflix was able to show, because they actually concentrate a little bit less about what happens on the racetrack. If you want to see what happens on the racetrack, tune into TV. But if you want to see what's going on behind the scenes and how the mechanics of the sports work, it's been fascinating. So they've been wonderful for our sport. It's been wonderful for Netflix. We're now entering our 7th season, and every season has been bigger than the previous season.
I think it's one of the boldest initiatives because it does require a lot of courage to sort of bear things in front of the camera or in front of the mic and say this is how it's going to be, which is amazing.
It's brought in North America, it's brought in women, it's brought in youth. I now have more comments from people that come up to me on the street, and it'll be a dad, a brother, a husband, and they'll go, my daughter, she loves Lando, she loves McLaren. It's like, and it's brought in that audience that Formula One needed to grow.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
The future of trading is here on Robinhood. Purpose-built for how you trade. With new ways to execute your strategies. And analyze, buy, and sell. Seamlessly trade stocks, options, crypto, and futures in one place.
Between 2019 and 2022, Nielsen found that Formula One's American audience grew about 10%, coinciding with a rise in viewership for Drive to Survive. So it's likely that the sports forays into new kinds of media are indeed having some impact. But the heart of sports marketing is experiential, the thrill of the live game. And so much of that experience comes down to the athletes themselves.
The race is essentially all about the drivers.
That's what the drivers would like to think.
As they should, actually, right? You have got 2 top-notch drivers. These are like not just your brand ambassadors, but in some sense, they're your product. A driver typically loses weight to the tune of 5 to 8 pounds during the course of one race of about 2.5 hours. Which is unbelievable. So this is a high-performing product with a tremendous amount of resilience. If you were to look at the drivers as a product in that sense, how do you go about managing your products?
It's interesting. On the physicality side, I think the sport needs to do a better job of communicating what athletes these drivers are. Some of the best athletes in the world who have to be highly intelligent because you need to understand strategy, what's going on with the car, how to make the car better so they're not just driving fast, but they're kind of mini engineers themselves. And then, they're driving 200 miles an hour. They're battling with other drivers. It's kind of life or death, very gladiatorial. Meanwhile, they have over 300 different adjustments they can make on the steering wheel. They're listening to engineers. We are doing real questions. We're doing fake questions because all the teams are allowed to listen to each other. It's kind of like the third base coach at a baseball game is doing all these signs, but when he touches his hat, the next sign counts. But until he touches his hat, so we do that verbally. So if we say to Oscar, how are your tires? That could be that is a real question. If we say to Oscar, anything we say after tires, if we say anything, it's a bogus question. Oscar, how are your tires doing? And what we're trying to do is we then want him to give us a fake answer back. So all our competitors who are trying to figure out when we might make a pit stop are thrown off. So, if Oscar, how are your tires doing? Bogus question. We want them to go, I don't think I can last much longer. And then the other teams, McLaren might be getting ready for a pit stop, and they start building their strategy around what we're doing. So high performance sports are the first on the list that they won't get to number 2 on the list is, do we think they're capable of being world champions? Criteria 2, are they good guys? What are they like as quality individuals? How are they going to react under pressure? How are they going to be as teammates? How well do they communicate? Because the driver is the quarterback of the team. They have to be great with our partners and our fans, because our partners and our fans are an integral part of our racing team. So we need drivers that recognize that the fans are the lifeblood of kind of what we do.
You don't want these drivers to just be fantastic drivers, but they should also have the savvy to be able to make the consumers and the fans feel special.
While we're doing that, we'll be delivering Coke Zero Sugar to our customers. So you ready? I'm ready. It's not a race. Not a race. No, I'm driving.
Gone are the days of advertising-led marketing strategies. It's all about experiences-led marketing strategies. In the context of F1, some of the biggest experiences are curated by interactions or through interactions with the drivers. So that's a very, very important part. Can you talk a little bit about the kind of experiences that are brought to life in the context of F1, and that as a team, what kind of experiences you would give, and how does that impact the perceptions of people who are going through those experiences?
It's, I think, Formula One and motor racing for that matter is such a visceral experience when you're on site. The grid at the start of the race is chaos. It's celebrities, it's media, it's sponsors. It's almost like being on the football field during kickoff of the Super Bowl. So we're able to bring our partners or consumers who have maybe won sponsor competition, things of that nature, on the grid to be on the field at the start of the race. Then we bring people inside our garage, and that's like literally sitting on the bench during the game, because the whole team's around you, all the technology is everywhere, you're listening on the radio.
So in fact, I have been very fortunate to have had such an experience. And when I think about it, what is the advertising equivalence? Even a zillion ads won't make me feel that way. And that to me was once again a striking validation that experiences matter so much, and they can leave you so profoundly moved or touched or inspired that I think this is the way forward in terms of experiential marketing being the lead.
I think the world now, it's shifted, hasn't it, from awareness, which is kind of advertising, to engagement. And that's all about experiences, whether that's live or digital. I'm experiencing something, I can feel it. And that's where I think the passion comes out. And then that passion creates the loyalty, which creates the following, which creates the repeat business, if you'd like.
In fact, the term that I keep using is classical advertising is all about storytelling. But experiential marketing is all about story making.
Yeah.
You're immersed, you're a part of it, and that's what really leaves you with long-term memories that influence your future decisions.
Yeah, 100%.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
The future of trading is here on Robinhood. Purpose-built for how you trade. With new ways to execute your strategies and analyze, buy, and sell. Seamlessly trade stocks, options, crypto, and futures in one place.
For you, it's more than a bank transaction. It's landing your first fundraise. Or maybe it's payroll for your crew. So why doesn't banking do more? What if it was cutting-edge software that acted as a platform for your ambition? The truth is banking can do more. That's why over 200,000 entrepreneurs love Mercury. Because we bring all the ways you use money into a single product that feels extraordinary to use. So you can do more.
I need you to trust me. One last time.
Rated PG-13.
Good morning, this is Bloomberg Daybreak Europe. Happy Thursday, everyone. I'm Tom McKenzie in London. These are the stories that set your agenda. Treasury yields hit a one-month low as a gauge of US services enters contraction, fueling bets the Fed will reduce rates at least twice this year. Trump's travel ban is back. This time, the president bars people from 12 countries from entering the US. And he warns Vladimir Putin has told him retaliation is coming for Ukraine's recent drone strikes. Plus, how low will Lagarde go with ECB widely expected to cut rates for an 8th time today? Investors focus on the path ahead. With global stocks then at a record high. Yes, a record high on one of the gauges of global stocks. European and US futures now looking for direction. Maybe it's non-farm payrolls that come out on Friday. European futures currently flat after 3 straight days of gains for both European and US stocks. Here in the UK, FTSE 100 futures just pointing a little lower by about 0.1%. Recent days have seen some strength for UK equities. S&P futures stateside then after modest gains yesterday, also range-bound. NASDAQ 100 futures pointing lower by 0.1%. Let's flip the board and have a look cross-asset. We do, of course, have that ECB decision later today, almost fully expected to cut again by 25 basis points to 2% for the ECB. The direction of travel from here, though, is the question, of course, and any updates in terms of the guidance and the framework from Christine Lagarde later today. We have Lizzie Burden on the ground for us for that story. 4.35 right now on the 10-year. Services data coming in softer than expected, and hiring as well in terms of the private payrolls coming in weaker, and that led to a rally in bonds and treasury stateside yields lower. Currently 4.35 on the benchmark. Euro dollar at 1.14. Markets now pricing in a little over 2 cuts, by the way, for the Federal Reserve by the end of this year. $64 a barrel on Brent. Gold a little softer by 0.1% on the yellow metal. Let's cross over to Asia right now. A really consequential day once again when it comes to the bond auctions of Japan. Avra Hong standing by in Singapore.
Yeah, Tom, that is the key focus for markets in this part of the world today, that JGB auction for 30 years, which I'll get to and unpack in just a bit. But just looking at the read across the rest of the region, it's mostly risk off ahead of the U.S. payrolls amid the lack of a phone call between Trump and Xi. Yes, we did see some pickup in Chinese services activity from a private survey, but keep in mind that some of the holiday spending indicators paint a more worrying picture. So yes, Chinese stocks are down, but you can see that there's mostly risk-off across the region, including in Japan, where stocks extended losses, as did the Japanese currency, following that poor showing from the JGB 30-year auction. Just one other thing to highlight when it comes to stocks in Japan as well. We are watching out for these signs of how the trade fight involving rare earths seems to have increasingly been involving these automakers, and now it seems like they are getting hit. We had the likes of Suzuki that showed that, you know, they might be halting production of one of their models, the Swift models. The JGB auction, in terms of the bid to cover ratio or the demand gauges, we actually saw it not just lower than the 12-month average, it was also lower since late 2023. So a poor showing all round, but keep in mind this is also following on from pretty weak demand and concerning demand from the 20 and 40-year auction. So maybe traders were already bracing for the worst and might go some way in explaining what we're seeing in the secondary market. For the board, take a look at JGBs. They seem to be staging a relief rally, maybe partially to do with the move in treasuries overnight as well. But also think about the bigger picture here, because the BOJ meeting comes up in less than 2 weeks from now. Maybe Japanese bond traders are heaving a sigh of relief that they don't have to contend with yet another long-term auction between now and then. So we're also seeing that firmness when it comes to Japanese bond futures. Tom.
Okay, yeah, as you say, despite the weaker than expected take-up of those 30-year bonds in terms of the bid-to-cover ratio. Avril Hong in Singapore, thank you very much indeed, with the check, of course, on the Asian markets and that bond auction on the 30-year in Japan as we look ahead to the BOJ in 2 weeks' time. President Trump, meanwhile, announcing a travel ban affecting a dozen countries around the world, reinstating one of the most controversial and defining measures from his first term.
Very simply, we cannot have open migration from any country where we cannot safely and reliably vet and screen those who seek to enter the United States. That is why today I am signing a new executive order placing travel restrictions on countries including Yemen, Somalia, Haiti, Libya, and numerous others.
For more, let's bring in Bloomberg's Charlie Wells joining me around the desk. What details do we have then, Charlie, about this ban? It's been reheated, it's been revived, but with some minor differences from the first term.
So, Tom, ostensibly this is a response to an attack we saw in Boulder, Colorado over the weekend on an event for Israeli hostages. Now, it would apply directly to 12 countries, including Afghanistan, Iran, and Libya. There would also be a partial ban on individuals from countries including the likes of Cuba, of Venezuela, of Laos. And this is immediately going to call to mind that 2017 ban, which within days of coming into office, Trump enacted that initial travel ban from his first administration. If that is a guide for what could happen with this newest ban in Trump 2.0, we could see challenges in the courts, because that's what we saw with the first travel ban. And ultimately, Trump had to pare back a lot of that initial ban. But in a win for him in that first administration in 2018, the Supreme Court upheld basically the bones of the travel ban, which gave Trump a significant kind of hand in how he could manage immigration. And managing immigration is something that he really talked about on the campaign trail. And that is why this attack over the weekend is dangerous for him, because there has been the perception in American voters, whether or not this is accurate, that immigration has led to unsafety throughout the country. And so Trump can't have attacks like these on his watch. So you see him bringing in a measure like this. But if we're getting a through line from Washington in this and from a number of other developments, it's that a lot of these quick wins that Trump promised on the campaign trail aren't materializing. It's now June. He's been in office since January. So he's having to take some measures from that playbook from the first administration.
Okay, and you talk about quick wins, and he is also not getting any quick wins when he comes to his conversations with strongmen leaders, whether it's in China, Iran, or Russia. He had a conversation with Vladimir Putin, it seems, over the last 12 hours or so. It was a more than 1 hour conversation. What came out of that call between the two presidents?
Tom, not a lot from that call, particularly not a lot moving forward development insistence on bringing peace to that conflict in Ukraine. And again, this stands in conflict to the message that we heard on the campaign trail, which was effectively that all Trump was going to need to do was to get on the phone with Putin, engage with him in a direct way, in a way that the Biden administration, let's remember, had a very different playbook on, right? They tried to isolate Putin. They implemented a number of these sanctions that have come under criticism from the Trump administration. But what we're seeing here is that just getting on the phone with these strong men is not enough. And actually, what we saw in this call from yesterday was Trump effectively broadcasting a line that Putin has had about needing to respond to those attacks over the weekend. And those attacks over the weekend from Ukraine were hugely embarrassing for Russia. They were able to pose drone attacks deep within Russian territory as far as Siberia. And you effectively have the president repeating that line about Putin needing to respond to that.
And no sense, at least from the details that we have now, may come out, but no sense yet that President Trump pushed back on that threat from Putin. Meanwhile, domestic politics, and this has broader implications as well, coming to the fore with Elon Musk really going hard now. I mean, it's part of the story yesterday, but it's really doubled down, Elon Musk, in terms of his determination to kill this spending and tax bill that is being pushed and touted by the president himself.
We're just a few days from Musk departing his temporary role at Doge, and this feels like a very striking kind of 180 from being a part of the Trump administration to then encouraging Americans to kill this bill. And his concern, and a number of other Republicans, is that, you know, there is that $2.4 trillion price tag attached to this legislation. This is showing something of a growing divide within the Republican Party between the kind of deficit hawks on one side and more of these kind of Trump hardliners on another. And what I will just say here is that there really, as far as legislation goes, there's only downside risk, right? We're heading into the summer. We know the Trump administration has wanted this bill to be passed quickly, but if you have Musk, who has an enormous platform, calling on Americans to oppose this, to call their legal representatives to oppose this, that is dangerous for them. Now, one uplift that the administration got was a report from the nonpartisan Congressional Budget Office saying that Trump's tariffs, revenue from Trump's tariffs, would bring in $2.8 trillion. That is more than the cost of this tax bill. So that is something, that is a talking point we're likely to hear them talk about. But time, again, is really not on the president's side here, because he does not want to go into the summer with the sorts of opposition that we're seeing from Musk. And this just reminds me of 2009, when in the Obama administration, they were really early. They held that kind of trifecta across the U.S. government on the legislative branch and the executive branch. And they had all of these town halls with citizens talking about their opposition to Obamacare back then. That is not the sort of thing that the Trump administration wants on this big, beautiful bill.
Charlie Wells, thank you very much indeed on the news coming through from the Trump administration. The U.S. House Speaker, by the way, Mike Johnson, will be on surveillance later. Do not miss that conversation from 12:30 London time. Now, Treasuries rallied yesterday as weak U.S. services data adds to bets on 2 Fed cuts this year. Let's bring in Bloomberg's Valerie Teitel for the market reaction. Val, talk us through what the data showed us yesterday in terms of services, private jobs, and how the markets have readjusted to that.
Yeah, well, the biggest market reaction to those 2 weak data prints was a substantial rally in the Treasury market. Those 10-year yields hitting a 1-month low in yesterday's session at 435. We're pretty much holding on to that rally in the Asia session overnight. Over 2 days, 10-year yields have moved lower by 10 basis points. And to what you said about rate cuts, we're now pricing in the September Fed rate cut with a 90% certainty. So that did really cause a Treasury rally across the curve. 2-year yields, 10-year yields, even 30-year yields seeing around a 10 basis points rally. But let's get into that data, especially the ISM services unexpectedly contracting. It's now fallen into contraction for 4 times this year. And this was surprising to some, Tom, because I think there was a conception out there that the ISM services could maybe capture the positivity after that or initial China tariff delay that took place in mid-May. And this survey was done in the week after. So that kind of optimistic view that maybe we'd see an upside reading, really some cold water thrown on that. And we saw those ISM services unexpectedly contracting. We also got the ADP private payroll number. This this one had a really big missed by nearly 90K, and the reading was the lowest that we've seen in over 2 years. Now, there is some speculation that this is maybe adding to nervousness heading into the big Friday non-farm payroll print. That one's going to be the big one. Now, it's normally known that ADP and NFP don't normally correlate with each other, but it's definitely adding to the nerves out there. I do want to end on one thing, which is the equity market. The weak data did really little to budge the equity market yesterday. The S&P 500 just barely ended in the green, but we are still eyeing down that bull market from those April lows, up 19.8% from that day.
Yeah, the gains have been modest, but they've been there for the last 3 days, haven't they, in terms of US and European stocks. We'll see how the story unfolds today. Bloomberg's Valerie Teitel, thank you very much indeed on the data front and readjustments maybe to a softening US economy. Here's what else to think about today. 7 a.m. UK time, we're going to get German factory orders, so a touch there in terms of the strength or the weakness, in fact, of course, of the factory sector in Germany as it faces up to a weak domestic picture, but also, of course, the tariff impact. At 1:15 p.m. UK time, we get the ECB rate decision then, almost fully expected to cut again by 25 basis points to 2% on the main rate. And then we, of course, get Christine Lagarde's press conference as well, which will be scrutinised, and we will bring for you live, of course, through programming. And at 1:30 p.m. UK time, we get US initial jobless claims, building out the jobs picture and the labour market for the US as we head up to non-farm payrolls and the big jobs print on Friday. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. Coming up, the German Chancellor heads to Washington for talks with the US President. We're going to look ahead to their inaugural meeting. Plus, later we will be looking ahead to that ECB rate decision with Sabrina Khanish from Pictet Asset Management. We'll get her views on the positioning of the ECB and the outlook for the Eurozone economy. That's coming up. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
The future of trading is here on Robinhood. Purpose built for how you trade. With new ways to execute your strategies and analyze, buy, and sell. Seamlessly trade stocks, options, crypto, and futures in one place.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered the supplies he needed from Amazon Business.
Peter Piper picked peppers, but rhyme, Humpty Dumpty fell down. It's his hard time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
Who is the market for? It's for all of us. Because when you invest in ETFs from iShares, the market is yours.
Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise.
The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
American exceptionalism continues.
This is not what we're going to experience in the upcoming months.
Is it going to be Biden data or Trump data?
The May Jobs Report, Friday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. German Chancellor Friedrich Merz will meet President Trump in the White House later today. Merz has veered between boasting about common ground with Donald Trump to bemoaning the US president's volatility and even at points mocking his bravado. Now they will meet for the first time face to face. I'm joined now by Bloomberg's Michael Nienaber. Michael, what can we expect from this meeting? We've seen previous meetings, of course, in the White House between Ramaphosa and Zelensky that have arguably not got to script. What can we expect when it comes to the meeting between the German Chancellor and his US counterpart?
Yeah, good morning from Berlin. So when Merz meets Trump later today, I think it's fair to say it's so far the biggest foreign policy challenge for the new German Chancellor yet. He's been sworn into office less than a month ago, and so he has never met Trump in person before. So it's actually for Merz the chance to actually build the relationships if the meeting goes well. He hopes that this can be a starting point to tackle the various tricky topics that are on the agenda. Foremost trade. I mean, there's no other country that's more exposed to Trump's tariffs agenda than Germany, as one of the biggest exporters worldwide, obviously. But also on security, the United States want Europe and Germany in particular to hike defense spending. I mean, here the Chancellor actually has something to present. He can say we're on board with the new goal that NATO is likely to agree later this month by spending up to 5% of GDP. That's a huge increase, and Merz says we can do this. So that might pave the way and prepare the ground also to agree or at least lower the risk of more confrontation on trade and tariffs. But obviously the aides of Merz have briefed him he should prepare for anything. I mean, scenarios range from hearty handshakes like the French President Macron received to public beratings you just mentioned. Also, I mean, we all remember the encounter of the Ukrainian President Zelensky in the Oval Office. So the Chancellor is preparing for anything and hoping for the best.
And Michael, this isn't just about Germany's relationship with the US. This is also about the relationship between the EU and the US at a time, of course, of continued negotiations when it comes to trade and tariffs. So there is a broader read-through to the European Union story in terms of its relationship, Brussels and Washington, on the back of this visit, arguably.
Absolutely. I mean, it's a balancing act for Friedrich Merz here, obviously, when it comes to the most difficult topic, trade. He knows well that it's actually not his role to negotiate, and he has made this clear in phone calls with Donald Trump that he doesn't want to, and he can't do any side deals on a bilateral level, although this is the agenda actually of the US administration to try and do different side deals with single EU member states. But Merz and all German officials are pretty clear that they say we're trying to support the European Commission and Ursula von der Leyen in their efforts to agree on an ideally amicable solution in the really tricky and complicated trade conflict. But he will steer clear of trying to send the signal that Germany might depart from the overall strategy of the European Union. But obviously the meeting takes place in this wider context, not only in trade, but also, as I mentioned earlier, on security and higher defense spending. And Merz in the closed-door meeting with Trump will gauge the readiness of Trump to at least keep up some support also for Ukraine in military terms, because there were various signals that the Trump administration doesn't want to keep up the military support, at least not at the level that the Biden administration did in the past. So this means a higher burden, obviously, for the European allies and Germany in particular.
OK, Bloomberg's Michael Nienaber, thank you very much indeed. A closely watched encounter then later today between the German Chancellor and President Trump at the White House. Coming up, it is make or break for Nintendo as it launches its first major new hardware in more than 8 years. We're going to get the lowdown on the Switch 2 as lines are already forming outside shops in Japan. Stay with us. That's next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated.
We can do it.
Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning. Fantastic.
Meet Stello, the powerful glucose biosensor that reveals how food, exercise, and even sleep affect your glucose. Now, tracking your glucose is as easy as tracking the weather.
Welcome back to Bloomberg Daybreak Europe. Now, it was no ordinary Wednesday for gaming fans in New York. They spent the day waiting for the Nintendo Switch 2 to go on sale at midnight. The console is the first major piece of hardware released by the company in more than 8 years. With most of Nintendo's revenue tied to the console's success, the pressure is on to ensure another blockbuster. Bloomberg Originals takes a closer look.
It's hard to overstate how important the Switch is for Nintendo. Almost all of its revenue comes from this one product, or the exclusive games the company develops for it. Its popularity since 2017 has driven Nintendo's share price to an all-time high. And everything's riding on the Switch 2, keeping that trend going.
The stakes were very high.
Nintendo is at the most successful point in its history.
And here's why. The Nintendo DS, 154 million sold. The follow-up 3DS, 76 million. The Wii, 102 million sold. The follow-up Wii U, oh dear. And the Nintendo Switch, almost the best-selling console of all time, 152 million sold. No pressure then.
Switch 1 created a very high hurdle for the future consoles to surpass.
So Nintendo's breaking new ground with some very subtle shovels.
It's the first console in Nintendo's history that is kind of the same thing, but just a little bit bigger and a little bit better.
That strategy belies decades of corporate lessons learned sometimes the hardest way. But this time, the stakes are just too high for history to repeat itself.
Okay, subscribers can watch that documentary right now on the terminal and Bloomberg.com and on the Bloomberg Originals YouTube channel tomorrow. Staying with tech, Alphabet CEO says the tech giant is developing new products that will drive demand for more engineers. Speaking at the Bloomberg Tech Summit in San Francisco, Sundar Pichai told us more about how AI is changing the way the company works and the impact the company is seeing from the Trump administration.
In this particular moment, with the point of inflection around AI, I do think the next few years are critical from many aspects. So we are committed to engaging. We did that with the first Trump administration. We are committed to doing that. Look, around the world, we comply with laws and regulations in all the countries we operate in. Doesn't mean we agree with every aspect of everything.
Alphabet's Sundar Pichai speaking to Bloomberg's Elodie Chang at the Bloomberg Tech Summit. And there is special coverage from the summit today from 4 p.m. London time, live from San Francisco. Coming up, the ECB widely expected to cut interest rates again this afternoon. But what will they say about the path ahead? We discuss that with Sabrina Khanish from Pictet Asset Management. That's coming up next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Shopping, working, and relaxing online can attract various digital threats. To improve your protection against them, just turn on NordVPN. This cybersecurity app will block web trackers and malware-infected sites. It will also encrypt your internet traffic without losing a smooth connection. Get the deal now. NordVPN, cybersecurity built for every day.
Most hiring algorithms would scream me out.
Some bosses couldn't see me as a leader.
I've run this place for 20 years, but I still need to prove that I'm more than what you see on paper.
I've been running code as long as I've been able to reach a keyboard.
This is what I do. It's second nature for me, coordinating 100 details at once.
It's the way my mind works. I have a very mechanical brain.
I sold them on my skills.
You gotta be so good they can't ignore you.
My magic is
analytics and empathy. That's how I get clients. You have to have the confidence in yourself to show up and defy the odds.
I'm more than who I am on paper.
I never got a college degree. And today, I'm the CEO of my own company. People want to tell me I'm one in a million, when actually I'm one of millions. Stars are all around us. It's time for them to shine.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. Happy Thursday. These are the stories that set your agenda. Treasuries rally as a gauge of US services enters contraction, fueling bets on at least 2 rate cuts this year. We're going to bring you the latest as well from Frankfurt, where the ECB is set to lower its rates for an 8th time. Trump's travel ban is back. This time the president bars people from 12 countries from entering the US. And he warns Vladimir Putin has told him retaliation is coming for Ukraine's recent drone strikes. Plus, Musk on a mission. The Tesla CEO ramps up his attacks on Donald Trump's tax plans, urging lawmakers to kill the bill. Markets right now looking for direction after what was a softer set of data yesterday stateside, whether it's the services data or the private sector payrolls data or indeed the Fed's beige book, all pointing to signs of a cooling US economy. That led to readjustments across the Treasury curve. Today, Treasuries are largely unchanged. The action was yesterday. Yields were lower. Money was moving in to US Treasuries. Today, the focus on the ECB, of course. European stocks, again, looking for that direction. The ECB is expected to cut by 25 basis points to 2% on the baseline rate. FTSE 100 futures currently pointing lower by 0.1%. The context is you've had 3 straight days of modest gains for both European and US stocks. In fact, on a global gauge, you are close to record highs for global equities. S&P futures then also a little softer by 0.1%. Nasdaq 100 futures looking down by 32 points. Let's flip the board and have a look across asset. I mentioned the relative stability in the Treasury market after the rally in bonds yesterday. 436 right now in the benchmark 10-year. Euro dollar at 114. We'll see the adjustments there if they are on the back of the decision decision from the ECB and, of course, what we hear from Christine Lagarde. Brent trading just below $65 a barrel and gold dropping 0.2%. So the European Central Bank is set to lower interest rates for an 8th time as President Donald Trump's jolts to global trade lower the outlook for growth and inflation. Lizzie Burden joins us now for a preview from Frankfurt. What are we expecting then today, Lizzie? Could this be the last cut from the ECB, and how are those inflation dynamics shaping up?
It could be the last easy cut, Tom. It would be a huge surprise if the ECB doesn't cut rates by a quarter point today because, of course, the backdrop economically is on Tuesday. We got the latest euro area inflation data and it dropped to 1.9%, so below the ECB's 2% target, and also dropping at the core and services levels as well. And it comes down to the lower energy prices and the stronger euro against the dollar, all in the aftermath, of course, of President Donald Trump's so-called Liberation Day. But as you suggest, the outlook from here is where it gets cloudier, and that's why we're expecting, alongside the updated inflation and growth forecasts, a range of scenarios to account for all of the uncertainty ahead. Uncertainty in the short term on the tariff front. We just don't know whether the US is going to raise tariffs to 50% on July the 9th, and as you say, whether the EU is going to retaliate. We've got the German Chancellor Friedrich Merz over at the White House today trying to soften the relations, but it could go in the other way. We just don't know whether China is going to dump cheap goods on the euro area as well. And in the meantime, all of that uncertainty just putting a brake on investment and growth in the euro area. The other uncertainty, of course, is in the longer term about infrastructure and defence spending. Is it, going to create the boost to growth that everybody wants, or we need to wait for some more concrete details on that? Of course, we've got the NATO summit later this month, and President Trump pushing for other NATO members to spend 5% of GDP on defence. But until we get concrete details, it is a nightmare for the ECB to forecast that short term versus the long term in terms of the economic impact.
Yeah, and that obviously ties into the debate, doesn't it, amidst those members of the ECB around where to go beyond June. How has that debate evolved, Lizzie?
Well, the thing is, Tom, by July you'll have a lot more information. So, of course, we'll be past that 90-day tariff deadline. We'll also have 2 more inflation reports, 2 more PMI reports, and we'll have the 2025 German budget and the 2026 outline budget as well. So then the question becomes, do they follow up with today's cut in July, or do they wait until September? And most economists think that they will wait until September, but there's a clear argument against doing that. It comes down to communications, because the risk for President Christine Lagarde is that the market thinks this isn't a pause, it's actually the end of the rate cuts. And the ECB itself has said that they want to be a beacon of stability. They do not want to be adding surprises into an already volatile market environment. But the argument for waiting, of course, is that if you look at the latest consumer inflation expectations for the next year, they're at 3.1%, and that's the highest since last February. So it may be the case that actually the ECB needs to hike rates further out. So it makes the case for waiting and seeing. And I am sure that in the press conference today, President Lagarde is going to be keeping her cards very, very close to her chest when inevitably she's asked, are you going to follow up in July?
OK, Lizzie Burden at the ECB with that preview. And Lizzie will be on the ground for us, of course, throughout the day with that decision and the press conference from Christine Lagarde. With another view as well and some analysis, let's bring in Sabrina Kanish now, senior economist at Pictet Asset Management. I feel like Lizzie may have had an eye on your notes, Sabrina, because I'm taking this line out of the notes you sent over to us. We expect this will be the last easy rate cut, echoing what Lizzie Burden has been saying then in her head. For the ECB, the last easy rate cut for the ECB, what is the key factor that makes it more challenging from here?
I think I'm very much in line with what Lizzie just said. So the key downside risk remains trade, and it was highly highlighted by the ECB given the openness of the Eurozone economy. But at the same time, the reason why we expect this to be the last rate cut and the easy rate cut, as mentioned, we had an inflation report which clearly goes in the direction of the ECB. So with the rate cut being more in line with the ECB reaction function in terms of inflation. As said, it declined to 1.9% for the headline, 2.3% for core inflation. Services inflation, which was stuck close to 4%, finally eased to 3.2%, which is the lowest level since early 2022, although the momentum remains pretty high. But when we look at inflation drivers, so namely wages, we continue to see this wage normalization, which support the disinflationary trend. So on this front, I think there is no doubt about today. So the ECB will rate cut, but the question is, what about this meeting? So as said, so the key uncertainty is the trade. At the same time, when you look at Eurozone economy growth data, it's more resilient to shocks than it used to be. So growth surprised on the upside in Q1. So it's true that there is some front-loading of exports ahead of the US tariffs, but not only. If we look at the details of national releases, GDP, private demand has continued to be supportive. Another argument being the fact that private sector balance sheet remains pretty healthy. And we have also some upside risk coming from lower energy prices, which is supportive for consumers and company profitability.
Before we get to your views on the growth trajectory into 2026 for the Eurozone, just on inflation, can the ECB do a victory lap now, given what you've just outlined for us on inflation? Have they nailed it?
I think it's clearly going in the right direction. The inflation was mostly driven by services, which itself reflect higher wages. So that's why when you see wages going down, so now it is more consistent with inflation at 2%. Take the Indeed wage tracker for the month of April, it declined to 3.3%, so which is more in line with the 2% inflation target. So it is clearly going in the right direction. And again, if we look at the reaction function of the ECB, which is based on the underlying price pressure, the medium-term inflation outlook, the transmission of the monetary policy, so they all suggest that the ECB should cut rate. Now we know that the neutral rate estimated by the ECB is between 1.75% to 2.25%. So we might be slightly in expansionary zone if the ECB cuts to 2%. But overall, we should have reached the neutral level.
And to be clear, you think they cut today and then they hold? Or you think they cut and then they skip July and then they look again at September?
But based on the information we have today, given the fact that the economy is resilient to shocks, we think that this is the last cut. But obviously there is downside risk. As Lizzie mentioned, we are in an uncertain environment because Trump threatened 50% on EU tariffs. So, and we have this postponed until the 9th of July. So what happened from the 9th of July? Obviously, if a negotiation go through and something has been decided between the US and Europe, our baseline scenario go for 10% tariff. In that case, we have less uncertainty and think that we can finally shift from trade tensions to tailwinds from targeted public investment in defense and infrastructure.
We are going to take live pictures right now. Sabrina, bear with me, and thank you for your patience. We have the US Defense Secretary, Pete Hegseth, speaking live at NATO. Let's listen in if we can.
Nope. So glad you're here. Well, welcome to NATO.
It's great to be here. Thank you.
Why do you think it's important to
Okay, Pete Hegseth arriving at NATO's headquarters in The Hague. There is a meeting of NATO defence ministers today, and of course the focus is on that 5% defence target, which ties us to the story in Germany. It ties us to the economic outlook for the Eurozone as well. We'll bring back in Sabrina Kanish right now. In terms of the defence spend of Europe, when does that start to come through in a material way in terms of the impact on the growth trajectory for the Eurozone?
In terms of defence spending, this is not going to be very fast, especially given that fiscal multiplier tend to be lower. They want to increase defense spending, but if it is about purchasing or increasing defense capabilities, so the fiscal multiplier is lower compared to, let's say, targeted public investment towards infrastructure, where fiscal multiplier tends to be higher. But overall, when we take into account everything, so we have defense spending, but we have also infrastructure spending coming from Germany, which can be conducive to long-term growth, crowding in private investment in Germany, with ripple effect on the Eurozone.
Given that scenario, if we get that defence spend, the infrastructure spend, and if we get that 10% tariff rate, and again, we have to wait to find out what the outcome is come July. If we are in that scenario, are markets underpricing the odds of rate hikes from the ECB in 2026?
Indeed, because when you look currently, the market is mostly focusing on trade tensions, expecting maybe interest rate, the terminal rate being 1.5%. But if indeed we have a positive surprise on the trade front, which is key actually, so therefore the focus will shift from that to defense spending and the end of the easing cycle, so shifting from the terminal rate by the ECB to when the ECB is going to hike rate in 2026. And this is what we need to wait. We know that Germany came already with the three-pillar fiscal plan, but now there is the second leg with announcement of potentially corporate tax cuts, so supply-side reforms in order to support the economy and the manufacturing sector.
Okay. We maybe need to factor in the prospects of rate hikes from the ECB in 2026 as we look to today's cut, expected, of course, 25 basis points. And this could be the last cut for the ECB. That's the view from Sabrina Khanish, senior economist at Pictet Asset Management. Thank you. Now, the EU economy, meanwhile, Commissioner of the EU economy says there has been progress in those trade talks that Sabrina was saying are so consequential in terms of thinking about the ECB. There has been progress with Washington as negotiators race to prevent higher US levies taking effect on July the 9th. But Valdis Dombrovskis also told us the bloc will not hesitate to impose counter tariffs if there is no deal.
We do see a negative economic impact from the tariffs already imposed on the EU by US and also on uncertainty which those tariffs are creating, as we know that we are also not yet at the end of the negotiations. So correspondingly, we saw it as one of the factors slowing down European Union economic growth this year, and correspondingly we expect only EU economy to grow by 1.1% this year. So from European Union side, we are willing to find a mutually acceptable solution with United States as regards the tariffs, also to put an end to this uncertainty and to avoid further also global economic fragmentation.
If you guys cannot reach an agreement by this, at least the deadline that the U.S. has put on you for next month, have you prepared a package of retaliatory tariffs against the U.S.?
Well, as you know already, when the steel and aluminium tariffs were introduced by the Trump administration against the EU, we already prepared the first set of countermeasures, counter tariffs, but we also suspended these counter tariffs to give negotiations a chance. But we had reiterated that if we are not able to find mutually acceptable solution, we are ready also to put those counter tariffs in place as regards the first package, which was our response to steel and aluminium tariffs, but also a broader package, which is a response to already further tariffs which had been imposed on the EU. But right now we are still negotiating. Actually, exactly today, our Trade Commissioner Maroš Šefčovič is in negotiations with U.S. Trade Representative Mr. Greer, and they are making progress.
Commissioner, at the same time, China has announced an agreement to buy Airbus planes, potentially 300 of them. And I wonder how much, while trade negotiations are going on with the U.S., the European Union is moving forward with some sort of discussion with China about tightening ties there.
As regards China, it's worth noting that China is second largest EU trading partner after the US. So obviously for us it's very important to have our transatlantic relations, and including trade and investment relations, on track, but obviously also relations with China are important.
The EU Economy Commissioner speaking with Bloomberg's Romain Bostic and Lisa Abramovich. Now, the US president has signed an executive order banning foreign students from going to the US to study at Harvard. Donald Trump says the university has no discipline on campus and is to blame for a dramatic rise in crime. An earlier attempt to prevent students enrolling was rebuked in court. Separately, the US Education Department says Columbia University no longer appears to meet accreditation standards, accusing it of violating federal anti-discrimination laws. The Education Secretary says Columbia has acted with what she called, quote, deliberate indifference towards the harassment of Jewish students during a pro-Palestinian protest. Columbia says it is committed to combating anti-Semitism. Coming up, NATO is preparing a summit later this month that aims to ramp up defence budgets in a bid to appease US President Donald Trump. We're going to have the latest from Brussels. That is next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it.
Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate.
Putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
US Defence Secretary Pete Hegseth is urging NATO allies to commit to a defence spending target of 5%. Bloomberg's Andrea Palaciano is in Brussels. Andrea, tell us more about the summit, what to expect from this meeting of defence leaders at NATO.
So the incredible thing about the summit is that it actually looks like they will agree on 5%. And only months ago, when Pete Hegseth first came to Brussels and first delivered President Trump's message, it seemed impossible. Some countries only barely made it to 2%. So it is quite astonishing that they seem to have now agreed, that there seems to be political consensus to move indeed forward to a 5% spending target.
Why is it so important for allies to keep Trump? Is this about keeping Trump happy, or is it about actually realising that Russia continues to pose a threat to Europe?
It is a bit of both, but the 5% number is purely to keep Trump happy. This has been a core Trump demand, and the alliance has complied in a way because they know that they absolutely need Trump in it. They need Trump to be committed and a solid ally because NATO simply cannot function without the U.S. right now in its current setup because the U.S. simply brings more than half of the military capacity of the alliance. And so with a happy Trump, the alliance can continue functioning as it has, more or less. But if the U.S. is not 100% on board, then they simply cannot.
There's some lines suggesting that Zelensky of Ukraine may be involved, at least to some extent, when it comes to the leaders' meeting. Is that an important factor in terms of symbolism, having Zelensky on the ground?
Absolutely. Zelensky has been one of the major figures of all the previous summits. It hasn't always been smooth. He has sometimes expressed frustration at not being invited to join the alliance faster. But this year, his attendance is shaping up to be one of the main things to watch because Zelensky said he's been invited, but the Secretary General, Mark Rutte, won't say it straight to reporters. He seems to be biding for time and waiting to see whether Trump would indeed be happy to have Zelensky at the summit or not. And if he's not happy to have him, then I believe all parties involved will want to avoid a public scene. So it's still unclear who exactly will turn up.
Okay, so we'll watch for that part of the story as well, Ukraine's involvement in these meetings. Bloomberg's Andrea Palaciano in Brussels ahead, of course, of that NATO defence Ministers' meeting that is taking place right now. We've seen Pete Hegseth arriving, and then, of course, it's the leaders' meeting later in the month. There's plenty more coming up. Stay with us. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated.
We can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate.
Putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning. Fantastic.
It's just like our new house.
I hope you have an American Home Shield warranty. Leaky toilet? Fixed. Oven beyond repair? If AHS can't fix your covered item, then replace it, no matter its age.
Sign up today at ahs.com.
Sentiment has changed.
The whole tariff events have impacted mostly, I would say, the growth in the U.S.
Market forces, the so-called BOD vigilantes, have woken up those to the concern about the growing deficit in the United States.
They are starting to pause or slow down, at least, their allocations to the U.S. Bomb that people are watching is tax policies and potentially a tax war.
Right now, the big focus is on rates and the deficit, obviously, as the current administration is focusing on their big, beautiful bill.
And this is mainly the result of the global trade war, the risk of the tariffs, although not knowing exactly what the impact will be. But Europe certainly appears more attractive now.
And people are seeing Europe as a safe haven at the moment.
Okay, Europe is a safe haven, Europe sounding and looking more attractive. Some of the private capital investors there speaking to Kriti Gupta at Super Return, of course, about the opportunities in Europe, which leads us on to the picture around inflation. And the work has been done by the ECB. Take your mind back to 2023 when you had overall inflation in the Eurozone at close to 11%. We're now down to 1.9% on a headline level. That is why it's fully expected, almost fully expected, that you will get a 25 basis point cut to 2% from the ECB today. The question is what happens going forward, and that will depend on the trade negotiations, of course, with the US. Sabrina Kanish of Pictet Asset Management saying we might also want to think about ECB rate hikes in 2026. Again, dependent on those trade dynamics and whether or not the investment comes through on defense and infrastructure. Let's flip the board and have a look at the data overnight from the US. It was the services data that came in below expectations, but also the ADP private payrolls data. It was the weakest print that we've seen, 37,000 in about 2 years' time. You can see that there. So softness in terms of private payrolls, particularly focused on education, business services and health. This all leads up to non-farm payrolls, of course, on Friday. And that seems to be what the markets are waiting for right now, with the estimates looking at 126,000 in terms of jobs added in terms of the jobs print on Friday. That would be down from close to 180,000 the month before. Are we starting now to see cracks in that labour market? All right, we are live from Super Return in Berlin throughout the day, speaking to influential voices in private capital. So we'll continue those conversations. The opening trade is up next.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated.
We can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate.
Putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
This is a chessboard. It's a playing field where people test their skill, imagination, and daring. But a chessboard is also a math problem. The number of possible chess games is 10 to the 24th power, more than the number of atoms in the universe. The first computer program for playing chess was created in 1952 by AI pioneer Alan Turing. Less than 50 years later, a supercomputer beat the world chess champion. Because a chessboard is also a map, complex logistics and global supply chains can be reinvented with AI. Thanks to reliable and secure connectivity from AT&T Business, goods are delivered quickly and efficiently, with full visibility into manufacturing, warehouses, and transportation that lowers costs and improves sustainability. A chessboard is also a bridge, connecting generations, creating new friendships, and encouraging us all to be thoughtful about our next move. And the one after that.
Hey, did you find the manual?
Yes!
Summon Dale!
Who's Dale?
American Home Show now provides video chat with live repair experts for home fixes over the phone. Let's go fix that oven.
Okay, Dale.
Sign up today at ahs.com.
Good morning from London. I'm Anna Edwards alongside Tom McKenzie. We're an hour away from the opening trade. Here's what you need to know. Global bond markets take a disappointing Japanese debt auction in their stride. This after weak US data drove Treasury yields to a one-month low. Global equities tread water. The ECB is expected to lower rates today, but traders will be looking for clues on future cuts and the impact of trade turmoil on growth. And on Trump's agenda, the travel ban is back, with the president barring people from 12 countries from entering the US. Trump also warns Putin has indicated he'll retaliate for Ukraine's recent drone strikes.
Anna, the markets in something of a holding pattern this Thursday. Then European futures after 3 days of gains, 3 days of gains as well for US markets, currently pointing a little softer by 0.1%. We await, of course, that ECB rate decision, fully expected, almost fully expected to cut rates by 25 basis points. FTSE 100 futures also a little softer, pointing lower by 0.1%. As you mentioned, relative stability in the Treasury markets, despite the fact that that auction came in softer in terms of the demand than had been expected on average and versus estimates. The US benchmark 10-year currently at 4.36, largely unmoved as a result of that. Euro in focus, of course, leading up to the ECB decision. And what we hear from Christine Lagarde, 114 right now on the single currency, a little softer by 0.1%. The countdown to the opening trade starts right now.
Good morning, everybody. It is Thursday, the 5th of June. Welcome to the opening trade. I'm here with Tom Mackenzie this morning. Good morning, Tom.
Good morning.
Let's talk about the things we need to cover this morning. The big stories, setting the agenda. We'll come to the travel ban in a little while. Yep. We'll come to Trump's global agenda in a little while. But let's start off with all the things moving markets, or not moving markets, because as you commented there, just talking us through the data, we see calmness, really, in treasuries, in JGBs, crucially. And that is worth noting, because we had this weak auction, weakness defined as being the weakest since 2023, a 30-year long-end auction. There's been so much tension in that part of the market recently, and yet we don't see yields spiking. If anything, yields are still lower in Japan, and we didn't see treasuries picking up on that either. And I suppose that fits with the lower yields narrative that we've seen of late. US data yesterday kind of confirming that with its weakness.
To your point, how much of the moves that we're seeing in JGBs today are a reflection of the rally that we saw in treasuries yesterday on that weaker US data? Maybe as well expectations from the markets in Japan, those, of course, who are responsible for purchasing these longer dated bonds in Japan, that it could have been worse.
Yes.
But to your point, below estimates in terms of the bid to cover ratio, it's a broader narrative in terms of concerns about the longer dated story. When it comes to the bond markets, we know the BOJ is putting out feelers as well in terms of the markets. They may be rethinking their issuance at some time, and in a couple of weeks we're going to get the BOJ decision, of course, their latest rate decision, and this will no doubt come up in terms of a factor as the BOJ is scrutinised.
So avoiding disaster seems to be the way that that was described on the Markets Live blog. On that US data then, which is, as you say, pushing the bond markets in a similar direction to the comfort it has taken out of this Japanese story. Weakness in the ISM services, ADP, that private measure of job creation, also looking pretty weak. All of that pointing us towards non-farm payrolls. And, of course, today's big event in markets, the ECB, Tom.
The ECB, which is, again, expected, almost fully expected to cut by 25 basis points. Management on the show earlier, she was saying we should not underestimate the potential of interest rate hikes in 2026, contingent on a calming of trade tensions between Europe and the US and that defence and infrastructure spending coming through. That could lead to an environment next year where you get rate hikes. But the focus today, of course, is on a cut from the ECB and what Christine Lagarde has to say about the future picture. They skip in July.
Yes.
And then go again in September. There's a lot of uncertainty.
Absolutely. We'll have lots of conversations about the ECB. Let's park the market narrative for the moment and talk about some of the themes that are on President Trump's global agenda. We've got NATO defence ministers meeting. You already heard from Pete Hegseth in the last hour of programming. He's on the ground in Europe, ready to talk about 5% widely defined defence spending. Interesting that President Trump overnight has been talking about his conversation. He had a 1-hour conversation, more than, with President Putin, and he says that Putin is indicating that he is going to need to respond to Ukraine's what were widely discussed and described as very successful, kind of audacious attacks by Ukraine deep into Russia over the weekend. So those are some of the things that are on his agenda. He's also, I suppose, struggling to get to the art of the deal when it comes to Putin and peace, when it comes to Iran and uranium enrichment, when it comes to China. No call with the Chinese. We haven't had any indication from China that
from President Trump himself following that phone call. We know there is a package of sanctions, bone-crushing sanctions, ready in the Senate, ready to go. But again, a reminder that President Trump, it seems, is very reluctant to pull the trigger on additional sanctions on Russia, even as they threaten further military action in Ukraine.
And talking of military action, we have some of these arrival pictures coming too, as Mark Rutte at NATO then, in Brussels, NATO headquarters. It's defence ministers gathering today to discuss this 5% defence defence spending targets. Later in the month, of course, it will be world leaders. So defence on our agenda, Trump's agenda dominated by some of these global geopolitical conversations. Better news for President Trump, though, perhaps, and his trade agenda in some of the mood music coming out of that Europe-US conversation that took place in Paris yesterday. Some of the lines coming through from that, some of the quotes from Šefčovič and Greer, using words like pleased, advancing quickly, moving in the right direction. I mean, all of that sounds a world away from some of the commentary we've had from the Trump administration around their conversations with Europe.
They have reflected frustration, haven't they? Up until yesterday, when Jamie Greer, and that is important, Jamie Greer, actually, from the US side, suggesting that there has been that material progress. We continue to watch that, of course. And then President Trump reheating a former deeply controversial policy, of course, from his first term in office, which is this travel ban on people coming from, 12, 13 different nations. This apparently in response to the anti-Semitic attacks in Boulder, Colorado, from a gentleman, that's the accusation at least, the man accused and arrested previously from Egypt. Egypt is not on the list, but this is a Trump policy response, it seems, to concerns about crime, particularly anti-Semitic attacks. But it's broad-based, and it may well be challenged again in the courts. Yeah, absolutely. It could face legal challenge, but worth reflecting. This is a bit different to what he introduced back in 2017 or so in his first term, but it has a huge amount of similarity with that. That was also challenged in the courts on a number of fronts, and eventually the Supreme Court did give its okay to that policy to remain in place, adjusted. But no doubt the administration has learned a lot from the first time that they tried to do this. So there are some exemptions. It does very much echo the first term. We will watch to see how this one develops. So those are some of the big, broad, macro picture items on our agenda this morning. Let's move on to the earnings conversations, though, because we've just had numbers through from Wizz Air in the travel sector here in Europe. We've had net income numbers for the full year coming in well above estimates, €225.8 million. So that looks positive when we're looking back at the year ending March. But the company's saying they're not giving 2026 guidance given the lack of visibility. And they find they have something in common with lots of businesses around the world, no doubt. But let's talk to the CEO of Wizz Air, József Váradi, who joins us now around the desk. József, very nice to speak to you. Thank you for coming in. So talk to us about a lack of visibility, not giving any guidance for 2026. That's not to do with President Trump's tariffs in your case. So what is that? Why are you not able to give any guidance?
It is just a very volatile world around us in terms of geopolitics, in terms of supply chain, and simply we are just lacking the visibility we need to guide the market. I think we have a pretty good grasp over the short term, how summer is building up, and we are actually very positive. There have been commentaries around demand in the airline industry. We're seeing demand is very intact. People want to fly, they are booking, they are buying tickets, so I feel very good about that. But you see the dollar, you see fuel, you see this whole looming tariff issue, you see continuous issues with supplying aircraft engines to the market. So simply this is just creating a level of volatility that we decided not to guide at the moment. But of course, we are going to hint what we are seeing, what we can expect, etc. to the market.
Okay, but you can't hint today.
I cannot hint today. The only thing I can say today is that with regard to the short term, the next 3 to 4 months, we feel very good about demand. I think we understand costs coming to the business. We are largely hedged on macro, so I think we have eliminated the volatilities ourselves. But we don't know what's going to happen in 6 months or 9 months from now. I mean, the world is just changing so fast.
9 hours, perhaps, some days, feels like.
Hours.
So you're feeling pretty confident about the summer season. What does that mean for fares and pricing?
Yeah. So we are looking at demand from 2 angles. Our ability to fill the aircraft, and we are up versus last year in terms of booked load factor, 1 or 2 percentage points. So that's very good. And secondly, we are looking at the fares, whether we are able to charge for the inflationary pressure, and we are seeing an uplift on fares, a few percentage points again. So all in, it's not just holding demand, but actually we are improving the quality of demand from our perspective in terms of achieving higher unit revenue than what we achieved last year.
You touched on the tariff impact. What is the tariff impact? Just quantify that for us, given that you, of course, pull your engines in from Pratt & Whitney, which is a US-based company.
Well, first, I think we would need to define what tariff is and how that applies in this industry. It has been, going back and forth. There are negotiations between the EU and the United States, incomplete yet. So I think we need to see the outcome of those negotiations. Wizz Air has a legal setting through a number of legal entities falling into different jurisdictions. So we have an entity in the United Kingdom, which I think is looking good vis-à-vis US tariffs. We have an entity in the European Union. We don't know whether we do good or bad. So I think we will see what exactly tariff will mean in the industry and to us specifically. And we're going to decide how we're going to move ourselves in terms of jurisdictional approach for those issues. We think we are actually okay, to be honest. We don't think that we're going to be hugely affected by tariffs, unlike many of our competitors.
So you see ways of defining the geographic location of your deals or placing aircraft in certain geographies that essentially will allow you to minimise tariff impact?
I think so, for so long as we fully understand what's coming.
OK, and what would your message be to those tariff negotiators, to Maroš Šefčovič, as he goes into those rooms with Jameson Greer and tries to make progress on the trade agenda?
I'm an economist. Lesson number one in economics is global trading, comparative advantages, etc. You cannot step beyond that kind of a theory. I think you have to let global trade work out based on its own logic. Tariff is a distortion, so I don't think that this is going to have. Now, obviously, you may want to protect your own economy, but you have to be very smart about it because you are dependent and you are interdependent.
Back to the Pratt & Whitney engine issues, because of course they forced you to ground a number of planes. You previously said you expect that issue to be resolved by early 2027. Is that still your expectation?
I think we're going to see a significant improvement in terms of affection to the business in 2027. Whether this is going to get resolved early 27 or late 27, I don't know. I think this is something to be seen. Forecast remains quite unpredictable yet, a little better than before, but I think 2027 is going to be the big turning year.
And what about the summer? How do groundings look like? Have you got certainty around what the summer looks like from the supply side, from the amount of seats you're able to put into the market?
So last summer we had roughly around 45 aircraft grounded. This summer we are expecting around 35 aircraft to be grounded. But to be honest, this is not because necessarily Pratt & Whitney was doing such a great job for recovering the aircraft, but it is also because we invested a lot of capital into spare engines to make sure that we don't get overly subjected to the grounding. So all in, I think all parties make significant efforts to fly the fleet, but until 2027, this issue will stay with us.
That's supposed to be so demoralising and frustrating to see 35 aircraft parked up, not able to fly because of this issue.
It is demoralising, but I'm not in an emotional business. I'm in the business of running an airline.
Are you seeing Airbus delivery delays?
Some, but Airbus is doing a reasonable job relative to the rest of the industry. I think we are very happy with the way we are managing our Airbus relationship. There are issues, but I think we have ways of addressing those issues.
Yeah, one of the delays was with the XLR jet. Where do you, just briefly, Joseph, where do you see opportunity to expand use of that kind of jet? Middle East, parts of Asia, where?
I think the XLR delivery delay was a one-off specific problem, which I think Airbus has come to grips with by now. So I'm actually quite relaxed about that issue. But with regard to the expansion of the XLR fleet, we're seeing that the Middle East is certainly a market, and India.
Not from the United Kingdom, unfortunately, because we wouldn't be able to reach from the United Kingdom, but from Central Europe, like countries Poland, Hungary, Italy, Austria, etc., would be prime candidates for flying to India.
OK, Joseph, thank you so much. Thank you for joining us. Joseph Ferradi, the CEO of Wizz Air.
Let's bring you some breaking news right now when it comes to the London Stock Exchange, and this is another significant blow. This is Wise. This is the money transfer business, formerly TransferWise, but now known as Wise. The board has concluded that they will be moving and transferring their primary listing from the LSE to the US. So another move from the London Stock Exchange to the US. The board has done a review into this. It intends to keep a secondary listing on the LSE. The transfer of primary listing is expected to expand the pool of investors and increase trading liquidity. The stock in its lifetime, having listed in 2021, Anna, is up about just a mere 20% since 2021. But this had been and remained a flagship tech listing on the London Stock Exchange. Henrik Tarvikas and others who founded this business, formerly founders of Skype, very successful in terms of the growth that they've seen, but not being rewarded, it seems, the view from the board, properly in terms of the listing here in the UK.
This is an £11 billion market cap company then deciding that its interests are better served by a listing in the United States, perhaps concluding that their sector is better valued in the United States. There'll be lots of views on that. Really, another blow, as you say, to London, where we've seen companies from lots of different sectors, whether that's packaging and or whether it's gambling businesses, all kinds of different sectors deciding that they will get a better valuation if they go to the United States. And it's often a question we ask tech businesses, tech startups in the UK, isn't it? Because, you know, if they feel they're going to get a better valuation, their business model will be better understood in the United States. That's the temptation.
The signalling it sends is really damaging as well, because there will be other executives and other founders looking at this very closely and possibly reassessing their plans, despite what the LSE will say they have done to try and encourage these kind of companies to list here.
Coming up on the programme, Chrissy is not here, but she is still with us during the programme. She is in Berlin for us at the private capital forum that is called Super Return. She was there yesterday. She'll be there again today. She'll be speaking to a host of industry leaders over the next few hours. Plus, NATO defence ministers arrive in Brussels. We've already heard from Pete Hegseth pushing that 5% target as the alliance looks to push peace talks forward, despite warning possible further Russian attacks. That warning coming from President Trump, talking about his conversation he's had with President Putin. Up next, we'll look ahead to the ECB. Christine Lagarde is expected to lower rates today, but markets are looking at what the rate setters see happening in the future in July, September and onwards. If you have questions for our guests, please get involved in these conversations around this desk. IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated.
We can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate.
Putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning. Fantastic.
Ooh, fun.
Yikes. The leaky refrigerator coil card. Is that bad? Oh, death! Death? Of an AC fan motor. Oh, no. But your future is bright with an American Home Shield warranty to protect your covered appliances and home systems. Are there bees behind me?
My bees escaped.
Bill, we talked about this.
American Home Shield. Don't worry, bee warranty.
Catch WOW Women of Wrestling on the WOW Women of Wrestling channel on Pluto TV. Stream now, pay never.
Welcome back. Joining us now, Luigi Speranza, Global Head of Markets 360 and Chief Economist at BNP Paribas. Very nice to speak to you, Luigi. And great to have you here because we're looking ahead to non-farm payrolls tomorrow. We're looking ahead to the ECB today. And in the meantime, markets are sort of flat to negative, treading water a little bit. Will we hear anything, do you think, from Christine Lagarde and co later that will sort of ignite market spirits?
Well, I think the last thing the ECB will want to do today is surprise the markets in any way.
So no.
No, that's the answer. I mean, there was an interesting line in the account of the last meeting where some members suggested we should be a beacon of stability in view of the turbulence that we have in the markets. So I think I'll be very surprised of a surprise. So I think it will be a 25 basis point cut. The background here is a downward revision to growth and inflation forecast, which justifies the move. And in terms of message, I think there will be a lot of full optionality, agility, and this is justified uncertainty in terms of policy, but also I think where rates are, like 2% is really in the middle of the range of neutral. So policy is not any longer restrictive, which justifies even more caution when it comes to the message going forward against, a background of kind of high policy uncertainty.
There is all that uncertainty. Is there still uncertainty about the inflation dynamics of the Eurozone? 1.9% on a headline level. Can they pop the champagne corks at this point in terms of the inflation story that they have conquered?
I think they will be kind of quite reassured by the data. It's not just a 1.9%, but I think there is a kind of sense that the disinflationary story is well established now. And I think we might go a bit lower than 2%, justifying some more easing. We have another cut in September in our scenario, so a skip in July to reflect this uncertainty, and then a cut more because the disinflation impact will continue to play out. But, if I look at the medium term, there are also upside elements. Clearly, the fiscal stance in the Eurozone is likely to get a bit more supportive.
Yeah. Luigi, what kind of assumptions do you make around the level of tariffs we're going to land on with the US? And I ask this because we've heard some seemingly comforting language around the amount of money that the Trump administration wants to raise from tariff revenue. And I mean comforting for bond markets, because bond markets have been nervous about the fiscal situation in the US, and so they find comfort in the fact he wants to raise a lot of revenue. But if he wants to raise a lot of revenue, does that mean higher tariffs on Europe?
Yeah. So look, we can have a working assumption here, and the working assumption for us is we get to some 10% baseline, effectively against most countries the US trades with, and some higher tariffs in some specific sectors, which means for the US, you started from there, a 15% effective tariff rate, which implies probably revenues around $3 trillion over 10 years, which is not far away from what the Office of the Budget kind of calculating. So that's true. 10%, what it means for Europe? Well, first of all, let me say, whatever number we end up with, the key element in the short term is uncertainty. That is anyway, even with tariffs at zero eventually. 10% means some drag on growth, but nothing dramatic. And again, I think will be over time more than offset by a fiscal policy response.
That's the optimistic outlook on tariffs. If we get to, if the deal breaks down and we face Trump wrath and 50% tariffs by July, do ECB cuts and stimulus from Germany offset that pressure?
I think the ECB will have to go farther than we assume, because again, I have another cut in this scenario because of relatively benign assumptions of where we land up with tariff rates. So I would say the risks in the short term with a 50% tariff rate will be for the ECB to go farther lower to respond. Why? Because in the short term, I think this is disinflationary. I think that's the key point for Europe. For the US, of course, is a boost to prices, and I think also inflation in the medium term, but that's another story.
Okay.
For the Eurozone, I think it's disinflationary, so the ECB will be able to respond.
And how does the euro and the strength of the euro factor into your thinking, Luigi?
Yeah, so I think this is a bit of a different story in a sense that the narrative for me has been a rotation away from US assets. And I think this will continue to get more legs, and the euro is likely to be one of the main beneficiaries of this narrative, and we see it going higher nonetheless to 118 is our target for the euro dollar. What's the story? Well, one point is on the macro side, the US economic performance is less exceptional. There is a reduced gap compared to the past. Policy uncertainty is another key element. And also, we mentioned already, the policy of the US administration unleashed a response, kind of fiscal policy in Europe, which will not reverse. So this is a kind of the silver lining. On a more technical basis, I think what we see from data is that Eurozone investors are overweight US assets and under-hedged, and this, I think, favor, again, this rotation, in particular, the impact on the currency. So stronger currency, which, again, backs the idea of contain inflation in the short term, allowing ECB further scope for cuts in the
Okay, and 118 on euro dollar would help in terms of inflation story as well, arguably in terms of the import of energy. 114 right now in the single currency. 118 is your target on that outflow still out of the US into European markets, despite the cuts that you forecast from the ECB today and then in September. Luigi, thank you very much indeed. As we lead up, of course, to that ECB decision later today, Luigi Speranza, Global Head of Markets 360 and Chief Economist at BNP Paribas.
Coming up on the programme, a renewed interest in Europe has become a dominant theme at this year's Super Return Private Capital Conference. We heard a lot about that yesterday from the conversations that Kriti was having on the ground. More of that to come. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it.
Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning.
Fantastic. This is the opening trade. Welcome back, everybody. 30 minutes until the opening trade here in Europe. So the futures picture looks like this. A little bit of downside, perhaps, at the start of the European trading day. Down by, well, uniformly, 0.1%. And US futures also pointing a little bit lower. Nothing dramatic, but we're waiting for a lot of things. Waiting for the ECB today. Waiting for, perhaps, some fireworks at the White House later as we see the German Chancellor visiting President Trump. So global trade will no doubt be in the conversation. And we're waiting for non-farm payrolls tomorrow. Onto the bond markets, and again there we see a little bit more calmness than perhaps of late. Yesterday we saw buying of bonds in the United States, and that theme, Tom, seems to have gone a little bit global. We see a bit more of that in Europe this morning, and we saw some of that through the Asia session, driven by weaker data out of the US, and sort of putting to one side any difficulty in selling long-dated Japanese debt, which had up to now been a preoccupation in Japanese markets.
Yeah, and you talked just briefly about Germany as well, and the fiscal stimulus from Germany and the expectations. We've been discussing about ECB and the potential rate cuts as well. Two catalysts, arguably, to bring money into and continue money flows into the European markets. Money managers are showing renewed interest then in Europe as a destination for investment, with many seeing some of the changes in terms of the region as an area of relative economic stability compared to the US, at least for now. Let's take you live to Berlin and join Bloomberg's Kriti Gupta for day 2 of the Super Return Conference in Berlin. Kriti.
Tom, you nailed it. That's exactly what the sentiment is here. This idea that Europe's moment in the sun is not just in the public markets, it's very much in the private markets as well. And there are two key factors to that. Simply the idea that you are having this massive fiscal spend from Germany specifically, kind of moving the economic engine out of those stagflationary fears we had in this region, but also a reaction function to what you're seeing over in the States, and perhaps the instability that you've seen rock the markets emanating out of policy coming out of Washington. Those are two key themes that are affecting in terms of things like deal flow, affecting conversations, affecting even pressures from LPs into the private markets and how you actually source deals. So that has been a key theme that we've seen in the public markets, showing up in the private markets, and then kind of delaying, by the way, the increase, or I should say the IPOing story when it comes to the capital markets as well. So it's twofold. There's some optimism in Europe, but a little bit of cautious optimism if we can. That story gets a little bit more nuanced when we go sector by sector. And Tom, I know that you are very much into the technology beat, so I got the perfect guest for you specifically to talk about this in terms of how the private markets are playing perhaps the AI space and technology broadly. I'm joined here in Berlin by Rachel Arnold. She, of course, is at Vista Equity Partners, specializes in software investing, specifically when it comes to the lens of the private markets. Rachel, a pleasure to have you.
Thank you for having me.
Of course, we're thrilled to have you. We're thrilled to I'm thrilled to nerd out a little bit here with you, because I think we talk so much about these private markets, maybe taking the tone from the public markets a little bit. So if we're seeing instability, if we're seeing volatility in the stock market, in the S&P 500, or even any other equity market around the world, how maybe secure or insulated are the private markets from that? And I think you're the perfect guest to talk about how that shows up in the tech space.
I appreciate that. Obviously volatility affects all businesses around the globe, and I think we were all thrilled to see the public markets start to stabilize a bit this past May. That said, the private markets have really normalized over the past 24 months. I think as we came out of the post-COVID period, we saw a really strong return to fundamentals, a focus on quality, and a focus on, at the end of the day, a new growth playbook. The businesses that we focus on, enterprise software companies primarily based in North America, really have kind of catalyzed around this idea of how does growth become sustainable through things like generative AI, classic operating practices, and then a return to profitability. And so I think you're seeing that reflected in both the deal flow as well as the valuations on the private side.
Talk to us about that deal flow, though. How much appetite is there right now? I feel like the AI momentum story has been certainly one that's shown up for quite some time. Is there still seeing that same excitement, that same optimism?
Absolutely. There's never been a better time to be an enterprise software investor, candidly. And I think AI is actually one of the strongest growth drivers we've seen in the history of enterprise software. With AI, we're seeing an incredible increase in productivity. And so when an organization buys an enterprise software product, on average, they get a 650% return on that investment before AI. And what we're now excited to see is, does the improvements from a productivity standpoint, are they incremental or are they exponential? We have a handful of companies in our portfolio that are leading the pack on this front, and I'm excited to say that actually not only are we seeing more of those exponential productivity impacts, we're seeing incredibly increased market opportunity for those businesses themselves.
How does that affect, perhaps, I mean, I know you operate in the small cap space specifically, but when you're thinking about the deal-making pipeline, when you're thinking about the capital markets, perhaps having a delayed opening or a delayed kind of return to their former glory, for lack of a better term, how does that affect the small cap space specifically?
Yeah, you know, what's great about the small cap space, so these are companies under 50 million in ARR. There's over 90,000 of them worldwide. And what's great about this part of the market is that companies that raised money in 2019 to 2021 are generally starting to look at the end of their cash runway. And so not only is there a distinct capital need, they also have conserved cash to wait for those valuations to come back, which means that their growth rates have been more muted more recently. Now, so for investors like us that care about capital efficiency, that really are thinking about the fundamentals of the businesses, we're able to partner with these founders in a really unique fashion that candidly, at the height of COVID and during the market run-up, there was a little bit more attention paid to these companies than there is now. And so it's creating just some really incredible investment opportunities. Actually, our deal flow is up, and I am excited to see kind of that play out through the rest of this year and next.
How do valuations factor into that? And again, I'm thinking of this from a very public market kind of standpoint here, where I think a lot of investors are looking around the world and they're saying, well, okay, Europe is looking kind of hot right now, and maybe technology requires a little bit more of diversification. You're talking about exposure in the United States in a place that is kind of the buzzword in technology right now, which is AI. Yeah. Does that mean higher valuations?
You know, for enterprise software specifically, I would say we've seen a normalization, and it hasn't actually gone up dramatically based on AI itself. I do think AI native businesses, so businesses that are built with AI technology underlying and or have products that are very AI forward, are getting top of the market, almost market run-up level valuations. I think we've seen that in some of the deals noted most recently, but I also think it's early. We haven't had a significant number of proof points yet, and so we're excited to see how that plays out as we get more companies bringing these products to market and as they're getting financing.
So talk to us a little bit about where the private markets kind of maybe bridge the gap in terms of things like financing, but also equity raising as well, when it comes to actually maybe accelerating the adoption of some of these new kind of enterprise software products as well.
Yeah, absolutely. So most of the innovation is happening on the private market side. So when you think about 100,000 software companies globally, you know, 96% are private and 90% are under the 50 million ARR mark. And so it's a very large pool. I will say that the partnerships with the Anthropics, the Microsofts of the world are really the ways that these companies are starting to think about innovating and building the next generation of their solutions. That's actually something that we've really leaned on, are those types of partnerships to fuel that innovation. You know, as it relates to how that translates into new products and longer term, the valuations, I think it's early, but again, very promising from an outlook standpoint.
Are you seeing any sort of pressure in terms of not only speaking to LPs at the conference perhaps, but also just in terms of being an American company operating in California and in this kind of very niche and frankly innovative sector at a time when perhaps momentum is shifting abroad? Are you getting that sense here in Berlin?
You know, I haven't had quite that level of kind of feedback from our investors here in Berlin. I think that it is more muted, I think, in terms of tone, just given some of the geopolitical uncertainty. That said, I think there is a lot of excitement around AI globally. And I think there's more of a focus on that innovation than there is necessarily the geographic kind of focus of the businesses. And most businesses, from a software perspective, are developed in the United States. And so I'm seeing European investors still be very excited about the opportunity to invest.
And who are you speaking to in terms of getting that kind of opportunity? Is it international investors still flocking to a small cap space when perhaps the large caps are a little tapped out?
Yeah, you know, I think investors have always been very excited about the small cap opportunity, just given the volume and given the opportunity set broadly. Right now, I think that also because there are so few institutional investors that are really understanding AI and are able to tap into it, it's creating a unique opportunity for those that lean in, which is where I think we're having a lot of conversations this week.
It's a fascinating one, and certainly one where we kind of see a little A little bit of those dots connected. Rachel Arnold, a pleasure to have you here.
Thank you for having me.
And of course, joining me right here in Berlin, Anna, Tom, I'll throw it right back to you. We just had a fascinating conversation with Rachel Arnold. We talk so much day in, day out about those lofty valuations in the public markets, in the tech sector. It turns out that's not really stemming some of the innovation you're seeing in the small caps and in the private markets either.
Okay, great conversation, great interview. Bloomberg's Kriti Gupta on the ground for us at this Super Return Conference in Berlin, talking, of course, about the public and private markets, which ties us in to a topic that we're going to delve into in the next couple of minutes. This is some breaking news about 30 minutes ago or so. FinTech, Wise, planning to shift its main listing from London to the US. We're going to break down the impact in today's Stocks to Watch. This is a major blow for the LSE. Coming up, this is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
The future of trading is here on Robinhood. Purpose-built for how you trade. With new ways to execute your strategies. And analyze, buy, and sell. Seamlessly trade stocks, options, crypto, and futures. In one place.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated.
We can do it.
Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
Putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
Ooh, fun.
Yikes. The leaky refrigerator coil card.
Is that bad?
Oh, death!
Death?
Of an AC fan motor.
Oh no.
But your future is bright with an American Home Shield warranty to protect your covered appliances and home systems. Are there bees behind me?
My bees escaped.
Bill, we talked about this. American Home Shield. Don't worry, bee warranty. Welcome to Australia. Watch out!
NCIS Sydney. All episodes now streaming on Paramount Plus.
Welcome back to the opening trade. We have one eye on Brussels today because defence ministers are gathering there for a NATO defence ministers meeting. We are looking at pictures of Boris Pistorius, the German defence minister. He's been talking about the size of the German army. The German army needs 50 to 60,000 additional soldiers. He's been telling journalists this morning as he heads in to that gathering in Brussels, Tom.
And defence spending may not be immediately on the agenda for the ECB, but it will likely be in 2026. The ECB today, of course, set to lower interest rates for an 8th time as President Donald Trump's jolts to global trade lower the outlook for growth and inflation. Our very own Lizzie Burden is on the ground in Frankfurt with a preview of that decision and what we can expect to hear from Christine Lagarde. Lizzie, where is your focus going to be today?
Well, I have to say it's not so much on the cut itself today that is very widely expected. I'd eat my hat if they don't cut by a quarter point today because, of course, the inflation backdrop is that it's down below the 2% target now at 1.9%. It fell in the month of May and Tuesday's data on not just the headline level but the core and services levels as well because you've got lower energy prices and a stronger euro against the dollar in the aftermath of President Donald Trump's so-called Liberation Day. So the focus today will be on the forecasts updated for inflation and growth, but also the range of scenarios that they're going to set out because there is just so much uncertainty. First of all, in the short term on the tariff front, we just don't know whether the US is going to raise tariffs on the EU from 10 to 50% at that July 9th deadline and how the EU is going to retaliate. We've got, of course, the German Chancellor Friedrich Merz at the White House today. We don't know as well how much China is going to dump cheap goods on the euro area. And in the meantime, all of the uncertainty just putting a brake on investment and growth here. But then in the longer term, we just don't know what the economic impact is going to be, as you say, of all of that defence spending, the infrastructure spending as well, because we just don't have concrete detail of the fiscal stimulus. So we'll look ahead to the NATO summit as well. But all of that hopefully going to be set out in the scenarios as much as possible. A very difficult time for anyone predicting the future at the ECB.
Yes, and so walk us through the debate then about the next cut. We've already spoken to Luigi Speranza this morning, Lizzie, whose view in the short term at least kind of in line with the markets about how many cuts we get for the remainder of this year.
Yes, so the big focus is on the July meeting, and by then you'll have 2 more inflation reports, 2 more PMI reports, a German budget for 2025, an outline budget for 2026, and of course we'll have passed that all-important 90-day tariff deadline. And so the question is, do they go again in July or do they wait the summer and go in September? Most economists think that they will actually pause till September, but the argument against that is that it creates a communications challenge, that you could confuse the market into thinking that the cuts are done and that it isn't just a pause. And, you know, the ECB itself has said that they don't want to be adding unnecessary surprises to an already volatile market. They want to be a beacon of stability. But look, the argument for waiting and seeing is that if you look at the consumer inflation expectations for the year ahead, it's 3.1%, and that's the highest since last February. So it may be that the ECB actually wants to wait and then turn to hiking rates. I really think in the press conference today, Christine Lagarde's going to want to keep her cards close to her chest when she's asked whether they go again in July. And the other question, Anna, that's I'm sure going to come up is Christine Lagarde herself going to stay as president of the ECB? Because they haven't denied the speculation that she's going to next be the leader of the World Economic Forum, because if you look at the data, at least she can say that she has tamed inflation.
Lizzie, thank you very much. Yeah, no doubt the future of Christine Lagarde's career will get some attention. Lizzie Burden at the ECB, of course, for us throughout the day. More from Lizzie later on in programming. Joining us now with his view on the markets, Bloomberg Markets Live cross-asset strategist Ven Ram. Ven, a lot to talk about this morning. Let's start with the ECB. Lizzie was setting us up there with our expectations. The future of Christine Lagarde, a cut in prospect in today's meeting, it would seem. What are you going to be focused on from inflation successes to growth challenges?
Morning, Anna. As Lizzie was mentioning, I think a cut is almost a given. There was only one kind of dissent going into from what we have heard from recent speakers in recent days. But I think that, the cut is a given, but the question is what happens beyond today. I think that the ECB, considering that the trade talks with the US are still ongoing and there is the uncertainty that the US may bring back tariffs, it is possible that the ECB will want to keep its ammunition dry for another day, which means that they will want to signal that there's going to be a pause in rate cuts going forward. I think that, many people on the Governing Council already think that 2% is the nominal neutral rate, and we will be approaching that this afternoon. So the question is, how are they going to communicate that? It's going to come down to the language of the statement. I think that they have previously indicated that they are going into a data-dependent and meeting by meeting approach, and I think they are going to tweak that language or introduce new language to suggest that they are going to be on hold after today's cut. I think possibly the next cut could come in as late as in September. So I think that, you know, if you look at German front-end bonds, they are fully priced for this outcome. So any kind of revisions to the macroeconomic forecasts that are not as dovish as the market thinks may put some pressure on front-end German bonds.
Okay, so watch front-end German bonds and scrutinise the statement and the language there. Talking of bonds, you've been doing a deep dive into some of the mechanics and the history of the Treasury market and what it tells us about opportunities now then. There's been this favoured trade, the steepener trade, where you pile into the front end and you steer clear of the long end. Is that the right place to be? What does your analysis show where, in terms of where to sit along that Treasury curve?
So, Tom, what we did was we looked at the, how bond market returns have fared after major spikes in volatility. So we went back in data like 2 decades. And so we looked at various thresholds of spike in volatility, i.e. the MOVE index, and measured the returns on bonds, various segments of the bond treasury curve, exactly 1 year after those spikes in volatility, based on some predefined thresholds on the MOVE index. Now, what we found was a bit of a surprise. What we found was that the front end didn't do really well, which is not what you would expect really, because you know, when there is a spike in volatility, it usually accompanies some distress in the economy, and that is the time when the Fed comes out and says, you know what, we need to accommodate the weakness in the economy, we will cut rates. So you would expect the front end to do well in that scenario, but that's not what we saw in the analysis. Another key finding in the analysis was that the 7 to 20 year segment of the markets do the best in the long term.
Okay, so maybe target the 7 to 20 year part of the Treasury market in this environment. Bloomberg Markets Live's Venn Ram with the analysis. Thank you. You can remember you can get further analysis from Venn and the rest of the team by going to MLiveGo on your terminal. Let's get your stocks to watch now. Joe Easton from our equities team standing by with a focus on Wise. Joe.
Morning, Tom. So Wise is the main UK stock with earnings out today. So we have got actually pretty much better than expected results from the company. This is the company behind TransferWise, the payments firm. But the big news today is that they are potentially actually going to be relisting to the US, so switching that share listing over to New York potentially.
That is a very good strategical maneuver. Congratulations.
The ECB cut interest rates by 25 basis points, expecting trade uncertainty to weigh on business, investment, and exports in the short term. It's the 8th time in a year that the central bank has lowered rates. ECB President Christine Lagarde is speaking momentarily. We'll bring you those remarks live. Meanwhile, President Trump says Vladimir Putin has warned him that Moscow plans to retaliate against Ukraine following recent drone strikes deep inside Russian territory. Trump and Putin spoke for over an hour on Wednesday as U.S. efforts to broker a peace deal show signs of stalling. The two leaders also discussed Putin's potential role in ongoing U.S. nuclear negotiations with Iran. And the NBA Finals tip off tonight between the Indiana Pacers and the Oklahoma City Thunder. For top-ranked Oklahoma City, it's their first trip to the finals since 2012. They're the heavy favorites over the Indiana Pacers, who returned for the first time in 25 years. Both teams have gone 12-4 so far in the playoffs. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Up next, setting you up for the day ahead. And, of course, ECB President Christine Lagarde's press conference. Don't miss that. This is Bloomberg Surveillance.
The top names in business are on Bloomberg.
The real direction of attention is around trade, tariffs, taxes, and deregulation. If a lot of this can get resolved.
Volatility is going to be here for some time. It's whether the volatility is accompanied by whiplash behavior.
It's difficult to land on a transaction and present it to the market in a period of maximum uncertainty.
We have some of the best companies. They can do hard things, but they need to know what the parameters are in which they're working. Investors are looking at how do I reposition geographically some of my assets and take advantage of other countries in the world that are ripe for more growth.
I see us moving from what was hyper-exceptionalism to merely exceptional. I don't think there are good alternatives to the U.S. today.
There's not a plausible scenario where the U.S. still won't be a very attractive place for capital.
Nobody covers business like Bloomberg.
The flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that not enough guardrails may be set up just yet. Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
It's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only